interest rates have become the lowest they've ever been, and risky asset prices have spiked higher than they've ever been. Okay, at the same time, the government starts to give away free money. It's never really done that before consistently, right? And unemployment has spiked higher than it's ever been in the history of this country, okay, since records have been keeping. So all of these all-time high bad news events, okay, and all-time high remedial events are happening. And at the same time, the stock market is flying up, okay? The reason is not because stocks are doing better, because the prices are going up, which makes the stocks more expensive, but their earnings potential are going down because of slower economic activity. You've had, horrible GDP growth. The GDP has dropped more in the last quarter than it has in the history of this country again. Okay, so all bad news, but the stock market's going up, which creates a super expensive stock market. So when the stock market goes up that way, earnings potential goes on that way, and unemployment goes down, and the economic activity goes down, you have a guaranteed crash that's going to happen. If that crash doesn't happen, then the stock market limps along until economic activity reaches stock prices 10, 15 years into the future. Look at Japan, where they had a lost decade, but that lost decade has lasted about 30 years. So with all these moving parts going forward, these predictions are like the 2008 crash on steroids. And I say predictions because you say predictions, but I like to use the word observations, right? These unbiased empirical observations show basically a depression coming. And this depression is not just in the US, but this is worldwide. The UK, which has a new spike, has, again, a record drop in GDP that it's never experienced before, including World War II and World War I. You have the EU, 16 nations, again, who have a world record all-time high drop in GDP. You have the Asian nations, Japan, same thing, China, same thing, Korea, India. So the whole world is in a big mess. And on top of that, the US is in a particular position because it is the strongest economy. It has a reserve currency, which means it can abuse its currency and get away with it because everybody needs this currency to do global business. Okay, but it has the largest military and the most political influence, even though that's in question right now with the current administration, who I think has done a horrible job, but that's a different discussion. When you take a look at all this, the primary factor in getting past this, the first step, is to get the virus under control, which the US is, of all developed nations, have done the worst. The reason is because the US is mired in politics and political struggle. So instead of taking a scientific method of eliminating the virus, they took a political method. And the virus and the issue of the virus and how to contain it and treat it has become a political football. Okay? The danger is the virus doesn't care at all what political party you belong to, whether you're left or right, conservative or liberal. An infection is an infection. That game has set the US back significantly. Okay, so where the US could have probably gained an extra 4 or 5 GDP points, instead it's playing political football and is setting the nation back, particularly small and medium-sized businesses, which suffer the most because they don't have the capital last like big businesses do. And considering that big businesses have the capital last, a lot of them are dropping like flies because at the same time you have this COVID economic shutdown, you have a sea change in the way business is done. Now, most business actually is now done over the internet virtually, which means a lot of brick and mortar stores and a lot of companies that put large investments in retail spaces can deal. As a matter of fact, even without COVID, their days were numbered. I predicted the collapse of many retail spaces back in 2010. Okay, 2009, 2010, 2011. Fast forward 10 years, you have Century 21, Sears, Kmart. You have a variety of multiple businesses that don't have a strong internet presence that compete with the giants such as Amazon, Walmart, Target. So you have a structural change in the way of doing business. You have a macroeconomic slump. You have fundamental issues that are negative. you have demographic changes. These changes, demographic changes, are strongest in the cities where the big metropolitan areas, with New York being prime, number one worldwide, has the strongest concentration of Fortune, say, 5,000 companies. You know, if you want a worldwide presence and want to attract the best talent, you would probably locate in Manhattan or somewhere in Silicon Valley. Now that they've had the big lockdown and everybody's doing things over the internet, and many companies are given flexibility as to whether to come in for health reasons or for the fact that they realize that there's no reason to pay $500,000 a month for prime Manhattan real estate when you can have everybody work from home and it's just about as efficient, if not more efficient. So the world is changing at the same time that bubbles are busting, at the same time that a lot of people are getting sick, at the same time that a lot of people are losing jobs. So that's a very, I don't want to call it pessimistic view of the world, but again, a realistic view of the world. Now, during this, right, these massive times is when you have some of the greatest creations, the most significant creations of wealth in history. You know, during the Great Depression, you had what used to be middle-class families getting dog food out of cans. You also had some of the greatest wealth created, dynastic family wealth created. Same thing during World War I. Same thing during the last big bust in 2008, right? A lot of people became very poor, but a small coterie of people became very, very wealthy. Okay, this is the time to learn how to concentrate your capital in the right places and benefit when these prices shoot up, and to avoid having your capital in things that drop to the ground.
Wow, that was a very elaborate sort of time lapse of what's been going on. So during the last financial crisis, 2008, is when Bitcoin, the idea of Bitcoin through the Satoshi Bitcoin white paper came out. And Satoshi, if I recall, on the first block of the Bitcoin blockchain, put a snapshot of a British paper called The Times, saying the Chancellor of the Bank of England bails out the banks again. So why do you think Bitcoin came at the very moment there was this huge financial crisis? And what do you see the role of Bitcoin being during this next financial crisis? This is because you're also calling this particular crisis a much bigger crisis than the last crisis, which brought Bitcoin. So what's going to come out of this financial crisis and depression that you're talking about?
Well, Bitcoin, it's obvious that Bitcoin was created as a solution to a significant problem. And the problem was having capital that had no sovereign rights. So when you have money, put it in the bank, and the bank takes your money, pays you close to nothing for it, and then makes a lot with it. And they give you almost none of it in return. It's what I would call return-free risk. To explain to those who are not finance majors or well-versed in finance from a working perspective, there's a concept in finance called the risk-free rate, which is a fallacy, by the way. There's no such thing as a risk-free rate. There's always risk. Without risk, you have no return. So the only way to take zero risk is to have zero return. But academically, you have a risk-free rate, which is a rate that governments give you, an interest rate that governments give you in order to borrow money from you. So in the US, that would be the treasury rate. Okay, let's say the 10-year treasury right now is also very low. I think it's just barely above 1% or 2%. That rate is categorized as being risk-free because the US will not default on it. That is not true. I'm going to give little finance lessons along the way. That is not true because the US has technically defaulted once, but it was minor. It was a political skirmish. But the reason why the US won't default on it, not because the US is so big and powerful economically, which it is because the US controls its own currency. Okay, and it's a currency that the whole world has to use. It's called the reserve currency, and you need to use it to buy stuff. So when the U.S. comes into a financial burden, right, and they drop interest rates, but they still have a burden, and they print money. So if you borrow $10 from me, okay, and I have a problem paying you back that $10 for 10% interest, so I owe you $11 by the end of the year. If times are getting a little hard, what I do is I simply print more US dollars. Okay, so now that $10, I print 10 more dollars, so now we have $20 in circulation. So I drop the value of the money in half. So when I pay you 10% on your $10, okay, you're only really getting 50 cents in interest instead of $1 in interest. So I just saved myself 50% of my debt service. And that $10 that you borrow, when you get it back, is only worth $5. So instead of getting $11 back, you're getting $5.50 back. The US is able to do that at will. Okay, and they're doing it right now, by the way, printing large amounts of money with very, very low interest rates. So that in itself debunks the whole concept of risk-free rate, right? There's significant risk. Now, theoretically, the more risk you take, the more compensation you want to get for that risk that you take. So the riskier a bond is, the more money you take, and the riskier a stock is, the more the return you're supposed to get. The riskier a cryptocurrency is, the more return you want for it. But the problem is banks have taken that out of your power, right? Out of your purview. So now basically you give your money to banks and that's it. So when banks, you take the risk of having your money in a risky bank and they do proprietary trading and risky lending, etc., and they give you basis points or 1% in interest, you're getting, instead of a risk-free return, you're getting what I call return-free risk, where you're taking the risk and getting no return from it. So Satoshi, assuming he has a mindset similar to mine, says, you know, since we all have to take some risk, okay, but we all want some control of return, we're creating self-sovereign money. So Satoshi created a self-sovereign currency, money that is controlled by the users of the money itself and not by an authoritative centralized banking system. And that's the creation of Bitcoin. Okay, I was a very big believer of Bitcoin, 2013, 2014, much less so now though. And the reason is because the original premise of Bitcoin, self-sovereign currency, that allowed individuals to do business with each other, moving value, financial value back and forth, okay, through the blockchain without having to rely on a third party. That vision has been bastardized, it's been warped, it's been changed by the system itself. Not the Bitcoin system, but the financial system. Most of Bitcoin's value right now in utility is not in peer-to-peer transactions, finance, but it's in speculation. Okay, people buy Bitcoin hoping Bitcoin goes up in value versus buying Bitcoin and to become their own self-sovereign bank. And so now you have applications for ETFs, you have over-the-counter funds, which are now very large, 10, 5, 10, 15, $20 billion. I forget how much they are. And basically Bitcoin has been co-opted by either co-opted directly by Wall Street and or co-opted by the Wall Street mentality. Nothing necessarily wrong with that per se, except for the fact that it goes against the ethos of what Bitcoin is itself. Okay, now Ethereum and other currencies, platforms, blockchain platforms, have come and taken over, and Ethereum has much more in the other currencies. I say Ethereum as a blanket for Ethereum and its potential competitors. They have much more development coming on board. Okay, so now instead of being purely a speculative vehicle, they are also a speculative vehicle, but much more so a utilitarian vehicle that are used to build distributed DeFi and other systems, of which Veritasium, which is one of my companies, is also through its hat in the ring, tokenizing real-world assets and allowing peer-to-peer transactions with real-world assets, again, without an authoritative third party. Now, let it be known that the government doesn't want this to happen, at least the U.S. government. There have been a lot of bad actors, in this space, but the government has pretty much went after practically all these small and not all the small capitalized, or all the relatively small and relatively undercapitalized companies and giving them a very, very hard time. And hence you see a lot of these entrepreneurs are either not in the US or been rolled over by the government. I was just right before this call, I see that the IRS has put out a call, an RFP for developers who can break the Monero encryption system, and also the Lightning system as well, which is the overlay for Bitcoin. Monero is a privacy coin, and again, things such as self-sovereign finance, private transactions, are things that the U.S. government, and I believe certain other governments, really don't want to see. The U.S. government has been very heavy-handed in this, in my opinion, and I believe they chase a lot of development offshore. Okay, but in a nutshell, that's where we've gone from 2008 to now. There's been a lot of development, not nearly as much development in the States as it should have been. So they left the gate open for the big banks to take over on the big institutions. But the small entrepreneur, not very competitive. The U.S. is not a good place to do business. So you will see Bitcoin 2.0, and you're seeing it now. But it will be ex-US. The reason is because this simply is not the place to create a business such as that. And that's in my personal opinion.
All right. So in a nutshell, we saw Bitcoin come from the 2008 crisis, and now we're beginning to see applications like DeFi being built on top of Ethereum during this crisis. So I think a lot of the things I'm seeing in DeFi were things that you've been talking about for the last 5 years, and I think you alluded to some of the challenges you've been having at Veritasium with the SEC. How is this space evolving to allow more resilient development of these groundbreaking projects? And you say they're going to be built outside of the US. What are you seeing that is changing right now that will allow people like yourself and others to build these solutions to the challenges that we are facing on top of Bitcoin 2.0, as you called it?
Well, we've seen other jurisdictions become very, very welcoming to entrepreneurs. They're aware of basically the flight of talent out of the US, and many other jurisdictions have been very welcoming. Those jurisdictions have had problems, and primarily because the biggest concerns are money laundering and bad actors. They don't want that. Nobody wants that, at least if you're not a bad actor. The good guys don't want that, number one. Number two is competition with the existing banking system. When you create a new way of doing business and you cut out a lot of expense, you are also cutting out the people who profited from that expense. And those entities, the people that profit from that expense, usually are very powerful from a lobbying perspective. And they have control over the regulatory machine. Again, a personal opinion, I think we'd be hard pressed to find that to be wrong, but that is a problem with the jurisdictions that are happening. But despite that, things are happening. They're happening at a much, much slower pace than they were before, but it will happen. At the same time, you have the established oligarchies infrastructure adopt technology as well. Okay, and they're using the technology to become more efficient, but there's going to be a hard ceiling, a hard stop on that increase in efficiency, because the majority of efficiency is the business model. They make money by standing in between me and you. So when I want to send something to you, I have to go through somebody who takes a piece of the pie out. Okay, despite the fact that the architecture is currently available, I can send it directly to you and you can send it directly to me. We can create a program that allows us to do business on a very, very advanced scale, and we don't need those third parties. But those third parties have a lot of power, a lot of influence. So, as for how things are going to turn out, I think distributed systems, DeFi, peer-to-peer finance, self-sovereign banking is going to get a very big push soon, or a very big dose of recognition. The reason is because the banking system globally is in a very, very big hole. It's a lot of hot water, just like it was back then. Nobody's saying it now because, again, nobody wants to go through the books and dig through the fine print with their expertise. But if you take a look at the side of Bloomberg's blog, you can see an analysis of the Bank of America that had a ridiculously horrible quarter. Yet, all the analysts said they had a good quarter. If you go to my website, you can see, if you go to YouTube channel, type in Reggie Middleton YouTube channel, you can see an analysis of JP Morgan, where everybody lauded they had such an excellent quarter. They had the worst quarter they've ever had, actually. You just simply have to take a look at the fine print. What banks are doing right now is the banks, we forecasted a significant degradation in credit. Basically, when people lose their jobs at the highest rate this country's ever seen, they're not going to pay their credit card bills. They're not going to pay a lot of bills. The last thing they skimp out on is rent or mortgages, but they skimp out on, they cut back on a lot of the payments before they start paying mortgages and rent. And then eventually they start paying mortgages and rent. If you take a look at the credit metrics of the big banks like Citibank and Bank of America and JP Morgan, you see where their 30-day delinquencies have actually reduced from the previous quarter. So while everybody is losing their jobs and everybody's staying home and all these stores are closed and all these businesses are not operating, they're saying that more people are paying their bills on time than they were last quarter before the lockdown. And there's something wrong with that. The issue is accounting shenanigans. The government has forced the banks to issue forbearances. Forbearance is when a lender says you don't have to pay this loan for X amount of time, and we're going to take the monies that you're supposed to pay into the loan and the interest you should have paid. We're going to put it on top of the loan's principal amount. So you just owe us more at the end of the year, but you don't have to worry about the monthly payments until that time comes at the end of the year. And we're not going to charge you penalties. If they do that, that means that the people can't afford the loan. Okay, they broke the contractual agreement. But the government is allowing the banks that put these loans into forbearance to consider them being paid timely. Okay, from an accounting perspective and legally, you could say that. Realistically, that's a lie. Okay, if you're not paying timely, it's not paid timely. It's just that simple. So we're not talking one or two loans. With Bank of America, I think it was $27 or $37 billion worth of loans that they put into forbearance. I don't have the number off the top of my head, but to go to bloombergsblog.com, you go to the Reggie Middleton YouTube site, you can see, the full analysis, the almost full analysis. You can see the graphs and everything else. It's not just Bank of America. It's JP Morgan, which is Bank of America is the biggest lender in the United States. JP Morgan is the biggest asset-based bank in the United States. These big banks are having these problems. Imagine the smaller ones. If you go to the Veritasium site and go to the research tab, you can see how consumers were about to fall off a cliff anyway, and that's before COVID hit. You see, they're ready to fall off. So when these banks are forced to face the piper, face the music, they're going to crunch and crash just like they did in 2008. They have a lot more liquidity now, but they also have a lot bigger problem than they did before. Okay, and when you see confidence in the financial system shake, that's when confidence and curiosity, at least, in the distributed blockchain-based DeFi-style finance system will increase just as it did in 2008. That is for sure. But then again, we have the issue of government regulation and unfairness. Basically, their job is to prevent the new, or at least their mindset appears to be prevent these new guys from coming in and taking over.
All right. So I think I saw the other day that Warren Buffett sold his airline stocks and his banking stocks and went to buy gold mining companies. And I know Veritasium has been working on digital assets that are backed by gold. So could you, give us sort of an overview, maybe not necessarily talking about a particular asset, of how a millennial like myself, who doesn't have, too much money, has maybe some, college debt, and so on and so forth, can thrive and can take advantage of what, the opportunities that might arise out of this situation that we're in, and how, cryptocurrencies and DeFi also play to that.
That's a big ask in a diminishing amount of time. So I'm going to skim the surface. Warren Buffett is, I respect him, and he's a story investor, but he's not a typical investor. Warren Buffett is one of the richest men in the world. So when he does something, it's almost preordained destiny. The fact that he did it means some markets simply moved to favor it. Now, that doesn't mean he was wrong. I'm 100% behind Slinger Airlines. Being in banks right now is not a good place to be for a fundamental investor. Being in airlines is not a place to be. The reason is because people are just flying less. Number one, the COVID lockdown. Number two, it's now acceptable to have a Zoom call versus for me or you to meet public and do this physically. I explained the downside of being in the banks. People are just going to stop paying their bills. And when they stop paying their bills, the collateral behind these loans are going to shrink in value, okay, because the economy is going to go down. Now, the key is to how to benefit from that. Warren Buffett uses massive amounts of capital. The average layperson has to be a little more discerning in how they go about it. The best bet is don't lose money. Risky assets, even though you see them going up in price a lot now, are not the place to be, right? Unless you're a very swift trader. They're going up simply because the Federal Reserve is goosing the system, right? They're throwing more money in. I explained that lending situation where I borrow $10 from you, but I create another $10, and now your $10 only worth $5, right? By dropping the value of your money in order to get $10 worth of assets. Suppose you're buying a stock. In order to get $10 worth of stock, after I chop the currency value in half, you have to buy how much stock? If you want to get $10 of the stock, okay, and I doubled the amount of currency available. So the only way to get $10 of value of stock before it was doubled, how much stock would you have to buy? This is a quiz.
Come again?
If you would have wanted to buy, if right now we had stock, okay, you want to buy a stock of ReggieMilton.com, okay, it costs $10 now, but the government doubled the money supply, so they chopped the value of dollars in half, right? In order for you to buy $10 worth of $10 of Reggie Milton value stock now, when the currency is chopped in half, how much of the stock would you have to buy?
You spend double the money.
Right. So basically, the value of Reggie Milton, the price of Reggie Milton stock went from $10 to $20. The value is stayed the same at $10, but the price went up to $20. That's what's happening in the stock market right now. A lot of people see the stocks going up and say, "Wow, the stock market is flying up in value." No, it's flying up in price because the dollars are worth that much less, so the stocks are being priced that much higher. But the value of the stocks in the stock market is actually going down because the economic outlook is horrible. We just had 21 weeks, I think, since the COVID lockdown, 22 weeks, something like that. And we still had 881,000 people apply for unemployment. At that rate, it's still greater than any year in the history of record keeping in the US after 21 weeks of lockdown. So that means we're not even back to the level of the worst in the history of the US yet. We're still above that after 21 weeks. So anybody who believes that it was a V-shaped recovery is obviously wrong. So what you need to do is you need to find an asset that goes up when the value of currency goes down at the same time that economic activity wins as well. There's several reasons for the value of currency to go down. When the value of the currency goes down, you create inflation. That's monetary inflation, but that is done to boost the economy. If it works, then the economic activity goes up as well. So things like real estate and stocks, which are sensitive to inflation, they go up in price and go up in value. That's not happening now. Now stocks are going up in price and going down in value simultaneously. Real estate is going, depending on where, right, is going down in price and value, but certain areas are going up in value and price. it gets complicated, and I'll give you a quick reason and I'll move forward. New York, for example, Manhattan was the most expensive real estate in New York City, and it still is. But after the COVID lockdown and everybody started working from home, and the density of Manhattan caused it to spread, and a lot of people realized that my companies allow me to work from home, hence I don't need to go to work. And these companies say, you don't have to go to work, and we're not going to pay for all this expensive lease space. People are moving out of Manhattan and into the suburbs, where the properties are cheaper, you have more space, etc. That caused the price of suburban housing to go up. Okay, a lot of people were very short-sighted, say, "Hey, real estate is booming. I'm going to buy more suburban houses." They forgot to look just 7 months ago, 8 months ago, where the price of suburban houses were falling. And the reason we're falling is because you're at the top of the real estate bubble cycle, and it's going down. Suburbs temporarily going up in price, where the city centers are temporarily going down. After everybody rushes out of the city, what's going to happen? The prices are going to go down until economic activity supports the prices going up. The only way for that to happen is employment goes up and wages go up and people make more money. No time soon. So the reason why Warren Buffett bought gold was because he's not a gold bug. He was actually very bearish on gold, definitely anti-gold for most of the time that I've known. And to be truthful, I am as well. I'm not a gold bug at all. But if you look at the numbers quantitatively, gold goes up when money supply goes up and the value of the dollar goes down and interest rates go down. Okay, so when you have monetary inflation go up and interest rates go down, right, the real value of rates, the real value of interest rates go negative or close to negative, gold goes up because gold is priced in US dollars. So when the US dollar becomes small in value and interest rates become low and unemployment goes up, gold basically stays still in price and value. But if gold stays still and what is priced in goes down, it looks like everybody that what the price of gold goes up, which is the fundamental reason why he bought the gold miner. And the reason why we've been tokenizing gold since the summer of 2018. We started tokenizing gold when gold was $1,200 an ounce. Right now, I think gold is about $1,940 an ounce. It went up to 2,000 and change. It fell back down because those are just traders speculating. Don't worry about that volatility. Gold should go up more because the US dollar is going to be debased more. Interest rates are going to be suppressed. If you look at Bloomberg's blog for today, which is September 11th, 9/11, you will see the reason why interest rates are not going up anytime soon. And it's because the United States simply can't afford it. The United States has a record budget deficit. You know, it spent more money than it's ever spent since World War II on a nominal basis. Okay, meaning not adjusted for inflation. Yet its interest payments are lower, and they're getting lower. This is the cheapest, it's the least amount that the government has spent on its debt relative to the size of the economy. The reason is interest rates are very tiny, and it's even cheaper than that, but you don't see that in news articles because the government's printing money, so it's also not paying back the same value that it borrowed. Now, if interest rates were to go up, the government will have a problem affording this, and the government doesn't want that, so they will force interest rates down, and it will continue to print money, and that will continue to lift the price of gold. That's the fundamental reason for gold going up in price. But to go through other things and whether gold is suitable for somebody else, I don't think of gold as an investment. I think of gold as an FX replacement, a currency replacement. So think of gold as a US dollar, euro, pound, renminbi, yen, okay, and how it floats among these currencies. Unlike the other currencies that have sovereign actors that want to drop the value of those currencies to give them a trading edge, gold simply exists. So it doesn't have as much manipulation in price as the dollar, the yen, the pound, etc.
All right.
It's very technical. So I apologize, but I want to dot the I's and cross the T's, if you understand what I'm saying.
Yeah, I think I understood. You explained it quite well, so I was able to follow quite a bit. So as we wind up, I know you've been doing some background, research, and also actually moving into the Caribbean and Africa. what are your thoughts for, I'm from Nairobi, Kenya, so I have a personal interest in this. What are your thoughts for the outlook of, the motherland, Africa, and the Caribbean, where you have some experience?
Well, I've spent a lot of time in Nairobi and in Lagos and other parts of Africa. I'm gonna go brass tacks. It's Phil political correctness out the window. So, Africa is the wealthiest continent and the poorest continent at the same time. Okay, and it doesn't have to be that way. It is that way because of colonialization. Like, now everybody knows this. Might not want to hear it, but it's a fact. Africa is still suffering from colonialization, right? Why? Because it is not monetizing its vast natural resources. Africa is much richer in natural resources than everybody else, easily. Okay, when the colonizers, right, run into big economic trouble, okay, this is an opportunity for Africa to pull out of the colonization's grip, the colonizers' grip. But you have to have the will to do it, right? Simply take your natural resources and sell them to the open market directly. Now, there are many machinations that prevent Africa from doing this, okay? But using current technology, right, the blockchain, et cetera, which a lot of African nations seem to be afraid of, right, you can do this relatively easily, right? Anybody who has a doubt or a question and wants to know how, simply call me. I'd love to speak to you, okay? If you go to the Veritasium.com website, there's a there's an application. There's a menu on the left. Click research, scroll down, and look at the research report for Zimbabwe, where we did an analysis of what would happen if Zimbabwe would adopt free gold. Basically, it's a very gold-rich nation, just very much like South Africa and Ghana, which is the #1 gold producer on the continent now. But Zimbabwe is fraught with hyperinflation, which makes no sense. It has the most stable currency backing commodity in the world, yet it has the highest rate of hyperinflation in the world for the longest amount of time as well. Okay, all they need to do is monetize their gold. Okay, we can actually create a gold currency. I can create it like that. Okay, that analysis is done. We can do the same with Ghana, Kenya, Nigeria. Okay, now when these countries go and borrow from the IMF, the World Bank, and other nations, they pay what I call a melanin tax. Ghana pays roughly a 332 basis point premium on their borrowing relative to other countries ex-Africa with the same fundamental condition and economic level. So without any additional risk, it pays a 332 basis point, give or take, premium due to the melanin tax, right? There should be no melanin tax. There should be a melanin premium, okay? So, this is possible, and there are a lot of politics that come into play, but the opportunity is here because the colonizing countries simply, have their own mess to dig out of. Now, what will happen, I'm almost sure, is they will go and try and pull more value and natural resources out of Africa. But this is an opportunity to rewrite the rules. Remember, as I said before earlier in the recording, you have these big economic resets, or when a lot of people go poor, and a lot of capital is drained out of certain areas, but some of the wealthiest dynasties are created. Okay, that's true not only on the personal finance level, but also on a sovereign finance level. So this is an opportunity for Africa to have its time in the sun as it did back during the pre-colonialization days.
Yeah. I think this is one of the silver linings of the corona pandemic, is that it's accelerating digitization and adoption of virtual commodities in Africa. So I think this is definitely the way to go. So
economic capital, mass, is to do business. Okay, so I'm a Black man. This is the Black Blockchain Summit. I welcome all and any and all to come and do business with me. You don't have to be Black, you don't have to be African or from the African diaspora. You simply have to be aware and woke. We have significant financial research at Bloomberg's blog, underpinning both free and paid. We have tokenized gold, we have tokenized silver. Silver's been on a tear because of its increase in because of its volatility relative to gold. Okay, gold has went up, I think, 38% over the past year. Silver's went up 54%. Okay, but there's a whole lot more to the story than that, so don't rush it and buy silver. Okay, I'm just giving factoids and data points. And we have tokenized platinum, of which we are. I'm also willing to share a lot, and I also want to help sovereigns significantly. This is an opportunity for sovereigns to really rise. Hyperinflation should be a thing of the past. It is not necessary. Okay, citizens and residents who suffer from hyperinflationary countries don't have to, right? We have the solutions. I want everybody, whether you are just interested in dabbling for a couple of pennies or for a couple of $1 billion, have a conversation. Come over, reach me on Bloomberg's blog or Veritasium. You can reach me on Twitter at Reggie Middleton or email me directly, Reggie@Veritasium.com. Okay, and very soon at Reggie@Bloomberg'sBlog.com. Operating together and getting a true education is how you amass wealth. And this is a wealth amassing opportunity. Now, first, you have to make sure you don't lose your capital. Okay. Then you have to make sure that your capital is not lost to inflation, which it definitely is. If you keep it in US dollars, you are getting poorer by the minute, or definitely by the day. Okay. At this particular junction. And if you put your money in overpriced risky assets, right, you're going to lose it to the eventual depreciation of those assets, which is a nigh guarantee. So it's tricky, but actual real education, not necessarily academic, or definitely not academic. I'm going to be, again, put incorrect. Definitely not academic, but real world education is the key, and perseverance, confidence, and patience.
All right, thank you very much. This has been the Black Blockchain Summit with Reggie Middleton. And I think I've learned a lot, and I'm sure you in the audience have also learned a lot. So thank you, Reggie, and till next time, Kwaheri.
Awesome. That was a great session with Reggie Middleton at the Black Blockchain Summit. You can look at Reggie Middleton's projects at veritasium.com, as well as the Boom Bust blog. So we are immediately going to go to our next session, which is a fireside chat between Deidre McIntyre, founder of Black People and Cryptocurrency, and Hassan Karim, PhD student, cybersecurity researcher at Howard University. The title of the fireside chat is Enabling Voice Commerce on the Blockchain. Thank you.
Enabling voice commerce using blockchain. So I figured today, Hassan, maybe we do a little like role play before we get into the introductions and the background. Let's pretend that we each got selected by Apple or Amazon or Google to be a part of a focus group, what will we tell them about their voice commerce systems that they should know?
Well, my focus, my PhD area is in privacy. So I start from there. I try to help organizations and research in the research community in general, sort of quantify some of the challenges with securing privacy. So some of the things that we talk about in privacy is to what extent users will go to keep themselves private, right? And on the flip side, to what extent governments will go to uncover privacy, right, for whatever reasons. And there's this constant debate, and organizations understand this. There's this constant issue between security, national security versus citizen privacy. So what I would go to the organizations, and it would be more of a fact-finding mission, what type of things are you doing to help advocate or enable individuals to take control of their privacy? Because even in the European Union, and this is an interesting thing, in the European Union, you have the new GDPR that was supposed to sort of give citizens control of their data, right? And when we talk about voice, it is not just since everything is IP, then that's data, number one. And then the so-called metadata is their phone numbers and their call records, right? So that's not bad. I mean, that's not something that you want out either. It's private. But here in the United States, they say, oh, it's just metadata and no problems. No, there's a problem. You shouldn't know who I'm calling. But in any case, GDPR by itself, although it is supposed to give citizens control of their data, specifically in GDPR and throughout the European Union, the call tapping and they call it lawful intercept. Lawful intercept is still a part of the law. So although it now creates this sort of gray area that telephone operators and telephone users, right, but phone operators, telecom operators, and anybody that is using the telephone infrastructure can play in, and we're not really sure what's going to be the outcome of that. So I would say be careful, but make sure that you give, that you enable mechanisms for users to protect their privacy, like blockchain, and thereby enabling them to take control, like the law in California requires, and the law in the European Union requires. And as a matter of fact, other countries are coming on board as well. So it's like give them technologies or enable technologies to allow them to remain anonymous.
So I'm going to backtrack for those who are new and not familiar with some of the terms. GDPR stands for what? And when you compare GDPR, the European Union's GDPR, to what we have, our privacy in the United States, well, who's a little bit better? Or is anyone in the world better than both? And then we'll move back into voice commerce. Okay.
So General Data Protection Regulation, that is what GDPR is. And it's been this ongoing, if I look at it from the view of privacy advocates, it started, privacy advocates started advocating for laws here in the United States back in the 70s. and it sort of evolved from there. In the 90s, there was advocacy, but the laws actually hit the books in the 2000s, like 2000, 2001, around that time, where privacy capabilities were now required. Sarbanes-Oxley and some of the other laws here in the United States, but they did. Not privacy in general. It was specific to health records. And so it
Right,
was
HIPAA.
with SOX or Sarbanes-Oxley that was specific to financial records. But telephone records have, I believe, intentionally been, left out because the government wanted to be able to have their lawful intercept capabilities. And being involved in sort of architecting lawful intercept infrastructures, I know what it can do. I know what we can capture. I know the extent to which we can capture. And thus, privacy advocates are very right in trying to push for things that can get back some of their anonymity. Right, we might not be able to. Well, no, with things like with encryption, like blockchain based or something else. I'm even involved in research, looking at homomorphic encryption.
What's homomorphic encryption?
Homomorphic encryption is it's a long story, but in any case, it's another form of cryptography that is supposedly quantum safe, but that uses math that prevents, you never have to let go of the keys. So and there has been some research that use VoIP conversations with homomorphic encryption. The typical encryption right now, the keys are negotiated dynamically and shared across the air. So people, let's say government agencies, I won't call out the three letters with A, S, and N in their names, they can pick up the keys and sort of in real time listen and tap your conversations. In the case of homomorphic encryption, you actually never have to give up the encrypted data is never, the raw data
Private
is
key?
never sent. The private keys aren't shared, don't have to be shared, number one.
Okay.
But let's say you wanted to share it, you just never have to have raw data out there. Not even when sort of like one of the challenges with TLS and SSL, where you're a SIP conversation right now, voice over IP, there is, if it is encrypted, then there will be a client and the server, and both ends have to terminate the conversation. And after it comes out of that SIP tunnel, or after the encrypted tunnel, then the SIP conversation, which is raw, meaning your voice is in that one, it comes out and it gets processed by the end server. That data, if you were using homomorphic encryption, even that part never was eavesdroppable, if you will. Never, you can intercept it, but it would be gobbledygook. So that's
in lay terms, my Samsung, my Google, the voice, Siri on iPhone, Alexa on Amazon. Anytime you're having discussions around these devices, whether you're actually using them, they can be intercepted. Is what you're saying, given the current technology?
Absolutely. I mean, given current technology, they all go through data networks, number one. And unless somebody is turning on encryption, which the protocol enables, but it doesn't require, so SIP doesn't require it. And the gateways are the ones, there are gateways that would enable encryption. And so if those gateways don't support it, then everything is going across the network in clear text. I mean, in clear, where there's clear data. Let me call it like that, clear data. So anybody along the route can, if they have a tap, and it's not so hard to do, they could intercept the conversation, lawful or otherwise.
So we're not paranoid. The other day when my family was arguing where to take takeout, and I was like, I'm not going for Five Guys no matter what. So and so does me the cheeseburgers. Let's go here. And then I turn on my on Facebook and I see a Five Guys ad. That's not paranoid.
100%. 100%. No, it is. I mean, this is the creepiest thing in the world. I think that people should acknowledge that because you enable your mic, right? Because your mic is enabled and always listening, if you're going to say, hey, Alexa, or hi, Google, right? If it's going to be listening for that, the mic has to be on. And if it is on, then it's just listening and trying to prepare for the next time that you're going to look at the phone. And look how creepy that is, that, you now have a Five Guys ad on your phone.
We rarely, if ever, go there. It was a big debate. All of our devices are out. We're a nonpartisan household. We have Apples, we have Androids, we have
Nonpartisan.
Everybody's listening and buying $3. And I go into Facebook and I was like, what are the odds? It's not like it was tracking a recent purchase or anything.
Right.
So I can understand sometimes you do a purchase and then you see you buy somebody's almond milk and next day you see somebody else's almond milk. This was the conversation. It got shot down. We ended up ordering from Wingstop or something like that. And then I saw, and I was just like, I can't be, everything was out on the table. Nobody was using any devices. And next thing you know, there's that ad right there. I think for me, like one of the things, aside from security that I would discuss, my concern is how close it is. I mean, if you talk about Amazon, Google, and Apple, that's basically it. The powerhouses for your voice communication. And I was just playing around with Alexa the other day. And I said, well, go ahead.
That's not you're talking about you said Amazon, Google, and what else?
And Apple.
And
in terms of voice commerce. And you're talking to devices to get you stuff.
Yeah.
To get stuff. So those three maybe being the dominant player.
1.8 billion people use Alibaba stuff.
China, yes, we're in the minority if we use Alipay or something like that in China.
Back to don't discount T-Mobile and the telecoms, German telecom T-Mobile or the AT&T. Although they're not out in the front where they could have been, but they're just too big to take advantage of voice things. And I'm not saying they should be. They should be.
Right.
Should be out there, but they are definitely involved in the infrastructure. They could stop the infrastructure if they want to.
Yeah, but my feeling is that it's such a small group. No matter what, like I just went to Alexa just for the fun of it, and I was like, Alexa, what can I buy on Amazon with Bitcoin? And she was like, I don't know. I was like, I'm saying to myself, but it's just the stage that, she's not saying no, because Alexa doesn't really do that too much unless she's joking, being sarcastic. But it's this, if somebody didn't know, like if I didn't know there was another way to do it, they would say, oh, see, that's why Bitcoin is trash, because, you know how much people shop on Amazon, and I can't even, because I asked Alexa. And so now you got this gateway that's sitting there saying, well, we have partnerships with the credit cards or with this and this. We don't really want people buying with crypto. So this is the pegged in response to that to that question, even though it may not, the actual functionality of it may not be true. So my concern in terms of having all these small gateways is that, you know, wider scale, people of color, you know, what if I want to say, I want to buy Ethiopian teff, or I want to buy, you know, a specific Ethicolo hat from Zuma. It's going to always be, well, I don't know about that. I don't know about that. So now you're restricting the commerce to certain players if you can't, and you don't know whether it's an honest answer or if it's a deflection.
Okay, I think that you hit on something that might need to be clarified. So let's draw a distinction between the voice platforms themselves and the voice commerce platforms, right? So the voice commerce platforms, you can enable voice commerce with a bot on any application you want. It simply happens to be that, you know, Amazon owns the marketplace, right? And Apple, you have your Apple in your phone, or you have your Samsung in your phone. But let's look at the broader world. What is the, if we take those two and just look first at the voice commerce piece, you know, what chunk of the overall market does Apple actually have? And the overall telephone market cannot be that large because of the here in the United States is large, but across the world it can't be because it is very expensive. Same with Samsung. At least the latest Samsungs are bigger Samsungs, but they definitely have smaller models that that do have similar features, right? But I remember, and it was so sad to see Nokia get just like crushed, right? But Nokia had the rest of the world, right? It was really, you know, I would be embarrassed if I were Nokia, but in any case, they had the opportunity because they owned everybody else's pockets, but they were too slow to move. But in any case, if you look at voice commerce itself, any retailer could add that feature. It is simply easier to do it through a centralized commerce player like Amazon or like whatever your phone is. But you could stand up a website today and enable voice commerce. You don't need to go through them.
So what is on the blockchain horizon? How is blockchain affecting it differently?
There's two sides of that. The payment itself, if you simply consider Bitcoin as a type of currency, not fiat, but yeah, if you're going to use this asset called Bitcoin, and for this part of the conversation, I am calling it just a currency, just as you would put USD or, you know, the pound, then you have BTC. So if you're going to pay in BTC, then you're going to pay in BTC. There needs to be some back end, you know, tooling to make that happen. But from if you're looking at it from a commerce perspective, well, that commerce part of it could be enabled today by almost anybody. I'm not sure what is slowing people down other than being unsure of how to make it work, right? So when that first pizza was done, you know, that
was the question I was going to ask you. I mean, if it's something that anyone could do, I mean, I think, you know, the thing with web development is, like, if you're a web developer today, okay, I could squeeze something out with WordPress or Drupal or Joomla or something like that. But someone says to me, oh yeah, I want, you know, a voice commerce. I wouldn't even know where to go. I wouldn't even know what's secure, what's best. I wouldn't know the process for that.
I would assert that you probably don't know how to enable payments on Drupal or WordPress either, right? Because far fewer people actually deal with commerce on those platforms. But
You usually just use WooCommerce or Shopify. I mean, use something packaged
right,
that
right.
you know. And so if there's not a voice commerce package or a plugin, it's not something that those of us who are not, you know, I'm more of a project manager than a developer. So I know all the different products, and you know, I could dibble dabble a little light HTML, and that's about it. But you figure most people are worse off than me. They don't know HTML at all. They're using Wix. So how does that become something for someone who's like, look, I have this idea and I want to get it out there and it's simple. And I'll give you an example. There is and I'm not saying that they're not using this. They probably aren't using this, but there's a startup out of Philadelphia, non-blockchain related, called Black and Mobile. And they're growing fast because of COVID-19. They are basically a Grubhub for the Black version, for Black restaurants. So they'll deliver to anybody, but they're representing the soul foods or whatever. But to go to an app and just go through and, okay, I want vegan soul food and this, I would think that, you know, a voice commerce would be like, hey, yeah, I want this. It's easier than to just, especially if you're ordering some of the same stuff, you know, what direction would they actually go to actually implement that, something like that within their app?
I'm thinking, sorry about that. I am thinking that, so without, let's talk about the mechanics of it, right? You have your website, and every website you want to have a payments gateway. So first thing you need to look at is what applications are there for your payments gateway. And once you look at the payments gateway, then you need to filter for ones that support the currency that you want, right? One of the challenges here in the United States is that most payment gateways will not, and even if you're going to turn on the payment gateway that enables, I guess I can see a way.
Coin Payments, I think, is the only one that does crypto, I think. Well, I mean, they might not be the only one, but they're one of the ones.
Right. Oh, interesting. Okay. So if you did, you would have to enable a payment gateway that supported blockchain or, you know, whatever Bitcoin or whatever blockchain currency. Sorry about that.
That's right.
So you would have to find a payment gateway that supports that particular currency, and you would hope that they had the tooling for it, right? But let's say they didn't. Could you roll your own? The answer would be yes. If you wanted to, say, use Ethereum, for example. Certainly there are some Ethereum clients out there or wallets that would allow you to take currency from the internet. So you would just, the level of skill set that you need just increased a bit.
Yeah, so that means I'm paying through the nose for the developers who knows how to do it. For right now. Is there anybody that you think is doing voice commerce well and is using blockchain?
I don't know, frankly.
Yeah, I think that you know, I've only seen talk about it within the last year or so. I would think one of the use cases, up until like maybe the end of August, I would have thought one of the use cases was, you know, to use Monero. But since there was some news that broke August 31st about a company being able to track Monero payments, that might not be the case any longer. But
well, I mean, I'll tell you what. I mean, from my experience, the ability to track. I mean, I'm a blockchain enthusiast, but I understand what the challenges it has for people involved in tracking the money, and we need to be able to track. I mean, not we need to. So, there are entities that claim the necessity of tracking money. And if you want to be sure, I mean, there's just these pros and cons, right? I guess I want to point that out. You know, you could have a solution out there, even like Monero. Let it be trackable, but at least you could use blockchain. I mean, sort of, you know.
I think, I mean, for me, like for instance, I think what people have a problem with is that the overzealousness of gatekeeping of the powers that be to censor. Not that, okay, I need to use a privacy coin on my system because I'm doing something nefarious, but, you know, at any time the rug can be pulled from you, right? Because laws change, and the laws don't necessarily mean that. It just means I'm mad at this nation, or I'm mad at this particular group of people. And we've all had it happen to us, even, you know, in Facebook. I've been, you disappeared for a second. I don't know what happened. We've all had to a situation that even, you know, on non-e-commerce social media. I mean, I've been banned by Facebook a couple of times, 3 or 4 times. And I was talking about history, African history. And I, you know, 3 times, I can't hear you because I think you're on mute, but 3 times I was banned for not being kind. And I fought it each time because I was like, I don't use profanity in anything that I say. I just said she's incorrect, and I stated 5 studies to say why she's incorrect. And sometimes Facebook is like, oh, well, we don't care. You're banned for 3 days. So you have this overzealous policing of Black people in general, you know, in the physical world, and you have it in a digital world. But now when you get into commerce or voice commerce, you know, what are the trigger words? You know, what are Black people looking to buy versus white people looking to buy? What are, you know, men looking to buy versus women used to buy? You know, what are the possibilities of biases that may be avoided by using blockchain versus the current gatekeepers of voice commerce?
I mean, I guess I would. I mean, those are very good and very interesting questions, right? I mean, we still deal with the point of privacy, right? It isn't because it is blockchain that made it okay. So the front end of the conversation, once you start a voice conversation, like Samsung has their voice Bixby thing, right? So once you start that voice conversation, that is one side, or whoever has access to the voice is able to process and necessarily process your voice, and because they need to be able to figure out what you want, right? Probably the problem comes is, what are they going to do? What are they going to make their AI do in order to respond with what you want? That's problem number one. And then there is those, what are those keywords? What are those, you know, what could you banned or more scrutiny or things like that? That's a problem with the voice technology. And I like to sort of step back from that with this one technique that Edward Snowden has. He says for his phones, he opened the phone and soldered out the voice part of it. So
he's not using it at all.
Well, he'll use it. Basically, he broke the GPS on it. I mean, he soldered off the GPS, and he says, if I want to use voice, then I will plug in my microphone directly. And that's probably, and maybe people don't want to go that far, but blockchain or not blockchain, that is probably what you need to do. Blockchain might help in your privacy part in the transaction, but the actual enabling voice payment requires somebody be able to process your voice. And that starts at the microphone is capturing that voice in whatever platform, whether that's your phone, whether that's the computer. That one is going to be processing your voice and running the AI on it. And so that's really, whether it's commerce or just, talking to your friends or just recording something, that's where, more scrutiny is required from a privacy perspective. It doesn't really matter what blockchain is going to do on the back end.
Yeah, it's getting more and more difficult to distinguish between actual voice and AI. You see more and more of the videos that they have where they're putting someone else's voice or actually simulating a famous person's voice, saying stuff that they didn't necessarily say. So it's going to be have that problem as well. And I wonder if I don't know if you can answer this question. I wonder if people's voices are as distinguishable as a fingerprint would be.
You know what? I have not done the research on that. Apparently it is. And I say that anecdotally, but because anybody with voice editors know that you can go in and modify and do you can do mods on voices. So I don't think that is I don't think that we're going to find a silver bullet from a protection perspective on that end. It isn't. You can easily modify or modulate a conversation, even just adding background noise. Like, I don't know if you hear my son back there. The fact that he is there.
Not too much, yeah.
Okay. So it's interesting. Your ears are not capable of picking it all up because Zoom is doing a good job at sort of modulating. And you could do that more. So you can do that more, but it requires more AI. So that's the bottom line of what that is. The more that you're going to rely on AI to sort of pick up what you said easier, like, and be able to, pick up on various dialects, like how does somebody from a Black person from New Jersey clearly sounds different from a white person from New Jersey, and that might, I'm sure anecdotally is true. I haven't done any research on it, but let's say, how is it that the AI is able to discern your accents and still get the right words? AI is necessary to enable those capabilities. And as long as you have the AI on, then you're going to need, there's going to be the opportunity for some players, nefarious governments, corporate oligarchies, or whoever, to censor or to do something with your voice, whether it is to replay it, whether it's to record it for evidence against you, whatever it is. And I'm not a fear monger. I'm just saying these are the facts. This is the technology that we are enabling.
Yeah, and I would hope that voice commerce on the blockchain on a more positive end would free up from the gatekeeping that I mentioned before. So I know you had a wider spectrum in terms of whatever, but I would love to say that if I want to buy something, if I want, Jamaican Blue Mountain coffee, I want it going to a farmer in Jamaica. I don't want Amazon saying, well, we got some in Cameroon.
Right.
Or if I want something specifically from Cameroon, I want something specifically from there. I think that is,
is that an experience that you had?
Oh, I was just playing around with Amazon, and I was like, where can I buy Jamaican Blue Mountain coffee? And she recommended, a Blue Mountain brand of coming out of Cameroon.
Wow, interesting.
So it's like you get a redirect. You don't have specificity when it comes to our community, but you can have specificity if you were talking about a certain German beer or something like that. You know that if you ask for it, you're going to get it. If it's in the Western world, you're going to get that particular product. But when it comes to us, there's a lot of substitution involved, which I would like to see, blockchain solutions kind of make the world smaller. If I want something specific from a specific African ethnic group, I can get that. If I want that shuka that you're wearing and I want it from Kenya, I don't want a tartan from Scotland. You know what I'm saying?
Right.
I don't want the knockoff. But I want what I want from the people who make it, or the whatever, so that it can benefit their economy. I don't want it to go another route.
And then I think what probably the best thing that we can hope for is that organizations like Black Blockchain will become advocates for developers, for us to stand up those kinds of gateways that will take, that will deploy AI, because the blockchain, just think of blockchain as more of a pipe, as the highway, right? Don't think of it as is blockchain going to do something more for me than just be a mechanism? Right now you have Bitcoin, it is a currency, but it's just a currency. Blockchain itself can be thought of as the highway or the platform of the infrastructure. So there needs to be some capabilities built in that would sort of favor, if you chose to tell it, hey, I'm Pan-African, just that one click, and like, okay, now we know, rather than send you to these first, we're going to send you to things that you might be more, it might cost you more, but you're going to like it better because it comes from your folks, right? And it is the AI that we need to focus on. There's a book called Algorithms of Color. Is a sister. What is that? Algorithms of Color, of Oppression. Algorithms of Oppression. Man, the sister was really dynamic when she did that. But the book itself, it really changed the dynamics of search engines, really. Sister Safiya Noble, Dr. Safiya Noble, when she came out with that book, it changed. As soon as it was published, then it had immediate impact, and not it by itself, but through her advocacy. I think her PhD work, but then the advocacy of it that resulted in the book. The advocacy went from changing the algorithms that display porn on search results to now you don't see the porn if you look for whatever it was that you were looking, whatever you looked.
You could search, we used to back in the day, if you were searching, because I did a lot of searching for photos for like website development. So if you search for black men, something like that, it would reveal porn a lot, really back in the day. But I was looking for people to fill up a website that was not porn related. Right,
and that was really the algorithms of oppression. And as we quickly wrap up, I think that it would be good for everybody to pick up a book called Algorithms of Oppression.
And what's her name again?
Her name is Dr. Safiya Noble. Dr. Safiya Moja Noble, associate professor and African.
So from Alan Imtaj to Safiya Noble, we need to get on tap with what our people have developed.
And that's UCLA. She's out of UCLA now, right? But what she did was phenomenal, because she was in the right place to drive for changes, and they made the changes. Yes, that's it.
Okay, I see it. All right.
And she forced Google to take a hard look at what they were doing, and they went and changed their algorithms. And these were real. When you would put in, and it came up in the elections, right, or earlier on in the Trump administration. Why does it accidentally call them dumb or whatever it is? It was true, but.
Oh yeah, they had something this summer that if you Google search, and if you do it now, image search white doctor, you'll get mostly African American doctor results. Like, so the image search, I think that's as a result of literally this summer in terms of Black Lives Matter and everything else, because people were passing that around. Go to Google and search white doctor and see what happens. And they, basically, I guess, trying to push back against some people that were actually discriminating and wanted white doctors versus anyone else. And they put that kind of Easter egg in there
Right.
for that to happen.
I guess the overall, the point, coming back to voice over blockchain, there is the technical side, which is the technical pipe that could be used to make your, if you will, make your conversation anonymous as it crosses the world, right? But the challenges that we will face in terms of payment processing gateways is the bigger issue is the AI that we use. And like you said, there are these three big monopolies, if you will, but there are other things that can be done, but that we would have to, in order to guide the conversation or guide the traffic to our own websites, or to give you your Blue Mountain coffee. By the way, the biggest consumers of Blue Mountain coffee are the Chinese or Japanese.
Oh, that's amazing.
Yeah, it is. It is.
The Japanese. Oh my goodness.
I was there and they had Blue Mountain coffee. It was like, what? And when I was in Jamaica, they said, yeah, the people who buy it the most are from over there. I was like, wow.
Wow. Well, I went to Jamaica and I was married in Jamaica, so I had some, like there a couple of times. So that's the only just the example that I can think of. But I think you hit the nail on the head when you said that we need to activate our developers. I know that, the co-producers of this event, BitHub Africa, have the engineers here, and we're still trying to work to develop and to pull out of Howard and to pull out of the HBCUs, developers to work on projects. I think one of the stumbling blocks is finance. And you have people like, the mainstream brands that come in with money to pay students to participate in Panasonic or pay students or whatever. So if we say that we, as Pan-Africanists want to bring developers to work on blockchain projects that, enrich or at least bring out of poverty, countries throughout the African diaspora, we really have to compete on the level of the Ripples and the Panasonics who come, sprinkling gold around. Otherwise, we can't say, the sweat equity is going to be enough, work for honor. We have to resolve that issue. We have to develop a strong work study program in which the students can continue their studies and earn some food so they can eat, in addition to working on these additional projects. That's kind of my thoughts on the development of blockchain from, in terms of getting more African Americans, or at least Africans who are in America, who are at different schools, whether they're predominantly white institutional HBCUs, to actually start building solutions. Otherwise, we will have a situation where, Apple and Amazon and Google will dominate also in Africa, as much as Libra's trying to run into Africa. And that's not going to be necessarily the best solution. It'd be a solution, but probably not the best solution for African nations.
Agreed.
All right. Well, it was my pleasure talking to you, Hassan Kareem. I've seen you at past events. I've seen you sit on the panel or whatever. We never had some FaceTime, so it's good to really, get to the nitty gritty of your background and your concerns in terms of privacy. Of course, I'm scared to death now to talk about anything. I got to figure out how to install my own microphone, but we have to have these conversations so that people can figure out.
Or just accept the risk. Right now, unfortunately, that's really. But I think one of the cool things, and this will be my last statement. One of the cool things about blockchain is that at least there's some form of, what do they call that, democratization that happens. It's not as much as you would want. It's not a panacea of everything that you want in terms of privacy, but you get a little bit back. if you do things over blockchain. But specifically with the voice recognition, that right there is a very active area of research. A lot of people are in it. If you can get in it, and so I'm speaking to all of the listeners, get on voice recognition, AI, artificial intelligence from voice recognition, and be able to sell into the market to say, hey, I can do both recognize and train. So the issue is you need to train your algorithms on Black voices and then find some Black vendors to, sort of route the traffic to. That's it. Good luck.
Exactly. All right. Thank you very much. This ends our baraza on enabling voice commerce on using the blockchain. Take care.
All right. That was a very good baraza on enabling voice commerce on the blockchain with Deidra McIntyre and Hassan Karim. We're going to our next baraza, which is a very interesting one that I moderated. And the baraza is blockchain startups, university collaboration and research. And the background to this baraza is there needs to be a lot of involvement of students from Black institutions like HBCUs with research and innovation, particularly in the blockchain area. So how can we allow for, or how can we increase participation of Black students around the world into this space? And one of the ways that has been happening with Deidra and myself is we collaborate with universities, and I'm very happy to have two professors on my panel. Dr. Todd Shan, Associate Professor at Howard University, Computer Science, and Dr. William Macy, Professor of Operations and Research at Princeton University. So sit back, listen. If you're an innovator, this panel will be very interesting to you.
Jumbo, everyone. Welcome to the 2020 Black Blockchain Summit. Our baraza will be on blockchain startups, university collaboration and research. My name is John Wanaina Karanja. I'm the co-host of the Black Blockchain Summit and also the CEO and co-founder of Melanin Solar. So we're going to be using our three panelists, and I'll start with the lady, Deidra. You can give us a 2-minute background on what you do and where you're from.
Hello, my name is Cedra McIntyre. I'm actually founder of a group called Black People and Cryptocurrency. I'm happy to be at the third Black Blockchain Summit. We've been here at this conference for each year. My background is actually as a journalist. I have a bachelor's degree in journalism from West Virginia University and a master's in education from Long Island University. I used to be a public high school teacher. So you're probably thinking, how did that land me in technology? Well, shortly after I graduated with my journalism degree, I landed a part-time job with a software development firm on Long Island, originally from New York. And I landed it because I could spell the. That was basically the gist of it. And they said, we'll tell you everything we need to do, but basically you'll are facilitating the software engineers and finding free software for them. And I was like, well, how do I do that? And they were like, well, we've got this online ramp called CompuServe. There's a back door. Spit a whole bunch of stuff about me about Archie and finding different data. But that was my plunge into the pre-web .com world, well, pre.com world actually. But once I got bit by that bug, it was always an undertone. So even when I was working in secular journalism, I had a technology column for everywhere that I wrote, in addition to writing for technical publications. Ended up taking some free HTML classes by, like, I think about 1995, 1996. And in 1997, I landed a full-time position with a .com in New York City. That was a precursor to Facebook called the Globe.com. So the Globe.com is noted for having the highest IPO first day gain at the time. And it's kind of infamous for its two-member startups that the company kind of took a nosedive. But I was there for 2.5 years and was pretty much well-versed in the project management aspect of interactive social media before the term social media became popular. So after that 2.5 years, I was kind of burnt out from technology. I actually wanted to teach children, so I went back and got my master's degree, became a teaching fellow in New York City, and was studying for my master's and teaching Brooklyn kids in the school, Franklin K. Lane. Most people, if you've ever seen the movie Spider-Man Homecoming, you've seen the outside building of Franklin K. Lane. The outside scenes were filmed at the high school that I used to teach at. So after I taught for about 5 years, I kind of went back to my web development practice, which was mostly helping people of color with their websites and social media. And I kind of fell into the blockchain sector after a former .com client of mine, who was actually a VC, asked me to write a plain English document on Bitcoin that I had heard about in 2013, but completely didn't pay any attention to it. So I wrote that document in about September, October till November of 2016, and I said, wow, there's a whole different internet protocol happening and network happening here that I didn't know anything about. In 2017, I decided, after being solicited many times by different MLMs and different organizations to buy Bitcoin to these third parties that were willing to help me out for hundreds of dollars a month, I realized there was a need for a Black group on Facebook. At the time, there wasn't a public Black group focused on the sector at large, blockchain and cryptocurrency. So we named it Black People and Cryptocurrency. And then we set about the road of education in terms of how to understand the platform for people that don't have a technical background and were interested in actually starting launching their own wallets and different ways of buying Bitcoin. And then we have since segued now into continuing the education lines, but also in supporting the Black-led startups globally who are still either non-funded or underfunded.
Awesome. That's a great introduction. Professor Macy?
Hey, yeah, so my name's Bill Massey. I'm a professor at Princeton University, Department of Operations Research and Financial Engineering. And I should say up front, I don't really work in the blockchain area. My specialty is in a field called queuing theory. And currently, I've been looking at problems that have involved the efficient design of resource sharing services. Like, so for example, hospitals. You don't purchase a hospital bed. This is a resource you share. You keep it for the duration of your time there, but when you leave, someone else will use it. Okay. Also, another example: resource sharing services, smart cities, transportation issues like bike sharing systems. And so these are areas where a lot of people in queuing theory are looking at ways of modeling these systems and helping out designing these more efficiently. But how did I get into resource sharing services? Well, before that, I used to work in communication services. So for example, telephone call centers. So how many, there the resource might be telephone operators. How many do you need to hire to have an efficient communication service system when you have a 1-800 number help center sort of situation? Okay. Well, how did I get into that? Well, my interest in, I was exposed to call centers before I taught at Princeton. I was a member of technical staff at Bell Laboratories. And so getting into communication services was inspired by, prior to that, looking at communication systems. And guess what? So the field of queuing theory that I work in, it was originally invented to help with the design of the telephone network. And as an encore, it was found to be useful to help design the, well, first it was called ARPANET, later became the internet. So the whole idea is that when you had a phone system, you had a system that facilitated human beings communicating with each other. And so queuing theory came into existence around 1917. Well, about 50 years later, they said, well, why don't we develop a communication system for computers? And that first became the ARPANET, but now today we call that the internet. So that just gives you an idea of how mathematics can just play a role in a lot of these issues. And of course, things like blockchain are running over that communication, computer network. So I'll stop there.
All right, great stuff. Professor Sean?
Hello, I'm Todd Shern. I'm a professor of computer science at Howard University. My particular interest in blockchain is around the equitable distribution and empowerment possibility. There's been a lot of discussion about how blockchain can be used for empowerment, and certainly myself and others want to be a part of that. And so one of the things that I noted was the need to develop proof of work algorithms that could result in a more equitably distributed reward of either the coin or associated token. And so in that context, again, engaging with someone like Dr. Massey, who is Professor Massey, who is an applied mathematician or an OR engineer, but also with others. And one of the things that we wanted to get out of this panel was for people, particularly people in the blockchain space, to understand how they might be able to effectively work with universities and HBCUs in order to advance the industry, to advance their business, and to prepare some Black students for success in this space.
Awesome. So we're talking about enhancing this collaboration between startups and universities, and in particular the HBCUs and also universities here in Africa. So Professor Shan, where do we need to begin? Because I've been working with you at the personal level on the protocol that we're building out that our startup is using. It's called the WIFE protocol. And we face challenges in that in our case, we can have access to, experienced applied mathematicians like Professor Macy. So how can we build those bridges, and then we can deep dive into the actual technology.
Okay, so what I did is I just kind of defined this premise of working with HBCUs. And so folks think that working with HBCUs is a great way for a startup to save money. And what they can do is they can get these students who can develop all this code and can test it out. And instead of these students receiving money, they can receive course credit. I mean, what's wrong with that idea? I mean, it's great, right? Not so much. Okay, not so much, right? Because students, although they're students, they're not without a brain to use. So the first thing that happens is they think that they're going to be abused. They're trying to be used on the cheap. That's what it really comes down to. So it's important that there be some clear expectations, and students got to have some idea of what comes out after that. And so I just kind of put these notes out here, and the rest of you guys are kind of free to jump in. But these are the things that have been observed that prevent students from just jumping in to these projects that are being proposed by startups. It happens all the time. Students are approached at Howard by startup folks, and they're very apprehensive about participation. So just comments in general. Deidre, I know you know what Mousebelt is doing with the accelerator and startups. And so what has been the uptake of that, and just what has your experience been with students?
Yeah, I think that across the board, in terms of students from HBCUs or just Black students in general, we're just not there. There is a bit of a feeling that many Black students who do venture into the forums are a bit intimidated. I think we have to work on some social dynamics to kind of reverse some conditioning. It's not that those few, and I do mean there are few, it's not like every single white and Asian student is there or Latino student. I mean, Latinos are kind of as well, but it's not that they're so knowledgeable that they're gung-ho, but they have a certain self-confidence of stating that they're ready when they're not, and that kind of learning as I go along is okay, and making mistakes is okay because I'm in the mix. I think that Mousebelt has been relying on our organization of Black People Encouraging Parents to bring more, especially HBCU students, into the foray of learning online, learning virtually, working with virtual teams, and taking some of the free classes they have to offer. But there are other Africans there as well that came kind of independent of me, and I see the same pattern of behavior, whether they're from Ghana or some other places. They kind of lay back into the cut, and they seem to be extremely intimidated. So, I almost say that this is a socialization issue. This is a conditioning issue, even though we're coming from different parts of the world, whether we're coming from the Caribbean, Africa, or the United States, that we have to fight this psychological belief that we're not quite ready, or we're not quite good enough, or I know I need to be 10 times better, but I don't even feel like I'm on par. That's psychological, and that's what I see what's happening, because I know that those students that are in there that are of especially Indian, Asian background, there are quite a few in Mousebelt, and then also actually a number of white students from Ivy League. They really don't know what they're doing, but they're not afraid to be wrong and to talk it out amongst one another and get better and move into the space. So I think that it's something that really needs to be tackled head on. And for them to speak up, saying, you just explained to me, and I have no idea what you're talking about. What do you want me to do? Be that blunt, and that has to come from the students. Otherwise, the person doing the presentation is like, well, no one asked any questions, so I think they got it. And that's the teacher in me, honestly. The teacher in me knows when the room is quiet, that's a dangerous place to be in, because they probably don't know what's going on.
What about Black startups when Black startups approach HBCUs or Mount Belt? What has been your experience with that?
A lot of the Black startup founders, many of them are not recent college graduates. They're older. They're in their, late 30s, early 40s, early 50s. They've had more often than not, they've had career experience previously, working for some mainstream companies, including Apple and IBM, and being the lone Black person in that type of sector and competing. So they have not necessarily approached HBCUs directly. They, come to me and they're willing to, if we have a clear-cut issue that, we want students to work on, they're willing to hand it over. But a lot of times they don't go to Black students directly because they don't have any money to give to universities or students. So there's an intimidation, like I'm bootstrapping myself. I put a double mortgage on my house. I don't have the wherewithal, the funding to say, because honestly at Mouse Belt, a lot of their funding is coming from, to back up a bit, Mouse Belt is the first United States-based accelerator of blockchain startups. They founded in 2018, so they're going into their third year. They have a number of educational alliance partners, which basically are all the startups within the blockchain space coming out of Silicon Valley, or pretty much all of them. And these startups are giving money to education, to help fund the education. But where do these startups get the money from? Well, these startups got the money because the alumni of Stanford and Berkeley and MIT dumped millions of dollars into the startups. Now, the Black startups, on the other hand, don't have any such funding. They're not getting funding from Black VCs. They're not getting funding from Black private equity. They're not getting funding from anyone. Everything is bootstrapped. So they cannot come into the party on par and say, look, I'm a startup. I've got, an extra million to play with. We can either split it between the university and some work study funding, but I need this project worked on. So that's the missing piece in the development in terms of the African-American side of ensuring that we have startups that are competitive in the mainstream stage. There's no water, so to speak. There's no funding for that to happen. So you're not going to have the startup founders approaching HBCUs because they're going to say, look, all I can offer is sweat equity. That's all that I have because I've exhausted. And in turn, it puts Black founders in jeopardy because those who have developed MVPs, they've done so with Asian and Eastern Europeans primarily, because the Asians and Eastern Europeans have the ability to say, look, I got a paying job here, and I like your project. How much you going to give me in terms of an ownership stake, and I'll work on your development for free. So Black founders are keenly aware that they are putting themselves in jeopardy as a founder to be tossed later on because they didn't get equity from their own community.
Okay. Dr. Massey.
Yes.
Question. Is there, just for instance, as an example, is there some mechanism for Black startups or Black entrepreneurs to engage Princeton in some way?
Well, I mean, those things are being developed like right now as we speak, because there's been a lot of interest in exposing students at Princeton to entrepreneurs. And there have been some Black alums interacting with some Black students also. But since this is relatively recent development, so it's hard to say where it's going. One thing I would say about when you talk about student perspective, one thing that does go on at our school in general, like sort of the signature project at our school is the senior thesis. So every undergraduate spends their senior year working, the entire year, 2 semesters, on a focused project that they'll write up as a thesis dissertation. And it's something where they they cannot get money for it. It's something they do for, it's two semesters worth of school credits. So So that's something that goes on.
Yeah, so that's similar to, and,
Right.
and that's similar to what we implemented last year. We had, and this is with YBIO, we had a student in our computer science senior project class who developed some underlying code. Now, one of the things that was notable about it is that he developed the code in Python, which was a language with which he was familiar, and he could develop the code relatively quickly. But the actual implementation of the algorithm and the code itself was done in C++, but the fact that there was working code in Python formed the basis. And so that's also kind of what could happen is that, and I'm really speaking to Black startups, they could approach the senior project instructors at HBCUs and at any institution to see if there was a match between some of the challenges that they may be facing and the skill sets that students might have to devote to that project over an academic year. And as Dr. Massey said, their payment isn't an issue in this regard because the process and the mechanism is already in place, but that directly addresses a couple of the bullet items, which is that these project timelines align with the semester and that there's some clear outcomes that also align with the class grading scheme.
Oh, Todd, I should mention one important dimension of a senior thesis, that after the student is at the end of it, the student writes up a thesis that is published at the university. So it's something it's a document that's available online from the school. So that might get into intellectual property issues. Because the student has to feel like they can work on something they can tell other people about after it's done.
No proprietary, no secret sauce, no Colonel Sanders secret recipe. It has to be fully disclosed. Well, this is blockchain, so we advertise transparency.
Yeah.
All right, so that's the student's perspective. The faculty's perspective has to be considered as well. They have to have a clear understanding of the academic value of what's being asked by the startup, and would there be some potential publications that could result from this work? And then if they're going to invest their time, is their results going to be IP in which they control, or they control it jointly with the startup? So those things certainly have to be defined in advance. And then furthermore, there has to be, and this is similar with the students, there has to be project timelines that are consistent with how faculty operate and their own schedule and their availability. So underlying all of this has to be, and this is from the perspective of the faculty, that this isn't going to be a one-off. There is some value in investing time in this thread that could provide some return for future research, collaborations, or competition or compensation. So let's just kind of open up and get some thoughts around that. Professor Massey, this time.
Oh, well, one thing it just occurred to me that from the company's perspective, okay, let's just say for sake of argument, the senior thesis is due like April 15th, right? And so if you want that student involved to keep working on that project after April 15th, you better be informing him that either there's a summer job or a full-time job waiting for him, starting that summer. Okay, so that's when you would have to hire the person, or maybe you had them working the summer before just to get them, primed to jump into the project. So that's the only way you can really extend the relationship. The only other way is to have someone in the company who's helping out the student and shadowing what the student does, with the understanding that this person takes over whatever the student did after April 15th.
Deidre.
I think in an ideal world, in perfectly neat world, that would work. But in reality, to give you an idea of what's happening in the blockchain space, at least from the mainstream perspective, the projects are just not that neat and not that succinct. For instance, there's a startup called probably the most funded startup, or one of the most funded startups in blockchain, is a venture called Filecoin that is basically incubated by Stanford. Initially funded by, I guess, Stanford, and private equity tied to Stanford. And then during the ICO boom, were able to raise most of their millions. They have 257 million for just that one particular project that was founded probably around 2014, 2015. They have yet to launch. As a matter of fact, this past August, they were supposed to launch some component. I was trying to look it up just right now. They may have launched a partial launch, but that's how long of a window you're talking about. And it's important to note that Filecoin is a copy, basically, of a Black startup with Sean Wilkinson out of Morehouse. I think he's originally from the West Coast, but he graduated from Morehouse. Storage was his decentralized storage provider, was the first actual property of its kind in blockchain. And they were working with, continue working with 33 million, and most of that 33 million didn't come from us. So that leaves, basically Sean, who I don't know and I've not talked to, but I've worked at a number of corporations to know, in corporate America as well as startups, to know that, if you're not getting the cheese from your own community, you're basically trying to fight to stay in your own startup. And that goes for anybody. It goes between the white guys too. You come to the table and you're kind of a white guy out of the Ivy League group, you're gonna have to fight to stay in your own startup. If that Ivy League money comes in there and they want to replace you. So I don't think things are so neat and so precise that we can honestly and be honest and say to a student that, within this semester, this is what's going to be finalized. And by the time the end of the school year, and we have a job waiting for you. That's just not realistic. It's not actually happening now with the most funded startups that are in the space. So I think we need to be honest about setting some, micro objectives, and this is where we want to be at this time, and meeting objectives, and then realizing that the state of, technology, blockchain development is not so neat. The platforms that we have to work with are still in its infancy. We're really talking about, the early days of the .com at this point. We don't even know who's going to last. We just know who's funded very well. And it's always the same type of companies that are coming out of Stanford, Berkeley, and MIT for the most part, that are very cash rich. And they are not on this type of time schedule with their own projects. They're developing, they're marketing, they're speaking all over the place in every single conference. But in terms of actually deploying something that's working, they're not that deep. So I think we have to realistically look and say, what are we going to borrow from Silicon Valley and what are we going to toss out? Because we don't have as much time to waste. We certainly don't have the funding. But you have to at least let faculty and students both know that it's not that neat. We're not Panasonic. We're not IBM. This is a whole different wing of startups that people are learning by doing. You have to be realistic, and you have to celebrate the small victories that you have and be able to leverage that. And I wanted to bring about something that Professor Massey said, that, Mouthspell actually encourages students to, they started a series of conferences called Reimagine. The first Reimagine series is in May. The second one was this past August, and they're preparing for September. They're actually encouraging students to come to the table and talk about what they're working on in a conference type thing. And the billing of the conference is not just students, but also the heads of so the kids have bragging rights. They can say, I was on a panel with Vitalik Buterin in the 2020 August conference or whatever. But basically they're just saying, what are you working on? What are you doing? What did you learn? Because it's an informal way of education. Somebody is going to stumble upon the video at some point and see a name, see a Black face or, white face or Asian face, and know that this person is trying to work within this paradigm. So there are speaking opportunities. I know I've been asked by Tastemakers Africa to speak for them, and I'm moving forward. That's going to happen more often where I can recommend people to come speak at a very non-technical crowd. So we like to see more diversity and more faculty as well as students, not just everyone hearing from me all the time, but we like to say, Professor Shern, this is Professor Massey, this is what they're working on, this is what they're doing in the blockchain space, so that people can see that we're actually working in this paradigm.
Yeah, I think just to add a bit, in our case, what we did is we leveraged open source. So we took the Bitcoin source code and forked it as the MIT license, which is a license that allows you to use intellectual property as long as you acknowledge the previous set of developers. And that really allowed us to skip the need of huge amounts of funding for research and development and just leverage a tool that's already working. And then we went to Professor Shern at Howard, and he's able to connect us to a student that he mentioned earlier that was able to develop the algorithm in Python, which Tim later took and converted into C++. Of course, the thing that we're missing that we alluded to earlier is actually building the mathematical components from ground up. Professor Massey mentioned he's done a lot of work with queuing theory. Blockchain uses queuing theory. So we would have certainly benefited from his insight in terms of improving the algorithm that is already deployed. So there are certain trade-offs that exist because of having to go to this model that are able to move quickly and cheaply, but we also don't have the benefit of accessing to universities like Princeton, where you find these origins of applied mathematical theories and so on. So for me, looking at this collaboration, I think what's missing other than the socialization of Black students to become innovators is also access to sort of, if I can call it the Ivy League database of information on this subject already exists. So I think that's something that maybe I can ask Professor Massey how we can also, just on that precisely engage with him and university such as Princeton.
Well, things are literally changing as we're speaking. Because, for example, 7 months ago, I had never taught a course on Zoom. And so this technology is gonna be a game changer. I don't think we yet understand all the things you can do. For example, I was talking to some Black students at Princeton a couple months ago, and I told them that I gave them some numbers like if you divide 6,000 by 400, you get 15. Okay. Well, what does that mean? Okay. Well, 6,000 is probably a good upper bound on the number of Black alums of Princeton University. 400 is about the number of current Black students. So if I told them if each one of you just contacted a Black alum by Zoom and then record the conversation, just do that one alum once a week. Well, by the time the school year is over, you could have a complete oral history of free. Okay. Okay, but before Zoom technology, it's not clear how you could have done that. Okay, so I think a lot of, so it is possible to communicate with people literally all around the world, with Zoom in a way you could not have imagined, just, 7 months ago.
Yeah, definitely. I think it has also allowed us to connect. This would not have been easy without Zoom. So that is very, very true. I think for Deidre, Deidre has actually been helping us on our project, highlighting it in terms of the spaces that she's on, and really trying to get people interested now as contributors. So you talked about, an alumni of 400 Black students from Princeton. Some of them could be engineers. Deidre, how would you say we can leverage this sort of pool of alumni of Black talent? Because some of the most talented African people would be African Americans, just because of the access you have to institutions in America. So how can we bring all of this together? Work that you've been helping projects like ours gain traction.
I mean, we really need to fund the education, and we've fallen behind. I think part of my background is also ancient African history. So people find my name, they're either going to find it related to cryptocurrency or they're going to find it related to Kemet. Those two worlds of mine kind of remain separate. Water. We need to water our education in blockchain. Right now, Mousefeldt is we're an ambassador of Mousefeldt because they're funded. They have more than $40 million and they give $2.5 million away to students in micropayments to help them fund events. Right now, we're pushing a lot of HBCU students to Mousefeldt, and the reason why we're pushing them to Mousefeldt is because the education is already built out on their website and they're offering it for free. But there's nothing that they're doing that we couldn't do with Black people in cryptocurrency or as an addendum to what they were already doing, especially in support of Wise Protocol and other startups, and get people educated. So we need the alumni of all the universities, the Black alumni, the predominantly white institutions, the white HBCUs, to start and get the fundraising together. And sometimes it's a lot of things is like who you know. I mean, we have a startup, one of the first Black startup founders in the NFT space. If you're not familiar with NFTs, the acronym stands for non-fungible tokens, but what it means is digital collectibles. So think about it as trading cards, stamps, collectibles, that sort of thing, but now in the digital world. So, one of the pioneers in that space happens to be a Black woman who she can't get a meeting anywhere. And she's the first person to offer an NFT, a non-fungible token that is a digital sneaker, a trading sneaker that predominantly white males in the space are buying and exchanging and trading, and it makes her money doing it. Meanwhile, she's basically getting knocked off by Nike and by NBA because she sent her pitch decks to all the right VCs that aren't us, and then those VCs went dark on her, stopped talking to her, and next thing you know, you have Nike making an announcement that they've gotten a patent on NFTs and sneakers. Well, she's the first person to have a working product in the area. So Black startup founders are suffering from being invisible, and we're also suffering because we're losing the war on their education. So if alumni get together across the board and figure out, let's build this out, let's fund it, and let's start educating our people on the technology and all of the different projects that are available, I think we can get back into the game. We're not that far gone. Accelerators have been in the United States only since 2018, but they're funding their initiatives. They're funding their education. they're throwing money left and right. You know, and I understand that, you know, Professor Stern, you know, had a demonstration about credit. That's all well and good. But if I'm a Black student at a predominantly white institution or at an HBCU, and I have limited scholarship, I have limited funds, I'm going to go to Panasonic. I'm going to go to IBM. I'm going to go even to Ripple in our space because they're giving me money. No offense to Wide Protocols, no offense to Black people in cryptocurrencies, no offense to anyone else that's in the space, a startup founder, but I'm not going to spend what little time I have between classes and maybe a part-time job and do something for free because there's no promise or there's no future there. If I work for Panasonic, if I work for IBM, or if I work for any of the corporations that are coming in throwing money at me, I might land a job there. So that's how we end up losing our best and brightest to quote unquote the mainstream, who in the long run don't do them a bit of good. Because in the long run, you have the same complaints that have been going on for almost 50 years of people being isolated. I know because I was a lone duck, so to speak, at a .com. I couldn't pull anybody in, no matter, and I was a production manager. So, and repeatedly, you have the millennials now that are starting at different places like Microsoft and stuff like that. Once things get going real good, and they try to pull in people that they know, you know, they don't even get past HR in terms of diversifying the company. So in order for us to be competitive, we really need to put as much money as possible and start working in education and start working in development.
Well, I would give a quote from, I guess, Ted Turner. He once said, try to make all your mistakes with other people's money. And so, you know, there's something to be said for, you know, working for Google now and getting ideas to implement to some startup you develop later. Deidre,
I would hold up that. I think there's something to be said for that, but to give some perspective to my background, I worked in corporate America with the AIG, corporate insurer with the insurance in the US, and I've been insurer. I worked with a startup. I was a 12-year hire of the which is a precursor to Facebook Marketing. And the Black Planet became this war. And I watched when I was at the startup, I was one of the other people I found this I actually go back to Cornell and graduate. And so the 12 I started and there were at least 250 people in 3 different companies. And the headquarters were based in New York City before I got set up and left. And to say that they were working off other people's money. When they hired me, they had $6 million in full dental and full health. And yet they hadn't graduated from Cornell and they really didn't know what they were doing. So to suggest that the only learning that can be done is to have first work for a Google or Microsoft is kind of untrue. To this day, the 2 founders that I'm talking about, they just went off and started separate companies. I mean, it's almost like I said to one of my friends one time, I said, you know, just once or twice or 3 times, I would love to live white boy free. They get to make mistakes while they leave the company. That's living white boy free. And we've got, in order to be competitive, we have to tap people within our community that are willing to take that chance. Now, does that mean you just do everything your own way and you don't have, you know, boards of advisors and you don't, because they have to report to boards of advisors and stuff of mistakes that we as employees thought were outright foolish, but, you know, people gave them the cheese, they had to bend to what they wanted as well. But, you know, you have to be able to know that you can lead and know that you have the wherewithal to make mistakes. Mark Zuckerberg has made plenty of mistakes, but no one basically says the mistakes that he made has anything to do with his background or his inexperience. And in reality, it probably does have to do with his inexperience. He had the other job. He was straight into leading a company, but they're encouraged to do that. And we've got to have that. We have to have that within our own community. We have to know that it is in our bloodline. We have to know that the oldest universities and schools on this planet are from the African continent, and that nobody taught the kings and queens of Kush or Kemet. No one foreigner taught them how to lead. They learned from the grass up for trial and error, making mistakes, that sort of thing. What can we do better? Learn from the history of the previous rulers and leaders. Some did very well and some completely messed up, but it wasn't because they were Black, whether, they messed up or they did well. So we're going to have that in that community. We're going to have startups that start up and fail. 9 out of 10 white startups fail, and they're led by white men. So we can't expect a different, as soon as something fails and doesn't work well within the Black community, we can't throw it in the towel. But we have to encourage and have a supporting network. And from my background as an educator, as a secondary school educator, I always term in terms of scaffolding. You have to support. You have to support. This is where you're weak. I know somebody. There's somebody in my road. Call this person. You need to fill this hole in before you get in trouble with taxes. Or call this person. You have to scaffold and support and push, because we don't want the dynamic to appear that Black people are nowhere on the global scale. Not on the African continent. Not in the Caribbean. Not in the United States. And right now we're practically nowhere. And we shouldn't be. We've had people within this section since 2009. I can name people from 2009 when Rockland started. There were Black people that were in here, and they stayed here, whereas other people came in later have shot up there. And we can't. That's not sustainable. It's not sustainable. The values. If our startup founders are devalued, then no one takes us seriously.
All right. So I think we are almost out of time. So I would like us to make our closing remarks, and I'll begin with you, Deidra. Just some short closing remarks.
You can find me online. I'm on LinkedIn. My LinkedIn handle is my first name, DEIDRA. Shows how long I've been on LinkedIn. You can connect with me there. As I said, we're looking for funding for not only for ourselves, but for many of the startup founders within our network. Our focus is mainly just to support systems to the startup founders, especially in terms of education. We feel we have the wherewithal and the connections with being connected to John and to Professor Shern, and hopefully in the future, Professor Massey, to be able to support education-wise those engineers as well as lay people who want to enter into the business side of the field. So, feel free to reach out to me, and if you have any questions, and also the group Black People in Cryptocurrency is on Facebook. So, whatever LinkedIn blocks there are, I'm going to min there. You can send me a message there as well.
All right, thank you. Professor Massey, thank you for your participation. Any parting shots that you may give us?
Oh, I should also tell you that aside from what I've been doing in my career, another thing, you'll see this thing in the background called CARMS. That stands for Conference for African American Research in Mathematical Sciences. Something I actually started, I guess, at Bell Laboratories, and then been running it for like 25 years, where it's been sort of a showcase of Black researchers in the mathematical sciences talking about their work. And we've also given opportunities for Black students, primarily grad students, but undergrads and grad students to do poster presentations about their work in the mathematical sciences. I think about 150 of them have gone on to get PhDs in the mathematical sciences. And so things I usually tell them at the end is about how to, think outside the hypercube. That's one of my taglines. Be creative. Also look beyond the silos. It's easy to get into ruts, and it's every type of rut, because if there's anything I saw at Bell Laboratories, I saw how Indian researchers talk to Indian entrepreneurs, talk to Indian VCs. And I have yet to see that type of exchange of information among Black researchers, Black entrepreneurs, and Black VCs. And so we have to learn, develop a common language where we can talk to each other and exchange ideas.
Excellent. Professor Shern?
Oh, Todd, I didn't hear you.
David?
I want to thank
Okay.
everyone for participating. I have a question though. I know this is supposed to be my wrap, so I'm going to save a little of my closing comments and put it to a question to Dr. Massey. I know Princeton hosted CARMS in the past.
Yeah.
Would there be a possibility that something like the Black Blockchain Summit could be hosted at Princeton?
Well, okay.
I mean, post-pandemic. Okay.
Well, exactly. The pandemic stuff, because people keep asking me, I did CARMS 25 years, but not this summer because of the pandemic. It's easy to say it's not now possible because if any conferences are going on now, they're going to have to be online. You know, so a Zoom virtual conference. So for example, CARMS is going to happen next summer, but we're going to plan it as a Zoom conference because there's no telling when there's going to be a vaccine or how soon people will take the vaccine. So,
And I just want
we
to
could
say,
always do. Oh, well, one thing I should mention that, and we've done within the CARMS conference. You know, last time we had like a little mini workshop on data science. You know, there are things going on, you know, blockchain where we could have people talk about the, you know, the mathematical sides of it and how to get more people engaged in it. So, yeah, so there, you know, some form or some dry run of that could be done in the next CARMS.
and I just wanted to say that I wanted to congratulate Professor Massey because he neglected to mention, which I had read, earlier in the summer, that he mentored the Princeton's first African American valedictorian, and he's spoken of highly in the article. I remember reading the article, I think in the beginning, sometime in June or something like that, that Princeton has first African American valedictorian in history, and that Professor Massey was named by that student as being a mentor to him.
Well, I should mention he is African American, but American as in being Canadian. And
Oh no,
but,
black student,
yeah.
black student.
but he made a Farrell video, so he's in there. And also you would have met him at the last CARMS conference. He gave he was one of the many students doing poster presentations.
It's long overdue, and in my country of Egypt, in Rutgers University, we have our first, even as a rival to my undergraduate school, West Virginia University, we have our first school president, Holloway, I think is his last name. So we're making some progress in the education world, and we just need to follow up in the blockchain world.
So that's it for me. Thank you.
Okay, thanks for having me here, Tom.
Yeah, thank you, Professor Massey. Asante sana. Deidre, always wonderful.
All right. That was the University Collaboration Panel at the Black Blockchain Summit. We now move to our next panel, which will be enabling sustainable energy and environmental justice with blockchain technology. And this panel will have Ala Kanani, founder of Satoshi Center, as the moderator. Tumelo Ramaphosa, Chief Executive Officer at Celo Validator. Tasha Makata, Director of Plant Engineering. Adrian Gardner, founder and CEO, the Chain Block Company, LLC. And Telly Unu, Chief Governance Officer at Beyond Capital Markets. So this is a very interesting panel looking at how to use blockchain protocols for sustainability. Personally, I've been working on a blockchain protocol for sustainability called the WIFE protocol. And as you heard the previous panel mention it, so this is an area of personal interest to myself. And I look forward to seeing in the live chat more buzz about this panel. So see you on the other side.
Hello and good morning or good day, everyone, and welcome to the Black Blockchain Summit 2020. And this year, we are coming to you virtual. And today we are talking enabling sustainable energy and environmental justice with blockchain. So I would love to take this time to welcome everyone to the panel. We're going to have a discussion, some kind of talk, some kind of chat. Nothing too complicated. So I guess we'll start by introducing ourselves and looking at the topic. See what you, and I'll say what you understand when we talk sustainable energy and environmental justice, what comes into your mind, and how blockchain can play a part in enabling a sustainable energy and environmental justice. So I would love to kick up the discussion by having Adrian start. I'm going to give you 5 minutes. You say your views, what you think, what comes into your mind when you think energy, environmental justice, and the blockchain. Adrian, and then I have Melo, Tasha, Telly, Virat, and I think it's Eden, if I'm not mistaken. Take this time, introduce yourself, and then get straight into saying what you know or what's your view, what comes into your mind when you hear the topic.
So good morning, my name is Adrian Gardner. I am, I'd say, a 30-year career civil servant with the U.S. government. I retired about a year ago, but my experience spans across FEMA, where I was the Chief Information Officer for the Federal Emergency Management Agency, which is the United States agency that leads all emergency management and response and recovery operations for the country. Prior to that, I was the NASA Goddard Space Flight Center CIO, where I dealt with a lot of the environmental sensing and satellite capabilities around data and the way that the planet has evolved, and been very involved in technology there. And then prior to that, I was the Weather Service Chief Information Officer, where I manage all weather data nationwide and internationally for the U.S. To include interfacing with supercomputing capabilities and the United States model for predicting weather. And then I started my career at the Department of Energy, and I was there for 17 years. And I'm a trained environmental scientist, although I'm an IT tech guy. So the issue of sustainability and environmental justice is near and dear to my heart. When I was with Department of Energy, I was at the beginning of the environmental justice discussion within the United States, where we, Department of Energy and several other agencies began to work along with EPA to look at the issues of the way that a lot of the federal resources were impacting underserved communities and at-risk communities. And so one of the I think the important aspects of today is really looking at where we've come from and where we are today. And one would say that we've made a lot of progress, but then in other aspects, you would say we haven't made any progress at all. Because one of the things that you've seen with COVID-19 is that what's come to the forefront is the social determinants that have impacted Black, brown, yellow people continue to play out as a reality that there are disparities in the way that the pandemic has hit our communities and the way in which it has hit sort of the majority or the white populations within the United States. How does that apply to blockchain? I think it's all about this new normal, right? I think that I would say that there are opportunities to leverage blockchain to empower our communities, both from a standpoint of looking at our finances, because one of the things that I've been communicating to people is that we have to take back our power, right? And part of that is owning our data, owning our information, and owning our resources. And as a system that we don't own, can't manage, can't direct, can't empower or influence, right? And so one of the for us to now begin to take control of the way that we look at the financial health and welfare and sustainability of those communities. And if we begin to pull the power of those communities, I believe that we can empower them. And so one of the things that I did after I left government was I started a nonprofit, which is called the Smart Tech Nexus Foundation, which is focused on empowering communities to empower themselves. Because even from a standpoint of looking at policing, we have the power to police our communities. Now, we have given that that power over to the cities and states and federal government. But at the end of the day, we used to police ourselves. And so we also have to look at how can we begin to look at these institutional organizations, these institutional processes, and bring them back and to the community where the community controls them. So I'll stop there, and then we can have let the other panelists chime in.
Thank you very much for those wonderful points that you brought forward. So I'd love to hear Melo. Melo?
Yes, sorry. Look, on my side, yeah, look, I think the points that you've raised, geez, are very true. I mean, our Black communities, I mean, when you look at us here in Africa, South Africa, yeah, I mean, we've been, you know, incredibly, what can I say, disadvantaged. And I think, you know, we were previously disadvantaged. And I think just now with COVID, it further exacerbates our current situation. And, you know, even when you look at South Africa itself, I mean, around the time just before COVID was, you know, building up and everything, we went into junk status. We went into economic junk status. And, you know, our economy is really been suffering. And look, a lot of people, even in Africa, we look at blockchain as another way out, you know, as a way out for financial freedom, you know, looking for financial inclusion. And that's why even with us these days, that's why we try and involve ourselves with various things that, you know, involve the African financial inclusion, international inclusion, and, you know, in terms of cross-border remittance. So, yeah, coming back to COVID, it's a very interesting thing. You know, what is blockchain doing for COVID? You know, with us, we created a crowdfunding platform and repurposed our technology for crowdfunding to help people accept funds, and you know, to help those in need to try and track it. And you know, as some of you may know, we are in the wildlife and conservation industry, and you know, we've been very negatively impacted because a lot of our revenue comes from ecotourism. So without the international visitors, you know, we've been dearly impacted. So we haven't been able to feed our animals, you know, and we look at the most kind of critical species, which are the rhinos. So we've been trying to, you know, find ways through blockchain to kind of help those different aspects. But I still believe there's great opportunities for more inclusion for Africans, and that could have kind of paved the way and protected us from a lot of the things that are going on right now with COVID.
Okay. Thank you very much, Tumelo. Tasha?
Thank you. I'll start with a brief introduction and then go into my thoughts about blockchain and environmental justice. And if I could touch on the conversation here, I'll attempt to do that. I'm coming at this conversation from a purely technical perspective. My background is over 20-something years in power systems design for mission critical facilities. And I'm currently leading a large engineering team at a renewable energy company to build utility scale solar plants. And so my connection to sustainable energy is about a decade long, where I've built some of the world's largest utility scale solar plants. When I first started building the plants, the largest one is actually in the Mojave Desert, which, you know, from a environmental justice standpoint, is out where economically depressed areas typically are. The tax base is low, the skill set is low in that particular area. I'm currently building utility scale plants, 100 megawatts or better, over in the southeast region, where we're retiring coal-fired plants that have been the neighbors of some of our more economically depressed areas. And so when I think about environmental justice, I think about how we've historically placed these resources, power generating resources, in areas that provided pollutants, took up, I guess, impacted the soil. And, you know, now that a lot of these plants in the southeast are being decommissioned and we're replacing them with solar plants, our firm is actually working on actually recovering the land under the solar panels. So we're using what we call regenerative energy, where we're using sheep and goats and other types of animals to feed on the soils under, or the grass that's planted under the solar panels, to regenerate that agricultural land. So that's what I think about when I think about, you know, environmental justice, removing the pollutants from our depressed communities, bringing in a strong tax base with these utility scale plants, giving opportunities and jobs to economically depressed communities. Now, as it relates to blockchain, I think that blockchain is, as it relates to what I discussed, it's the next frontier. You know, blockchain overlaid with our energy system facilitates peer-to-peer energy trading. You know, a lot of my work in the past has not only been on utility scale, but also distributed generation sites. So I've designed systems that sit on buildings in metropolitan areas. And these buildings are basically forming virtual power plants, where the energy is being generated and sold back to the grid, or aggregated even through technology and sold back to the grid. I think the next step is for the individual owners of these houses, buildings, whatever, to be able to sell the energy through blockchain mechanism amongst each other. So that's what I think about when I think about the convergence of all these three topics, is basically empowering economically the individuals who have historically had an opportunity to partake in an industry that's been regulated. I believe you're on mute still, Alessandra.
Okay, sorry for that. Thank you very much. And I do really appreciate the points that you raised, and one of them being that, you know, it's how we're going to empower the individuals. So, and we're looking at the theme for the summit, which is essential survivor. You know? So we're going to be looking at this theme and try to see how really we can benefit from, you know, coming up with sustainable solutions, coming up with solutions on the blockchain that will, you know, use the existing infrastructure, you know, to enable us to, you know, have sustainable energy and environmental justice using the blockchain technology. Telly, I would like you to introduce yourself to the people around.
Hi, thank you for having me. So my name is Telly Onu. I actually live in the Caribbean. So when it comes to environmental justice and sustainable energy, it's really very close to home. So I've been at the forefront of digital finance for over 20 years. My background is very multidisciplinary. I'm a digital economist, have been a management consultant for over 20 years. In the last 10, I would have said I've started a journey in terms of decentralizing impact. So along this journey, I have done a number of transformation projects, both at the enterprise level and government. And specifically when we're looking at private sector and economic development and economic governance and reform, environmental justice and sustainability comes to play really strongly. In the last, I would say 5 years, I specialized actually in climate finance, given the fact that, well, living in the Caribbean, if I give you some data points, we are extremely vulnerable as a society, the Caribbean and the Pacific, more so than any of the other countries, you know? So the rise in the whole global warming has caused us to feel the impact more severely than any other. So for us, it is, when we look at environmental justice, we're really looking at survival for us. Because if I put it into numbers, let's start with the most recent, 2019, took us by surprise. We had Hurricane, what was it, Dorian? It hit the Bahamas. I can't tell you how many people died, but the damages were $3.4 billion. Bahamas doesn't even make $3.4 billion. And that is just damages alone. We're now thinking about how do we prevent the risk management to mitigate, and then also adapt. Adaptation costs are very significant. Let's double back and remember Hurricane Katrina back in 2005. It left $125 billion of damages. And that was in New Orleans, and it impacted people, lives, families, damages. So you're looking at catastrophic disasters happening because of global warming and because we are heavily reliant on fossil fuels for energy. So for us, it's how can we then use blockchain, one, to maybe for capital formation, mobilize the financing we need to put us in a pathway for sustainability. So right now, the focus being on the one hand, how do we mitigate the risk of and how do we make ourselves more resilient? So all of this requires significant financing, and I think one of the largest opportunities that blockchain offers us is the ability for us to leverage that mechanism of decentralization that Tasha spoke about. The fact that we're moving from a centralized energy generation to a more decentralized and distributed system. Blockchain can now power that decentralization for us to actually mobilize capital more efficiently. She had mentioned the emergence of markets, new markets. So not just energy markets, but even carbon markets. The fact that we can now analyze data, and from those data points we can see how much carbon emissions that we are putting in the environment, or how much carbon emissions we're saving. We can now create a digital asset out of that commodity and monetize that. The fact that we can, as Camilla pointed out, we can raise funds by leveraging crowdfunding platforms, or even, let's even move it along to more alternative capital markets. So for us to do that, blockchain really provides that framework to help us redesign a financial market infrastructure for it to benefit, for it to benefit us. That's my perspective.
Thank you very much, Telly. It's very impressive. We are discussing a lot of different points in relation to energy and the environment. We're talking about animals, we're talking about technologies that we can be able to implement in order to mitigate some of the problems that we are facing, like climate change and all that. Adrian, before you leave, I'll love maybe for you to discuss as to whether the environment, as we're talking about it today, when we talk about environmental justice. So I want you to discuss that issue of environmental justice. Do we really need the blockchain for us to be able to mitigate this issue of environmental justice?
Of this whole that we need, right? And especially the last speaker, I spent about a year on the ground in the aftermath of Hurricanes Irma and Maria for FEMA, resetting the way that the U.S.
Critical facilities. And I'm currently leading a large engineering team at a renewable energy company to build utility scale solar plants. And so my connection to sustainable energy is about a decade.
Create more sustainable communities and environments, whether they be on a building or in the middle of a country, right? There's opportunities for us to use these technologies, not just blockchain, but then complement it with other technologies in order to create more resilient communities. I think one of the things that I feel is that we have to take advantage of these catastrophic events. We should not build them back the same way that they were. We've got to take advantage of the technologies like blockchain. So when Tasha speaks about, I think about virtual contracts, right? And you could actually create machine-to-machine interactions where those contracts could play out, and you could distribute that energy in a very seamless as well as resilient manner. In other words, if you've lost one portion of the grid, you could use that microgrid technology and microgrids in general to actually then create energy or a backup capability or shift that load, right? And then if you think about financing, all of that is an opportunity for our communities to strengthen themselves. All of that then could begin to address these environmental justice issues that we see, these disparities. And again, one of the things I want to point out is that one of the things that we've been saying is our Black community has a lot of resources. Whether we view it or not, we have a lot of dollars. Now, the question is, how are we going to leverage those dollars together to create more resiliency in those communities that we're concerned about, right? So a lot of the challenges I have, say, are underserved and at risk and disadvantaged. Even within those communities, they have assets. People can be assets. Churches, different institutional mechanisms that the communities actually respect and trust are assets, right? And so the thing is, how do we pool those assets together, create a plan and strategy to implement real time how we're going to strengthen those communities? And I'm saying things can be done right now. So for example, we are working with, in New Orleans, we're working with a couple of the community-based organizations to talk about how to shift, and create opportunities to address food security, because food security is a big issue. It's going to continue to be an issue as this economic downturn continues as a result of COVID and having to take measures from a standpoint of social distancing, shutting down economies. All of those things are impacting the way that our folks are being, are reacting to and surviving these catastrophic events. So I think it is this whole notion of how do all of these technologies and these processes work together to create a whole and create a strategy that can be implemented. And it's not just one technology like blockchain. Again, it can be looking at, how does artificial intelligence and machine learning play in that? Because there's a whole opportunity to now skill up the workforce to actually now be part of this resurgence of these new technologies, which again, they could create more sustainable communities and neighborhoods and individuals. So the whole thing of self-sufficiency, I think, is important, but we have to take our power back. We have to take that back as an individual. We have to take that back as the community. And I'm saying it has to start with us, right? And so we have to change our mindset. The leadership, our Black leadership has to change their mindset. Our individuals have to change their mindsets. Families have to change their mindsets in order to make that a reality. But thank you for letting me have my say before I jumped off. I really appreciate the panelists and thank you each for your perspective.
Thank you very much for your time, and we appreciate all these beautiful discussions and these beautiful points that you came up with. And have a very good day.
All right, take care.
Yes, we continue with our discussion. Dumelo, if you are around, we're talking environmental justice and the blockchain. Does the environment really need the blockchain? Need that?
It just depends in terms of how and in a way do we need the blockchain? Because even on one of our webinars, when was it, last month, when we launched our smart farming platform. So the platform is to enable farmers to have access to international markets, and we basically track all their produce, and then we use a currency to be able to make the international payment. But one of the people on the webinar actually asked and said, "Look, you actually don't need blockchain for this. Why?" And it was actually it was very interesting, and actually it was quite a challenging question. And I gave my team and quite a lot of thought to put into it, and I think coming to your point, do we need blockchain? It just depends on what the real use case is, because even let's say with the architecture of a new system or solution, it needs a problem. So what is the problem at hand? And why we kind of chose the blockchain 4 years ago was to take advantage of the crowdfunding opportunities, was to also take advantage of the transparency and as well as what can I say, the decentralization of information. So and I think also blockchain itself, still being a very new area in the industry, and we're only really starting to realize its true power and capabilities now. Now there's a whole new trend of decentralized finance. And, quite a few years ago, it was all about initial coin offerings and, creating currencies. Now it's about decentralized finance. And I think, I think what's happening is what's supposed to be happening is that the industry itself has evolved and it's evolving and is becoming more decentralized. Practicing the hypothesis of what blockchain is all about is, creating that decentralization of power, that immutability and anonymity of, but also it's about inclusion. So I think if for us, it's trying to get international people involved in our cause for conservation and to try and help us raise funds. We use the blockchain as a method for transparency of where their funds actually went, and the transparency of what we're doing with the funds. So I think from that aspect, maybe we're trying to do something, and we're still trying to learn more in terms of how we could, create more opportunities. I mean, someone mentioned about the carbon tax. We're also quite aware of, and we've looked into different carbon projects on the blockchain where you could take satellite readings and actually now sell that, sell that space, that virtual space on the blockchain. It's something that's very interesting and, directly helps the conservation because it's an environmental factor. So, I kind of go back to, it also depends on the quality of the build of the solution, right? The blockchain is a nice word, it's a nice thing, but how are we actually using it? How are we actually applying it? And so that's why I'm also very reserved. I love blockchain, but I'm also very reserved in terms of where and how we use the blockchain itself. So I think, we should also just be careful because we come also from a time 4 years ago when the blockchain itself was also abused. Just like money, everybody's using money for good and bad. And unfortunately, the blockchain 10 years ago and 4 years ago with the initial coin offerings, the ecosystem was abused to unjustifiably enrich very few, which kind of rotted the entire ecosystem in terms of reputation. So going back, it just depends what is the purpose of it. I mean, I look at, let's say, yourself, Alakanani, is that, you're providing a lot of blockchain inclusion and education in Botswana, in Africa. You become a pioneer to do that, right? You become the Bitcoin lady. In Africa, I've become, the farmer, the Bitcoin farmer, because now I'm giving hope to farmers in the space of, being able to accept and trade internationally to the international market. So that in itself, we have, kind of taken advantage of what's happening in the technology and kind of made the most and the best out of it, and creating that inclusion. And look, to be honest with you, we're not the first or the last people to be in our position. I mean, there's quite a few people who are involved in the blockchain space in Botswana as well, but not as much as and prominently as much as our sister. And because she's a great reference. She's a good reference. There are a lot of scammers out there, so that's also another thing. I mean, people have wasted and abused our this wonderful technology. So I just kind of, it's almost like artificial intelligence. Artificial intelligence is also incredibly powerful, but also very dangerous. If poorly abused and poorly used. So, and I think anything in technology, kind of given the right mindset, the right architecture, to almost build it as you can say perfect as possible, without as much error. So, I mean, I don't know. What do you guys think about that?
Okay, thank you, Tumelo. That's very good. It's very important to know when and when not to use the blockchain technology, and also to be very careful to use it proper, so that it doesn't become abuse. Any tool, whether good or bad, when it's not, any tool, even if it's good, when in the hands of the wrong person, it might not be used properly. Thank you very much, Tilly.
Hi. Okay, so, well, for me, it's a number of things. And I agree with Tumelo. Blockchain by itself solves a lot of problems if it's used right, but it doesn't solve all the problems. For instance, in the space of sustainable justice and sustainable energy, I would say the fundamental building block is data and analytics. Yeah, you can't manage what you can't measure. So to say, oh, blockchain is the, is the shining light, it really is a component of a much larger infrastructure to use. So you need to have requisite types of technologies. You need to kind of leverage, cloud storage. And the reality is, some centralization might be necessary, depending on what the criteria is. So I think it's a combination of both centralized, decentralized, I'll say even more distributed, because this decentralization leads to some models for distribution. Leveraging data, leveraging AI, machine learning, because now we are amassing a lot of data. Blockchain can't handle that kind of data, but we can attest things so that we can see the provenance of where the carbon is. So I can see an application in carbon accounting and energy accounting and stuff like that. We can start tracking, and we can track impact as well very efficiently. So as Tumelo said, transparency, provenance, these things are great. On the other hand, what I see useful blockchain is blockchain fundamentally being a decentralized technology allows, or should I say leverages or accelerates the use case of decentralization, right? So you're moving from centralized power production to decentralized power production. That whole model requires blockchain. They've tried to do it. The reason why we haven't been able to address climate change and impact is because there is a disconnect, huge disconnect, with the people who are dealing with our environment, our custodians for the environment, and all these people. They're not looking at technology, and they're not leveraging the technology to get the data. I keep going to events and we talk about, well, we don't have the data for this. We don't have the data for that. But I mean, for goodness sake, by now, data science and data analytics should be a primary baseline. Then the other thing is, they're distributed. Everybody's creating energy. It means all of us right here could actually be power producers. How do you handle that? Blockchain can definitely support that type of use case in terms of the organization. And if you want to go into it, it facilitates ecosystem models. It facilitates decentralized organizations. So in that context, it allows us to collaborate better without butting each other's heads. Because, we in the Black community, we have a set thing to still, a partnership is a leaky ship. Okay, well, now we have some transparency. So there are no more leakages, when it comes to transacting money and stuff. Then on the other side, you have now efficiency when it comes to payments and transactions, the speed and agility. If we can transact in a much faster pace, that stimulates the economy, right? You see it happening in Kenya, just looking at M-Pesa, not really applied to anything sustainable yet, but then look at what M-Pesa did. Now, when you apply that to now, say, payments for farmers and that sort of thing, it stimulates the economy. So there are certain linkages that might not seem apparent on the surface, but they are apparent. And then now we talk about capital markets. Accelerating capital markets, making it more efficient. The fact that we can start creating new assets. We can tokenize real assets, real commodities. We can offer fractional ownership. it means we can mobilize capital even faster, right? So, you know, people will talk about, oh yeah, SDOs, but there's a real use case. And to be honest, I think developing countries and the Black community, underserved markets, is where the opportunity is. So we have a huge market potential. We're just not focused, unfortunately. So then it comes down to what the other gentleman said. How do we become self-sufficient? And how can we then leverage blockchain for self-sufficiency, right? We need to train, we need to be able to train and understand how these things work together. So no, for me, blockchain alone isn't going to solve the problem. That's why when we mapped out our own model for digital financial market infrastructure, and specifically looking at how it applies to climate finance, we looked at a whole composite of different technologies all working together, you know, in order to create impact and create, should I say, transformational impact, not social impact. I hate the word social impact. No. Transformational impact. It means societies, our people are empowered, right? So, but it does also require people to acquire new skill sets. So I think the way forward is, yes, blockchain is important, but they need to also understand other technologies, other fourth revolution technologies that can work together to really address environmental justice.
Okay, thank you very much, Telly. Good point. We need continuity. We need to work together to pull out resources, to use existing infrastructure, I would say, in order for us to be able to reach what we want to achieve with the blockchain and in energy and in environment. We have Tasha, the last 5 minutes. You can summarize what we are talking about.
Yeah, yeah. Can you guys hear me clearly here? Through my mic?
Yeah, you can.
Okay. Yeah, you know, I agree a lot of what Kelly said and what the gentleman before said in terms of there needs to be a use case for blockchain. I mean, it doesn't solve all the problems, you know, that technology in concert with others should definitely be considered. I agree also with Kelly when she said that blockchain can help facilitate decentralization, especially when it comes to distributed resources and energy specifically. Just using the U.S. Grid infrastructure, the traditional format of the grid infrastructure, we've had utility companies that have built out, you know, our generating plants. They've built out the transmission facilities, and they invest in that based on the rate case or the payments that we as end users pay to them. That investment has slowed down tremendously. There's a lot of conversation about grid modernization at this point. And utilities just have not, you know, made that same degree of investment at the rate that we've needed them to make. And so, you know, just as these distributed resources come online, it's going to take individuals, the people, to really drive, you know, that distribution and that particular technology. And I think blockchain kind of helps facilitate that because now the typical process of investing in distributed resources would be there would be an overhaul, and there would be greater access by the end users to investing in those distributed resources, to monetizing those distributed resources. So it really creates a different funding source than what, you know, the industry has historically, you know, leveraged. I was having a conversation with a friend of mine who's in the renewable energy industry, and she's on the origination side of the house. And we were talking about project finance and traditional funding sources, and how, as it relates to community solar, they just don't, in most cases, have the risk profile to fund, you know, community solar, and how the traditional financing institutions have to come up with a new model to be able to engage and invest. Well, if we do have blockchain, then we won't have those obstacles in place that will help facilitate investment and growth in the distributed energy resource space. So I think the original question was, is blockchain really necessary as it relates to environmental justice? Yes and no. I think that's been stated here. Yes, as it relates to putting the power in the hands of the people, but not necessarily if that's not something that as a crowd, we value per se. So those are essentially my thoughts about blockchain and environmental justice.
Thank you very much. I think we've discussed quite interesting points, and I would love to take this time to thank you for taking your time out of your busy schedules to come and talk about this very important topic which affects all of us. We know we've got challenges in our environment that we need to be addressed. We also have issues of energy. How do we use all these to try and bring sustainability to our people, to bring sustainability to everyone involved. So thank you very much for the points. I believe this it's something we could discuss even more, but because we have very limited time, I will have to take this time to thank you and go and study more, see how we can turn all those challenges that we have for the environment and all these challenges we have on the climate, how we can turn all these into opportunities using the blockchain technology. Maybe next time when we meet, we'll discuss some of the use cases that we have around which try to address this issue that we're discussing today. Have a wonderful time, and thank you very much for your time. Thank you so much, guys.
Thank you very much, Alakanani. That was a great session. We're now preparing to go on to our next session, which is the Bitcoin Hyperwave. This session is being moderated by Alakanani again. And panelists on this session include Tongai Choto, Niall Majok, Leah Wald, and Tony Vase. This is a very interesting session discussing sort of the price behavior of Bitcoin over the years. And it will be interesting to see what these panelists have to say. So I look forward to learning from this session.
It is an interesting topic, and I believe all of us are going to learn from one of us. These are interesting times in crypto. We're seeing a lot of amazing technologies or amazing innovations happening in crypto. Today, we are in the DeFi season. But anyway, we are not into that today. Today, we are going to be looking at another one of the theories, predictions of price, I think so, which is the hyperwave theory. I am not a pro in the theory, and I will love our discussions to be so beautiful in such a way that those who've got much knowledge on it can be able to help us guide this conversation. So I welcome everyone. I want you to take this few minutes to introduce yourself before we can diverge into the topic. I'll start with you, Tongai, and Tongai, Leah will come in, Tony, Niha, and Cora.
All right. Thank you so much, Alakanani. Thank you for having me. It's amazing, and I'm excited to be on the Black Blockchain Summit. I'm here in Harare, Zimbabwe. My name is Tongai Choto. I am the co-founder and lead developer of AfriBlocks.com, which is a global Pan-African freelance network and marketplace. The platform is a platform that connects African professionals with remote jobs across the world, particularly in this time where everyone is working remotely. I'm a software developer, mainly in the financial technology space. That's where I've been working for the past 5 years. And yeah, I'm excited to be here. Thank you.
Thank you so much.
Well, first of all, thank you guys. Oh, sorry. Thank you so much for having us. I remember fondly being at Howard last year. I'm sad that we're not there, but this is incredible that I get to see all your lovely faces. So to all your panelists, thank you guys. I'm excited to be on a panel with you. I co-authored The Hyperwave Theory and the book with my former partner, Tyler Jenks, and Socrates, Tyler Coates. Obviously, the theory was developed by my former partner, Tyler Jenks. So I am beyond honored that this panel exists, that you named it this way, that you guys are joining. Tone is a genius at Hyperwave. So this is just all sorts of cool, I should say. I'm currently the CEO of Valkyrie, just announced. So Valkyrie is an asset management firm. I'm the CEO with co-founder with Stephen McClure, who's the CIO. And we're up to a couple new things. But as per this conversation, we're very focused on ensuring that asset management and wealth management is democratized and able to get to everybody so that everybody can have the appropriate financial planning, weather the storms, also make sure that they're capitalizing on the upside, but that portfolio management and asset management shouldn't just be for the rich. It should be for everybody, and everybody should have access to that. And also have access to safe exposure to Bitcoin through the digital securities and other ways. So thanks for having me.
Hey guys, I guess I'll go next. And it was great being at Howard last year as well, alongside Leah and many others. So this is my second time speaking at the Black Blockchain Summit. I decided to relax a little bit. I couldn't take it staying home for COVID isolation anymore. So I had to go to the West Coast, got out to California. And I'm actually seeing your partner, Leah. I'll be seeing Stephen tomorrow from Valkyrie. So that'll be a good chat. And yeah, huge fan of Hyperwave. It was very interesting listening to Tyler Jenks describe his model of trading what everyone thinks is a bubble in a more mathematical way. And yeah, I've been doing everything I can the last 5 years to just educate people about trading, investing, and try to make it simple for everyone. And almost everything I do is free, just to try to educate people.
Hey guys, definitely glad to meet the rest of you. Last year I was invited to attend, but I couldn't. So this is going to be my first session with the Black Blockchain Summit. It's definitely interesting. My name is Neil Majuk. I'm the founder of Pesabase. I came across Bitcoin in 2013, and it took me about a month to kind of get the feel for the implication of this technology. And so I looked at it and I thought, with my background, I was born in Sudan, I've lived in 3 other countries before I migrated to Australia. It made sense that a technology like this should come into existence and be something, a force for good. And when I looked at it, the question in my mind was more about, could this thing survive the test that it's going to face? not whether the world needed it. There was no doubt that the world needed it. And so, in my opinion, it's only become stronger since. That's an amazing thing. I've watched currencies die even in my own country. And right now, one of them could be dying again. So I do know that humanity, and especially my own fellow Africans, do need a way to preserve their wealth and a way to actually an alternative right from the gated currencies and technologies and systems in their own countries. Sometimes the leaders in any one country are not the best, and people should not really ascribe and be forced to be locked in. We should have an opt-out opportunity. And that's my belief, and that's what made me involved in this technology and why I'm building Fesabase today. It's been exciting. We'll see how we go.
Yeah. Oh, yeah. I was in Africa in March. I was gonna spend 1 to 2 months in Africa, but I had to come back because of COVID. It was just I was gonna meet the Bitcoin community, but I only ended up spending 2 weeks in South Africa, and then I had to come back. So I had to cut my 6 to 7 week trip short, and 2 weeks and was done.
Yeah, I was in Nairobi too myself. My family was supposed to join me in Nairobi in March, but not being a Kenyan citizen, things just went the other way around.
Yeah, I had my flights. I had flights to Nairobi as well, like at the end of March, and I didn't make it.
That would have been great actually to have you there. Let's hope things get better, and let's hope we all run into each other physically again one day.
Yes.
Great to have all of you here. I believe this is an interesting discussion. Like I said, the floor is going to be open for discussion through mode because some of us are really concerned about the theory and how relevant it is. Is the theory relevant to Bitcoin today? Looking at how Bitcoin forming does the theory, the hyperwave theory, relevant. So we are going to ask all of us maybe to jump into the topic. The first thing that you're going to do is talk, what is the hyperwave theory? Maybe I'll start off with Leah, because from my research, I know you are quite a very good proponent of the theory. So maybe if we drive the floor, Leah, we take the first button.
Sure, I'd be happy to. So I think hyperwave theory is actually most pressing now, traditional and Bitcoin, and obviously the coupling and decoupling of both, because hyperwave is based on tectonic shifts of economic disruptions. So hyperwaves happen when, very simply put, huge macroeconomic shifts are happening underway. Now, hyperwaves are a bubble, but not all bubbles are hyperwaves. So the idea behind hyperwave is that bubbles can follow a very specific 7-phase chart pattern. And with that, and knowing those patterns, you're able to invest and also divest accordingly. So I'd say that's the super high level, but I'll throw it on you, Tone, who was the first person to really bring it into the Bitcoin community and greater access. How would you explain it? How do you explain it to your followers?
So the way I explain hyperwave is it's everyone knows what a bubble is, but how do you take advantage of it financially? And you see that typical chart where things start to go up and then they dip and then they make a second high and then they dip again. But what Tyler Jenks did with hyperwave is he put some mathematical rules that gave him clean and clear buying opportunities and exit opportunities. Now, Tyler, because he was an institutional investor, he never really had he was never shorting the market, but the hyperwave allowed him to get out of an asset just in time after a crazy run up. And that's how he was able to exit the Bitcoin trade right at the top. He got out at around $18,000 after the high was around 19,000. and he called the top perfectly thanks to Hyperwave. He just added clear mathematical trading rules to what everyone just calls a bubble without any guideline on how to trade it.
Tongai?
Yeah, you explained it quite well, Tone, because I did computer science and maths, and I'm a really technical person. And what I believe is everything is mathematical. Everything can be explained by maths. So the simplest explanation that you can have to the hyperwave is that all the processes that are going on with the Bitcoin pricing can be calculated. And like you explained, that's how you're able to go out at the right time, go in at the right time, because, you know, particularly because Bitcoin has been really volatile. So that's how, like, in a short explanation, you can, without talking too much about the technicalities, the mathematics, explain how hyperwave can be explained to someone who doesn't know much about mathematics, that, you know, when Bitcoin is going up, it will reach a point where it will start to go down again, and not go down too much, but start to go up again because of the mathematics that happen with people who are trading, with the market, with the supply and demand. So yeah, I think that was a great explanation. And I really do like, you know, all the phases, how you go from phase 1 right up to phase 7, and how all of that can be explained mathematically.
Okay, Neha?
Well, definitely. I would say I'm not really an expert in the wave itself. I kind of am aware of it, but I approached it from a different perspective. I'm not one of those lucky people that sort of knew the top in 2017, even though I'd been in the space since 2013. But one of the things that I did was I sort of searched for people around that had prior experiences. And one of the people that I follow the most is called Peter Brand. He actually tweeted also in December 2017 saying, look, Bitcoin top is in. But at that time, I was too busy partying, so I definitely didn't get out. But let's just say that while I'm grateful, I've since learned and I picked up a lot of information along the way. The biggest benefit that I see from this sort of wave theory, as well as the bubble or whatever you call it, is that it brings in new money, new interest, new attention, and actually wakes up a lot of people that have the skills to make this industry a lot better, to say, hey, what's going on there? And so in my regard, the first time I looked at Bitcoin in 2013 around July, it was just because of that similar, where Mt. Gox got hacked, yes. And I found the fact that some nerds had created a digital currency that was actually worth something was amusing. So I looked at it from a perspective of a nice joke. Then I read about it, and then I just kept reading about it. And then eventually I just had to become part of the community. So in my opinion, every wave, call it a bubble phase or whatever, brings in new talent, new resources, new attention. And it's only good for people that get in. I mean, I wasn't working in the crypto space in between 2013 and 2017. I was a hobbyist, but then from 2017 till now, I'm working the space. So you can say I went from traditional to now crypto. And so all it means is that it's really getting good mind share.
Okay. One of the things that I came across as I was studying the hyperwave, you know, markets tend to follow a certain kind of pattern, like place 4 steps up, I think, and then 3 steps down. Looking at Bitcoin, does it really follow the
Okay, I'll just jump in. I think it does follow the human psychology of greed, fear, euphoria, and the whole works. And so the hyperwave falls along that. I find at first I didn't think so. I mean, I am one of those that I would put my hand up and say maybe 2017 I thought the market had changed. And so I would say that since then I've learned that yes, the market has changed, that it's a lot bigger, but then it's not as big as the bubble made it to be. And so then there was a correction, and now we're basing and we're now growing back to what it used to be, and probably more than that. So let's hope it keeps growing. It's definitely good.
I'll I was gonna say I'll
Okay,
jump
let
in
me-
on this, but go ahead, Akinani.
Okay. Yeah, it looks like some people didn't hear it. So I was saying, as I was studying this theory, one of the market tend to follow a certain like follow according to the theory. Will correct me if I'm wrong. The market will go 4 steps up and then maybe retrace 3 steps down. So I was asking if this is also like relevant to Bitcoin. Does Bitcoin follow the same pattern?
So I would say Bitcoin followed Hyperwave absolutely perfectly on the way up. And it's been following it fairly well on the way down all throughout 2018 and even fairly so in 2019. And I really wish Tyler was still with us to talk about this. But a few years ago, when Tyler and I were discussing it, I referenced the fact that there is a high probability the hyperwave that was calling for Bitcoin to go all the way down to $1,000. And I felt that that is not likely to happen. And the main reason why I was saying it back then is because I was focusing on the hyperwave of the NASDAQ bubble in 2000. And the NASDAQ bubble in 2000 did not fall all the way down to the starting level. So the way hyperwave begins is it establishes a baseline of where the asset is trading for years in very low in consolidation. And for Bitcoin, that was basically below $1,000. And the same thing was happening for NASDAQ prior to the early 1990s. The NASDAQ was basically like the technology stocks were basically just flat. And then they started to rise. And when that hyperwave started to, when the top came in 2000 and the top NASDAQ stocks crashed, the bottom wasn't at the very low level. I forgot what the price point was for the NASDAQ, but it was approximately double where that low area, where that baseline was. In Bitcoin, it's actually debatable where that baseline is. Tyler was putting it around $1,000. You can make an argument that it's closer to 700. You can also make an argument that it's closer to 1,300 because that's where the top was in 2013. And just like with the NASDAQ fell all the way down and it approximately doubled where that baseline was. Now, doubling something sounds a lot, but when you're coming down from a bubble top, it's not that much. So I was anticipating a $1,500 to $2,000 price of Bitcoin, but I said that when Bitcoin was over 15,000. That the bottom in Bitcoin came just above 3,000. So sure, you can say I was off by 40, 50%, or maybe even 100%. But if you look at it from the top, I was only off by about 10%. And the same thing with hyperwave, because of how revolutionary Bitcoin is, just like how revolutionary the internet was. I was telling Tyler that expecting it to come all the way back down as if this technological revolution didn't take place is unlikely. It's not like some company that has competition. This is underlying innovation and technology, and there has to be a premium on that it's not going to go all the way to the bottom.
Yeah, that's a great point. Yeah, if I can just jump in, that's a great point because Bitcoin and blockchain are unique. They are different from other altcoins out there. So if you look at it, like there was that time when there were a lot of these cryptocurrencies coming up, these coins, and almost 90% of them are now went to zero, and they were following that hyperwave. But with Bitcoin, it's a unique technology. Just like when there was the internet bubble, for example, it was way up. Then when it crashed, the way people survived, the way technologies and platforms that survived through that it didn't go necessarily down or to zero. So that's what I think with Bitcoin. It will not go down to zero because it is a strong technology, it has made an impact, and it has survived the test of time. So it will still follow the hyperwave. It will go down and back up, but I don't think, like Tony has mentioned, it will not go down to totally zero as if, no revolution has happened. So yeah, that's a great point there.
Can I add to that? And oh, sorry.
No, go ahead.
Well, it's fascinating. As per your question of does Bitcoin follow, and especially the emotional stages that you could say Jesse Livermore originally talked about. We called in the book specifically that we were in a phase 3 going into a phase 4 for the traditional markets. So that's been very interesting, yet at the same time that we were in a phase 7 all the way down to potentially 1,000 in Bitcoin. So you see this interesting decoupling. And at the same time, as per what both you, Tone, and Choto are saying, is that I completely agree. You're looking at a completely different revolutionary asset class. Now, Tyler did not believe that. He believed that manipulated assets throughout history, looking at precious metals and smaller precious metals like rhodium, have always been thinly traded and manipulated, and they always follow the same rules. Debatably, in March, during both crashes, we could say that maybe it would have wicked down had not BitMEX and other exchanges had certain issues. However, that aside, I do agree with both of you guys that I think we are looking at a very different animal based on very different principles. Because again, I think that the manipulation comes from different situations that, again, due to regulations in the traditional markets and the lack of regulations that we have in Bitcoin, I think provide for also a bit of a wild west frontier that sometimes I think it could diverge a bit on what we would very normally expect from other hyperwave patterns, which I think, as per having all of us on the call, makes it amazing technology and dangerous for the rest of the world, and all of us trying to hodl, trying to know how to trade it as well. It's definitely its own forms of challenges and manipulations for trading or holding as an investment, understanding its value as a store of value.
Okay. Maybe my other question that maybe I'll look at, what is the difference between about a bubble? Are they one and the same thing? Bubble and the.
So the difference between a bubble and hyperwave.
Yeah.
No, God.
Well, in my opinion, I think one of the things that made me join the Bitcoin movement that eventually has become a full industry was this sense of, it's almost like a religion when you think about it. And yes, it's good to have theories around it. But the interesting thing is, there is a point at which also Bitcoin accidentally had over 180 billion Bitcoins injected. And you know what the community did? They just went back, fixed it, and just continued. So they have a set of faith and religious connotations around what it should be, 21 million Bitcoins and the like. And one of the things that made me also choose to actually risk some money in it was that reality that when you join, you kind of feel like the community will always do what it takes to keep it alive. So yes, suddenly there was 180 billion Bitcoin. They went, oops, sorry, if you got any of those Bitcoins, we just have to plug the hole and we have to keep going again. And so the second part was that it's software, and being a tech guy also meant that I believe that people always modify it, will always update it, and it's going to keep up with time. I mean, there's been a lot of backlash along the way, but the reality is it's still with us. It's probably the hardest form of money that has ever existed. And so let's see how it goes. So there's theories around it. One of the things that I like is there's this guy called Bob Lucas that has something called the 4-year journey. And one of the things that he has, he says every 4 years, it will actually bubble up to a certain level, and then it will start correcting. So there's a bit of similarity between that and the hyperwave theory. What I think is that this is a technology that humanity needs. If they didn't need it, it doesn't matter what theory exists, it wouldn't have done anything.
Tony?
Sure, but I believe, and I agree with that. It's and I know Bob Lucas, great guy. And what the question was, the difference between a bubble and a hyperwave, correct?
Yeah, they're different or
so
the same. Yeah.
Yeah. Well, like Leah said in the beginning, all hyperwaves are bubbles, but not all bubbles are hyperwaves. So in order for a bubble to be a hyperwave, it has to fit these mathematical rules. And the starting rule is your asset has to be consolidating at a low price for years before it can begin the hyperwave phase. Like we've seen this with, especially in the crypto space, where an asset shows up and it immediately starts rising exponentially. So that cannot be a hyperwave. So it just goes through its progression. It has to spend years accumulating, and then it has to start rising at a reasonable angle, not too steep. And that usually happens for approximately a year's worth of time. And then it starts to go up at a slightly steeper angle, and that can last usually a little bit shorter, but it doesn't have to. But then you get this phase 4, which is this unreasonably quick exponential rise, and that lasts a short amount of time. Though Tyler never actually put time rules into the equation. It just has to be, it just goes to the operation. The time of phase 4, the exponential blow off top, has to be significantly shorter than all the other phases based on time. And then it has a very short, very quick drop, then a very short, very quick rise that cannot make a new all-time high. And then phase 7 can last technically forever, and it gets canceled if we get back to near the all-time high years to complete a hyperwave, and very, very short.
Awesome. We'll explain. Leah, or
just to add in, I was looking at the chart between a hyperwave and a bubble, and yes, it does have to start, very low. With the hyperwave, we talk about phase 1, 2, up to 7. With the bubble, that's where you can really see it ties more to people's emotions, where there's the stealth phase, the takeoff phase, then there's the first sell-off, people sell off a bit, then it moves on to media attention, enthusiasm, then it moves on to straight greed, where everyone is buying and not, really looking at learning even about the technology. They're just buying, it's just straight greed. And that's when it start to, go back to phase, compared to the hyperwave. That's phase 6. There's a sell-off, a bootstrap, then it goes back to fear. It talks about emotion again. So that's really, a bubble really is about, just people, okay, we can call it, going on with the wave, going on with what they're listening to their peers and so forth. So that's really what happens in a bubble, which is a bit different with the hyperwave, because the hyperwave now it's more mathematics. It's now talking about the asset itself and the history, and what comparing to other assets that have taken the exact same path right from phase 1 to phase 7.
That's really interesting. If I could jump in for a second, and reminds me completely is that the other cryptocurrencies, you could say, couldn't be classified as hyperwaves at all because of their lack of historical time to be able to actually identify that phase 1. The way that I'm thinking about it, given what you're saying, is that not just because Bitcoin has that time in order to form the chart pattern and actually qualify as a hyperwave to begin with, is that it has enough fundamentals and fundamentals that we understand and pillars that you can actually understand what this asset is. I think the rest of the alternative currencies and cryptocurrencies, for the most part, weren't able to establish that sort of, not only just because of the rational exuberance that ended up happening, but also just generally that they don't have the same fundamentals that we do have in Bitcoin that we can identify, that we can understand, and we could pinpoint a value to.
Maybe to make the conversation even more interesting, a little bit more controversial, is it possible for Bitcoin to reach $10 million using the hyperwave theory? Just to make the conversation a bit more interesting and spicy, is it possible?
Oh, is it to me?
Yeah, go ahead. Go ahead,
Leah. I'll go after you.
Yeah.
I do believe so. I think that I actually absolutely believe so. I'll leave it at that. And
And that's yours is the last session.
But at the same time,
In about 3 hours. In about 3 hours.
The hyperwave just gives you a look at what's happening. Bitcoin is going to $10 million. It's not because of hyperwave. It's because Bitcoin is basically dominating global money and global finance. That's going to be the reason that does it. All that hyperwave will say is, if Bitcoin starts to enter another hyperwave, because it clearly had one in 2016, 2017. If Bitcoin is to enter another hyperwave, you know where the baseline is. Phase one is going to be $20,000 line. So from there, that's going to take Bitcoin pretty far. The last hyperwave took Bitcoin from 1,000 to 20,000. So that's a 20x difference. And if our new baseline is at 20,000, if it's a hyperwave of a similar magnitude, then it's 20 times 20, which takes Bitcoin to a $400,000 price, basically. And that's not that close to 10 million, but it's getting us there. Now Bitcoin could have topped way higher. Bitcoin could have topped a little bit lower. So I think that there's going to be another hyperwave in Bitcoin that ends significantly lower than 10 million, probably closer to 1 million or 500,000. But there's nothing stopping Bitcoin from having one after that. So yes, and also Bitcoin can reach those highs without following the rules of a hyperwave, because not every asset rises in hyperwave fashion.
Okay, Tongai, thank you so much.
Yeah, I think it will rise. It will take a long time because remember when we're talking about the hyperwave, that the phase one is really kind of stagnant. It's gradual growth. So when you look at the hyperwave over time, say over 20 years, that's when you start to see that the graph starts to actually get smaller. And you see that it's a steady growth. And I do like what Ton just mentioned around, the last time that it was from 1,000 to around 20,000. I had someone who mentioned something interesting, saying if you just try to have one Bitcoin in your lifetime, just try to have one, there are only 21 million are going to be made, and the values will keep growing up. So you will become one of 21 million in the entire world to own a Bitcoin, and the price will keep going up. So I thought that was interesting. But yeah, I think Bitcoin is going to keep growing up. It's going to take time though to reach amounts like 10 million. But I think in our lifetime we'll probably reach maybe 2.5 million. Yeah, but that's just my opinion.
Well, that definitely depends on what happens with the US dollar as well. But the natural growth is that it's definitely going to continue growing. Those cycles are beneficial to having people become involved in the space. I personally thought that the market had changed in 2017, 2018, only for the correction to tell me, dude, you're wrong. So my opinion is that this is going to happen again because, regardless of hyperwave theory or whatever other theory, I think human nature is the same. We all get in when things get hot, and then we forget to get out fast enough. So I suspect that, yeah, the calculation with hyperwave will probably be validated again, but as well, the centuries-old human greed, fear, and euphoria are just going to play up all over again. And the question is, will it happen in the next year or the next 2 years, the next 3 years? It's just no one knows a specific time, but the industry and the amount of mindshare that the industry has garnered is such that a lot of things will continue to be built, a lot of people and services will continue to be added. And what that means is can only grow. I mean, look at the recent DeFi high. It's just insane. So, it could be the start of another wave, I would say.
Can I add to
Yes, please, go ahead.
I couldn't agree more. Also, just adding to, rather than me just saying, yes, I agree with my own irrational exuberance, I'll try to explain. So as per hyperwave theory, and I think what everybody else is saying here, phase 7 is not invalidated yet. Now, I don't think that we're going to be going down to 1,000. However, it isn't invalidated until we reach a new all-time high. So that is interesting. And also for what you were saying on phase 1, yes, it takes a long time to establish. And actually, if we then break through phase 1 while we're going down phase 7, I don't know why I'm using this, it actually needs to stay there as well for a bit, not just wick. So, and then that would say the hyperwave is done. Now, what's also interesting is the amount of assets that have created a funky hyperwave is what it's called. And that's where right now, which I would see as more probable, is that we could enter another hyperwave without hitting phase 1 and see, well, if we want to just use normal terms, and see another bubble, see another blow off top, see something, but we could be seeing another hyperwave. And it would not surprise me. I do think that I am bullish, and I do think that we will see over time a large price appreciation, but it would not surprise me given how much emotions generally in the markets, but especially in Bitcoin and our enthusiasm and this new asset class, that we see another bubble during our trajectory of rising.
Awesome. This has been a very interesting discussion. I do believe that at the end of the day, we all agree that human nature will always play a role on where the market goes. Theories or not theories, at the end of the day, our nature tends to control, where the whole thing goes. We have come to the end of our discussion, but before we go, I would love to have your final thoughts on whatever that has been discussed, or the last word of that right, every one of us. Just a minute each, just your last thoughts.
Well, yeah. So my final thoughts, what I would say to people is just read a lot, research, before you get into any of these assets, including Bitcoin. Just try to know more information about if you're about to buy, if you're about to make an investment, know what's going on, read the news. Read even Bitcoin white paper on its own so that you understand what you're going through. When people are investing in real estate, in cars, they investigate, but for some reason Bitcoin people don't. I guess because it's technical, but I do advise everyone to listen to conferences like this podcast and just make sure you understand what's going on before you make investments.
I think I'll jump in here and let Lee and Tony close. So on my part, like any good pastor, I'll say, please join the faith. We need you guys to change the world and basically make it so that people don't lose their wealth and people can always have access to their wealth in any jurisdiction, anywhere in the world. To me, that's why I believe in Bitcoin and cryptocurrencies in general. And the ease of that happening means that you cannot go from being wealthy as a family to being poor overnight just because someone decided to change the rules in your country. That's why I'm here.
Yeah, I'll jump in next. We'll let Leah close out. I just want to let people know that before you invest in any asset, you really need to understand why you are investing in that asset. Anyone that's investing in Bitcoin and especially other cryptocurrencies, if your sole purpose for doing so is to get rich, you're going to be very disappointed, because while a lot of people have gotten rich from these assets, those people were able to enter and exit at a very good time. Sometimes it's skill, most of the time it's just luck. And that's why you only hear from those people that made a lot of money. You never really hear from the people that lost a lot of money, because they just don't have a platform to talk to you about their struggles getting through it. And if you are going to get in, you have to understand why, and you got to have a longer time horizon, and you can't get too disappointed, which is also why I only recommend Bitcoin, and I don't recommend anything else in the crypto space, because it's just not sound. It's okay to trade it, but I don't find them good as investment tools. And sure, a lot of us talk about the trading aspect of it, but most people aren't going to do that. So please do your due diligence. Please do a bunch of reading. Please do real research, not just listening to people on Twitter. And don't be scared of new technology and the latest innovations, which is Bitcoin.
Thank you.
I love that. I guess the one thing that I was thinking about the most is just that I think it's important to, following up on Tone, do your research on the people you respect in the space. I think it's easy to just find on Twitter or on news media, any media, celebrity names or anything. But I think generally in life and business, and definitely in this very crowded space, it's very important to make sure that you find advisors, mentors, people you respect, and be able to learn from them, not just all the different noise, all the different things, because I think it can steer you wrong. And on that point, though, I think the Bitcoin community is beautiful, strong, and very supportive. And if there's anything, I've felt extraordinarily supported during this entire journey of trying to learn myself and fumbling and stubbing my toes and everything. So I think that for anyone wanting to get in, which I think that they should, but I think that they should do it cautiously, carefully, meticulously, that they're following people who are giving good advice. And there's definitely a lot of those people in the space, including my brilliant panelists and the moderator.
Thank you so much, guys. You've been a wonderful people. You've been wonderful panel, and we hope we meet when there's no COVID.
Sure.
Next year we'll have a better conference. Thank you very much. Then, very wonderful.
Guys. Good to meet all of you.
Thank you.
Thank you.
All right, that was a really, really great session on the Bitcoin hyperwave, and it was very interesting. I learned quite a bit about, the evolution of Bitcoin. Is it a bubble? Is it a speculative wave? And I think that was really, really interesting. The next session builds on this previous session. We'll be looking at digital assets and building wealth with a focus on DeFi. The moderator will be, once again, Alakanani, and we'll have Roslyn Wanjiru for the second time. She is the Director of Growth and User Acquisitions at Pesabase. And we'll also have Maureen Murat. She's the principal at Crowdy Advisors, and she does a lot of advisory around blockchain assets. And we'll have Jomari, who has built a digital token called Digital Reserve, which he built, and he's a founder of Finite Games. So let's go straight into this panel and enjoy the baraza. Thank you.
So today we are talking digital assets and wealth building. I believe that we've all been watching the space, all what has been happening, with all the talks around DeFi and everything. So today we're going to be looking at how we can build wealth and how we can trade digital assets, but especially focusing on the DeFi. Before we can jump into the topic, it's best that we start off by introducing ourselves so that we can get to know each other, that the discussions go properly after knowing each other. I'm Alakanani, better known as the all the way from Botswana. And welcome to the panel. We can start off by introducing ourselves. We'll start with Nicholas. You can give us a 2 minutes introduction of who you are, where you're coming from. Nicholas, are you there?
Yeah. My name is Nicholas, and for BitHub Africa, I'm an engineer there. I support the servers and the equipment that we use, both on premise and in the cloud. Also do a lot of software support, and generally, mostly in the crypto space, I'm more on the technical side. Though I do follow the markets, maybe a bit of trading, not much. And but yeah, most of my involvement in crypto is more on the technical side of it. Yeah.
All right, thank you so much, Maureen.
Good. Hello, everyone. I'm not sure what time of day you'll be watching this, but hello. My name is Maureen Murat. I am principal at Crowdy Advisors, which is a business consulting firm. For the most part, we do a lot of work with small businesses and entrepreneurs who are looking to raise money via equity and debt crowdfunding. I'm also an attorney, so that kind of feeds some of my work. And I am also an adjunct professor at the University of New Hampshire School of Law, where I teach tokenomics and cryptocurrency regulations and smart cities, smart government. I'm looking forward to this conversation because I think a lot of it will actually help our communities rise, if you will. Thank you for having me.
Thank you so much, Maureen. Jamari?
Yes, good day or evening. My name is Jamari Peterson. I tell people, go remember Jamari on Safari and Ferrari. Jamari, it like helps just a little bit, not even a lot. So it's my background. I was a co-founder of the Quantum Resistant Ledger, which was meant to introduce quantum resistant cryptography into the blockchain space for the future issue of quantum computing breaking the current encryption, which will make the entire networks vulnerable. Currently, I've been working on Finite Games, which is democratizing the approach to esports and layering on an ad tech network using what's called non-fungible tokens. Also designed a proof of stake protocol to facilitate micro lending with the digital reserve that I've recently been working on some new tweaks to hopefully be able to launch it on the Ethernet 2 network when that comes out.
Thanks so much, Rosalie.
Great, thank you so much. Hi to everyone who's watching, and it's a delight, a great honor and a privilege to be able to share insights with you during this conference. The Director of Growth and User acquisitions at Pesabase, which is a payments and remittance solution provider in Africa. And our vision is simply to connect Africa financially so that people don't have to, have so many headaches in terms of just moving money to friends and family across borders. I'm an economist, that's my background, and I've specialized in research in the blockchain space out of a passion to just understand the digital economy and the future of just payments, economy, and especially youth in a context of tech revolving so fast. And, there's a need for us to catch up. There's a need for us to build synergy solutions and being able to create the systems that we as young people will be able to kind of leverage and build upon in the years to come, because at the rate at which things are changing, we can't be comfortable with status quo. So thank you so much. I look forward to having this conversation.
Thank you. Looking forward to having a very productive chat with you. Valerie?
Hello, I'm Valerie Dehia. Happy to be here with you all today. I'm a partner at the law firm Perkins Cooley in the investment management practice, and I represent clients who are looking to issue digital assets that are commodities and oftentimes securities, and helping them solve the regulatory issues around those offerings, and oftentimes figuring out, the utility purpose versus the investment purpose and how to make those things fit seamlessly together. I represent clients in the looking at blockchain in a much broader context, and how it can provide solutions to address some of the issues in the broader financial services sector, whether that's from facilitating payments or reducing time with clearance and settlement type issues. I'm very much looking forward to hearing everyone's thoughts, and I'm happy to be here. And so thanks for having me.
Yep. Thank you so much, Valerie, for honoring the invitation. Thank you so much for all those beautiful introductions, and so beautiful that you're coming from and space in the crypto world. So we are here today, as we said, we are talking DeFi. Maybe the first thing that we would love to ask, and I will, direct this question first to you, Rosalie. What are DeFi? Someone understand out there who's not familiar with what are DeFi?
Yeah, so one of the best examples that I found quite recently being able to explain decentralized finance is the analogy of a barter trade. So think back to the time when people were able to trade, buy and sell their goods across different communities very easily. I mean, if you had your produce from your farm, you had your animals that you wanted to sell, all you had to do was come to a common space, a marketplace, whereby you could agree with someone else that you wanted to exchange these goods and services. And, that was it, actually. But imagine this kind of trade coming into a digital space, whereby you have so many different kinds of tokens, platforms, and exchanges. So for many people who are wondering why, like some tokens are, shooting prices and others are dipping prices so fast, just understand that there's a basic concept of trade. And with this trade, it's going into digital spaces very easily. And instead of physical goods and services like your produce or your animals and things like that, you're dealing with tokens. And that is one of the easiest concepts that I find for people to be able to relate with DeFi, because the more we get into technical aspects, it's just that we're building upon the ability of people being in a position to create value and to make payments, as well as create sustainability in terms of non-fungible tokens and other things like that. But at the heart of it, it's that people are being able to trade their tokens for value, in a nutshell. Yeah.
Thank you so much. I think you really simplified so beautifully. People are taking their tokens for value. Jumari, what can you add on to that?
Yes, I would say when I think about the DeFi or decentralized finance, the thing that I really think about it's the remaking of the financial infrastructure within a context where people are, as she said, are able to directly interact with each other, or at least set a protocol or a method for interacting with each other that they agree with. Over time, our financial systems have been built across disenfranchisement, oppression, around colonialism, around intense capitalism, and has been structured and created this institutional inertia where it has made it difficult for people to be able to chart their own path and methodologies for building wealth. What decentralized finance, or DeFi, is providing is a platform for people to quickly accelerate and evolve what the financial infrastructure looks like that they want to participate in, and find out what fits their risk appetite, what fits their value system, what fits the way that they want to interact with others. Because it's an opt-in type of system, people are choosing systems and infrastructure that's underlying how any transaction is handled that's financial related inside of new and innovative ways. And every week right now, we're hearing about new people approaching it different ways. And you have this massive evolution and speed of what finance is looking like, especially in the DeFi space. So for me, it's the evolution of the infrastructure within a context where you, the individual, are in control of what the new institution of finance looks like.
And can I just add on to what Jamari just raised with regards to kind of the institutionalized systems that oftentimes foreclose opportunity for underrepresented minorities. And when you think about, you go into many urban areas here in the United States and there aren't banks, there are no traditional financial institutions that have a vested interest in those communities. And so oftentimes they are foreclosed from having that upwards mobility. And because of systematized racism, they're foreclosed from being able to actually have access to capital, whether it's to start a business or to buy a house or whatever it is that they may be. So I think that DeFi, kind of going along with what Jamari was saying and what Rosalind was saying, is it's a mechanism for access and for potentially democratizing access and providing access to people who have traditionally been shut out of being able to build wealth and have access to capital.
Not to say that we're there yet in the space, but that's the vision of where we can get.
Actually, I think the most amazing thing about decentralized finance, it gives power to the people, and moving away from the centralized structure whereby you have to incur cost, you have to bear time, and you have to follow through with so many procedures. It's that you're actually giving people that chance to transact without limits of time and cost.
Valerie, maybe to make as a follow-up to what you were discussing before, I call on Maureen. What are the legal issues around DeFi? Some of the legal issues you think that they're around?
I think some of the primary legal issues, aside from all of the regulatory issues, but I think confidence, right? Because what lends confidence to, people look for confidence, and that's what helps perpetuate mass adoption. If I go to Bank of America or a traditional financial institution to take out a loan, I know that there is a process. They know that they are going to be paid back because they've taken some type of collateral interest in something that I have. Whereas when it is completely decentralized, the question you have to figure out, how do you get the same level of security and confidence in the system so that the counterparties don't feel as though their counterparty is exposing them to potential risk and vice versa. I think that's one of the basic things that, still needs some work.
Okay.
And I would definitely.
Maureen,
Sorry, go ahead.
Sorry for that. Yes, I was saying, what are your thoughts on what Valerie has just said?
Well, I definitely agree with Valerie in terms of, the access and those issues that revolve around being able to access it, because, even during this COVID-19 pandemic, there are, I forget what the figure was. It was around 40% of people. I'm based in DC. I think it's about 40 or 42% of people don't have access to steady Wi-Fi, which sounds crazy, right? Because we've been living our lives for the past 6 months online. So access definitely, in my opinion, goes hand in hand the digital divide, I should say, goes hand in hand with the wealth gap divide. But the other, and what Valerie mentioned in terms of regulatory issues, which is, my focus, I guess. One thing I would say is that, yes, decentralized finance is definitely a way to get these digital assets in the hands of people who wouldn't normally have access to them if they went through the traditional route. But at the end of the day, these are still financial instruments, right? And so financial instruments are essentially monetary contracts between people. And so just like Jamari was saying, people can go into these agreements with each other, and they can transact and agree on what the terms are. We still have to take into account that, all of this is going on to, that's built on, the software is built on a blockchain, and we have to be mindful of the data that we put on the blockchain. I won't say what I normally say about it, but, garbage in, garbage out, so we also have to be mindful of that. And I think that's where the regulatory landscape kind of gets a little cloudy, because in one way they do rely on, we are relying on decentralized finance, but then we're also still relying on humans, right? We still need people to be part of this process. And I think we have to be mindful of the people that are part of the process to make this as fair and equitable as possible. Because even though we're talking about Black wealth and all that, also know that a lot of the whales in this, in the crypto whales are not diverse. So there's, when they want to take over, they take over. So we have to be mindful of that. I'll leave it at that.
Okay, awesome. Nicholas, can you throw your menu or two?
I mean, I agree with everybody. The main thing about DeFi, at least in terms of, can you hear me?
Yes, we can hear you.
Okay. All right. So I agree with what everybody's saying. DeFi, it's a question of access. It gives people who normally wouldn't have access to those kind of instruments, they get into the playing field. They get a feel of what it is to participate in this space. So the big thing for me with DeFi right now is just that it gives people who normally wouldn't have access to this kind of financial instruments access. And of course, there are questions about the platforms that we're using in terms of scalability. There are customer-facing kind of interfaces and all that. But I think that comes later. That comes after people realize that this is actually something they can get into without having to ask for somebody else's permission, be it maybe government or even corporations. So yeah, so I pretty much agree with what everybody says. The big thing about DeFi right now is that it gives people who normally wouldn't have access to participate in financial kind of field, that kind of access.
Thank you so much. Nicholas, maybe also, I wanted to make up like a follow-up question. Being a technical guy, how does the DeFi technically work?
Okay, I mean, the thing is, usually the phrase used by most people is that you lock in your funds or your assets, it's collateral, as collateral, and then you can be able to give your collateral, you get access to give access to people in terms of they can borrow from the funds that you've locked in. In other words, you're part of the liquidity. You provide liquidity to whatever platform you're participating in. This happened, of course, the main one being Ethereum. Ethereum is the big one, but there are others coming up. And of course, there's a bit of coding and there's a bit of smart contracts, that sort of thing. But from what I've seen, it's not like it's not accessible to anybody who's willing to learn. And yeah, so the main thing here is that you lock up funds as collateral, which provides liquidity for people who want to borrow, or of course at an interest rate.
Yeah, I'd like to clarify that is one form of the decentralized finance that exists, because there's a lot of different financial tools, instrument protocols that exist. But yes, locking collateral is locking up funds as collateral, then being able to create or mint a new coin or let people borrow what you've locked is one of the primary frameworks right now.
As you're looking, and as we was doing that little of reading on DeFi and all that, I come across a lot of terms: yield farming, liquidity mining, staking, etc., etc. My question, maybe to the followers right now, is it possible to make generational wealth digital assets?
Can you repeat that question?
Instead of, is it possible to make generational wealth with digital assets?
Yeah, can you repeat it?
It's possible.
Is it possible? Yeah.
Right. So
I wanted
my thought
to
on
discuss along those lines. Yeah.
All right. So my thought on that is that it's possible to create generational wealth from these assets, yes. But I'd like to point out the fact that wealth is actually very holistic in the sense that we can't just look at one size fits all or one ticket to complete wealth. There are actually systems that have to be put in place because wealth follows a skill set and a culture that is that can actually be transferred, that can actually handle this wealth and direct it to different resources, give it a purpose. And it's actually not just about having the capital to do things, but the relationships, the structures, and the organizations or the products that we can export, services, and different kind of things that we can put out there as evidences of wealth. So there's financial capital, social capital, intellectual capital, all these other avenues of capital that we can look at and be able to quantify as value that we're being able to create and share out there. So with decentralized and digital tools, it's very possible, because whether you want to talk about people being able to trade, to leverage, and just be able to kind of speculate on digital assets, because whether you want to consider cryptocurrencies alone or various DeFi instruments, it's that people have made quite a lot of wealth in the last 10 years alone. And one of the things that actually surprises me is that people weren't genuinely ready for the cryptocurrency boom, because there are people to date who still just don't understand what these things are about. But it's a learning curve that I would say many people are really being able to benefit from, right? So the more we learn about it first, the more we understand the importance of these tools and these instruments, that's the first step. But in order to understand wealth and generational wealth especially, it's that we need to cross-share the knowledge that we are being able to gather for ourselves and in platforms like these, so that whatever we gain doesn't stand with us, doesn't just stay with us like in silos or pockets of knowledge that are just hidden there. Because one thing that definitely happens when you make your gains, you either want to spend, and that's just really natural habits. But when you're talking about generational wealth, it's that you're looking at something that can be transferred beyond your lifetime and beyond your your existence on earth as it would be. But the fact is that we need to be able to think holistically, in the sense that what am I creating? What am I being able to transfer beyond my comfort zone and beyond my existence, so that another person can be able to pick up and build upon it, do more, step up, level up, and even transfer that beyond themselves. So we need to think even about our communities, about our legacies and things like that. So that, for me, in a nutshell, are some of the thoughts that I do have around creating generational wealth.
And I would just say we've been kind of focusing on during this panel the upside and what we believe is, the potential. There's also that downside. And I think, Rosalind, as you were pointing out about the education and keeping it siloed, people really do need to understand the characteristics of these assets, because they aren't like traditional assets that most people are most familiar with. And that comes with a significant amount of risk. There's downside risk to that. If you don't know what you're leveraging, if you don't know what what you're transacting in. And so I think part of it is making sure that there is a strong educational system around these assets and making sure that people really understand, when they're looking at potentially, putting capital on an exchange and purchasing, a plethora of different tokens. What are those tokens? What's the economics of those tokens? Who's backing those tokens? Are those tokens backed? If something goes awry, if their wallet is hacked or something like that, what recourse do they have? And I think that when you think about the traditional regulatory or the traditional financial services, it's highly regulated. And there's a reason why, because human nature does not change. And depending on your views of human nature, we all know that not everyone is a good actor. And so understanding that the less you understand, the more your risk profile increases and you stand to lose. So I think that it's balancing that out with, understanding that it can also be a detriment if you don't understand it and have an appreciation.
Absolutely. And it's actually a very powerful detriment, because the truth is that people have also lost heavily in the DeFi space. Just by your PIN and your password, you lose everything. Why should that be a reality for so many people? I mean, you can tell people to keep their passwords, protect their PINs, but they will forget something that will cost them heavily. And that's the other aspect of education and even it extends even to regulators, in the sense that you're telling, or rather there's an expectation upon regulators to bring some sort of order to the DeFi space, but how can they regulate what they don't understand? It's already out there in use. So regulators, to an extent, are caught between people are using it and there are all these risks. How do you bring this together? How do you create a safe space? So we do have quite a long way to go, actually, but it's an amazing space in terms of opportunity, because the risks are the same things that will actually push innovators to provide the solutions that people need.
Yeah.
Right. And can I just add, sorry, Jamari, you were going to say something.
Yeah, well, but I'll actually let you go first.
Thanks. I was just going to add on to Valerie and Rosaline's points about education. But the other thing I wanted to mention was, oftentimes when we talk about digital assets, it's kind of like this big word a buzzword that can sometimes come off as very vague. It doesn't mean anything, right? We say it so much, it doesn't mean anything. But I think what we should think about in terms of generational wealth is that digital assets are tied to a physical asset, right? So in many instances. And so generational wealth doesn't necessarily have to always be about finance. You can attach digital assets to real estate. You can attach it to other tangible things. You can attach it to the revenues of a business, not just the thought of, funding or just this money, these millions and billions of dollars. It could be something that's attached to something maybe like a lifestyle business or something like that. I guess I'm just trying to find a way, I think in terms of education and general wealth, is trying to find a way to bring the conversation down to meet people where they are, instead of trying to make it sound like this big, grand, beautiful thing, and that has no downfalls. And thank you, Valerie, for pointing out that there are some disadvantages, right? And that, we can, if we're going to really think about educating our people, then we have to meet them where they are. And I think sometimes when we say all these buzzwords and stuff, we are speaking in silos because we're talking to people who already know. You know what I mean? So that's all I wanted to add.
Yeah.
Okay,
No.
Jamari and then Nicholas.
Yeah. Basically, I guess what I want to speak to is kind of covering some of the things that were just being said. First of all, I know from being on like a few Facebook groups that a lot of times people in our community, when it comes to DeFi, they're just looking for that 10 times, that 1,000 time return without understanding the fundamentals of what they're getting into. So the education piece is important. For example, one of the biggest issues that I kind of see is people talk about, I just made a 10-time return on something, but the volume is extremely low. So it's like, even if you want to exit out of that investment that you made, you're not capable of doing that because the volume of people that's actually trading that asset is insufficient. And then we're not looking enough at, as Maureen was kind of bringing up, the more the other applications of DeFi, there's supply chain related decentralized finance applications that people are building out there, where you can take the inventory that you have and then be able to actually digitize your accounts payable or accounts receivable, and then leverage that for funding now, so you can actually continue with your business at the moment. She mentioned the real estate aspect for fractionalized ownership of homes, being able to be able to instead of doing a typical mortgage through the existing financial system, you could collateralize the digital representation of your home, and then be able to sell all pieces of your home in that way, and then purchase them back as that time comes. And specifically, when we talk about kind of this liquidity part, and we talk about this generational wealth concept. For me, I think it's right now we're building new institutions, new financial system. And a lot of this stuff is being tested, is being verified, is finding out what works. So the risk is very high and the rewards can be high. So yes, we are going to have people establishing new centers and new protocols and new spaces where people have now new wealth, and they're going to be establishing and using that into the future. And for me, I want to make sure our community is informed enough to participate in this space, and also build out protocols and systems that match our interests, so that we're not the ones that's like that come in 3 years, 5 years later after the infrastructure has been built, and we have no say, we have no foot, no real contribution to establish what that next wave of finance looks like. Because I don't think we should be thinking generational wealth at the moment. We should be thinking, how do we establish systems that benefit us? And then those systems are what will benefit our generational wealth going into the future. Because there's things like the liquidity trading, for example, like that you can take massive losses in that because of the volatility of the assets, of digital assets that you're playing with. However, like even just trading between two stable coins, one being the USDT, which would be Tether, which is backed by who knows what fractional reserve of funds, and then maybe DAI, which is the algorithmic stable coin. You can maintain your value and then just be gaining money off of the trading in between those two at what is, I think it's 0.03 or 0.3% is trading fee. You get a fractional percentage of that. That's a DeFi application that isn't as volatile, but you don't get the benefits of those rocket raises of Ethereum's value, or having sushi or whatever the new exotic NFT and liquidity products that's out there. But there are ways of diversifying your risk and being part of the establishment of that new generational institutions that we benefit from. That was long, sorry.
Nick, can you come on board? I'd love to hear your take on generational wealth. Nick? Are you there?
This shown is for 6 months now. Since what, 2000 million? These are very early days. So there's going to be a lot of experimentation. It's going to be a lot of math. I mean, you've seen what the space has right now. A lot of oddly named coins and that sort of thing. So this is very, very early days. Sure, I mean, we've got what, a couple of billion locked up right now. The thing that maybe we should all realize is that the platform is completely raw, I mean, it's almost command line right now. We don't have tools which are accessible to the average person on the street. It's all, you've got to be tech savvy just to participate in there. Others, you're going to lose your shot. I mean, it's happened. I mean, like Rosalind mentioned. So these are early days for DeFi. The main thing is that people are building things, people are trying out new things, and it's open to anybody to participate in this. And this is the main thing, that you can get in and learn what is there and put in what you think your value to others, and yeah, it's not closed. I mean, I mean, the example is you can just walk into any bank and be part of that bank. You know, in this case, literally, you walk into the platform and be part of the platform and participate in the platform and learn what people are doing, innovate in it, you know, all that. So it's still very early days. I mean, I can point to all sorts of deficiencies, but for me, just the fact that it exists and that it's working, that some people are making money out of it, and you know, it's working. So we know it works. So the next step is, okay, so how do we scale this thing? How do we give people access? How do we make applications which are more user friendly, you know, more customer facing sort of things, you know, that sort of thing, you know, that innovating, that is the next step right now. The thing about generational wealth is that's where it's going to come from. That's where the generational wealth is going to be produced from. You know, once people start using it and it's easier to use, it's accessible to a broad base. It of course improves liquidity. It makes it more broadly distributed, and yeah. So my feel on it right now is that we just keep rolling with it. It's there. It's accessible. And now all we need to do is learn. Education is a big thing, like we've all mentioned. Learn how to what it is, how to use it, and then innovate and keep growing with it. Right?
Thank you so much, Nicholas. Maybe to because of time, we're going to have like our last thoughts, our last topic. Is it possible to build wealth using digital assets? So I'd love to start off with Valerie, your closing remark on the topic. And Valerie, Nicholas, Jumari, and Maureen, and I'll end with you, Rosalie. Yeah, start with Valerie, your last remark on the topic.
Okay, sorry, I have some static, so I didn't get the full question, but I'll defer to everyone else to get their opinion so I understand what it was. But my one parting thing today would be to dovetail off something that Maureen raised, and I don't think that it can be. I think it's extremely important that digital assets, it is a very broad term that is applied loosely. And a lot of these assets, the majority of them, they already fit within a very regulated structure here in the United States. And often they're either treated as commodities or securities. And we have very specific regulatory structures around the offering of securities, the trading of securities. And so I think it's really important to understand that while we use this very broad term digital asset, that you have to drill down a bit further because they do fit within specific asset categories already defined by law here in the US. So those are my parting words on the education piece.
Awesome, thanks, Mike. Wonderful. Yeah, Nicholas.
And again, my thoughts on this is like I was saying, is that it gives a lot of people who would normally have access to this kind of thing. If they have access, that's for me that is a really big thing. Of course, there's a lot of things that need to happen here. There's a lot of growth. There's a lot of innovating that needs to happen. And also, like everybody knows, this is an asset, a digital asset. And in Africa, well, this is not, I would say, developed. But what it has done is that a lot of young people, of course, are aware of the crypto space. A lot of them, young people, in our population demographics is all young people. So, and they are aware of it. And it gives them a platform to get in, to participate in this field. And this doesn't require permission either from the government or from corporations or from practically anybody. It doesn't need permission. So, that empowers them. that gives them, they say, okay, I can be part of this. So what do I do? I mean, what do I need to know? Or what do I need, like our company? That's what we do. We train people, they come, we tell them, we help them in any way we can. So for me, it's the big thing here is that it's a platform which gives a lot of young people access to something which they would never have any access to in this space. Thank you.
Awesome. Mari, and then Maureen, and last.
Oh, you said Jamari. Okay, got you. Yes. I'm going to give some of my current things I've been thinking about that I feel are important. That I hear a lot about. One, pay your taxes. Just because it's inside cryptocurrency space. It means that the IRS can't track those ledger transactions. Even mixers aren't necessarily assured. So best if you're trying to do that, you might have zero cash and maybe Monero, but still I would advise you to pay your taxes, because whenever you want to off ramp back into fiat currency, whatever the dollars are, that becomes trackable at that point. So you might need, if you need a good accountant, you can get one. Also be aware of the fact that when you're participating in these spaces, that one of the major friction points right now is gas costs. And that's the cost of actually executing a transaction. So if you're trying to dip your toe in the space and you're trading like $2 and $3 here, currently the gas prices is about $15, $10 for transactions. So you'll be taking a loss on every single trade if you're playing at this moment. And that speaks to the fact that this space still has to grow, that there's still room for scaling up. So you have to look forward to those things. Participate at the infrastructure level of things. Don't just try to go for the fancy exotic new coins. Look for people that do your research, find things that have solid fundamentals that align with your values. Maybe have people that look like you on the team and participate in those projects. And that'll help those projects become more sustainable and grow and provide a better space for everyone. I'll go with that.
Thank you, Jamari. You said some of the things I was going to say, so I'll say one of those things again, because I think repetition is great. Pay your taxes. The IRS is paying attention. In the new 2020 tax form, they ask you about cryptocurrencies specifically, so you want to be mindful of that. But one thing that I'll say, I guess that's my closing words, is that at the end of the day, even though we're talking about creating generational wealth and finding ways to diversify our portfolios and our funds, we also have to be mindful that all these companies that we're investing in or that we are buying their coins and all, they are businesses. They want to make money too. And so we can't just only think about it from a community perspective without thinking about the business side of this, right? And to Jamari's point with the gas, these are all business decisions. Ethereum has been charging gas and they're not going to stop probably, right? So you need to be mindful of not only the educational aspect of it, but the expenses and the business side of how this all works. And one thing I'll also mention lastly is for people to do research on stable coins, because we also have to think about, a lot of these DeFi projects are what they're actually issuing or what they're calling what they're issuing are stable coins, right? And that doesn't necessarily mean that they aren't securities, as Valerie pointed out, but we have to keep in mind of, what laws apply that are in effect now that apply to what we're doing, even though there's not a specific, cryptocurrency related, law, or it doesn't specifically say virtual currency, et cetera. We have to be mindful of the laws that already exist that do govern a lot of what we do. I mean, so I know a lot of the technology is also innovative, but a lot of it is kind of the same, finance, how the finance world works and how we want it to work for us, even with these different innovative technologies, is very similar to the system. Now we're just trying to find a way to make it more, equitable, accessible, etc. So I encourage you, I think Jamari said that already, encourage you to do your research. That's all.
Thank you so much. Roslyn, if you're there.
Yes, thank you so much. My word to all, first of all, is an encouragement that this decentralized finance, DeFi, all these techie terms, let them not intimidate you. Please do not feel scared and feel like it's too much of a mental burden to think about. They're really tools for us. That's the thing. And one of the things that we can best do for ourselves, whether as an innovator or as a common person out there wondering what's all this stuff about tech and too many fancy words, just be mindful that things are changing, not just financially, but on so many levels that we just need to be conscious of where, there's a movement, first of all, fourth industrial revolution, there's a whole other conversation around that. Building wealth generation, people making all these gains. Don't be distracted. Find what is meaningful to you. Use DeFi as a tool, but before you use DeFi as a tool, acquire the right skill set and develop the right mindset for you to have a healthy financial life, because that's literally the beginning of you being able to grow in different financial aspects, whether you want to think about it as an entrepreneur, or as a business owner, or just as an employee, or just someone who just wants to make an extra income, right? But be able to diversify your your extra streams of income, so that you're not just relying on one thing that will keep you going. Because just as each of the panelists has been able to point out, it's that building generational wealth isn't just one size fits all or a magic one that you're gonna wave and wake up rich. No, you need to be able to apply the diligence and the right mindset so that you can grow into it and it doesn't crash you as a person, doesn't crash your community, doesn't crash your business, and you'll be able to benefit and look back from that and be happy with the decisions that you made. So grow emotionally, grow socially, grow professionally, then grow financially. You'll be able to appreciate wealth on a more holistic level. So use DeFi as a tool, grow holistically. Thank you so much.
Thank you very much, guys, for such a wonderful time and for.
All right. That was a great panel on DeFi, which is moderated by Alakanani. We're now moving to the next panel, which is on Lightning and next levels, building on Lightning and next levels. This was moderated by myself, John Karanja. And on this panel, we had Simon Mugo, lead developer at Melanin Solar, Eric Latham from Bitcoin Gift Card, Alex Ofula, lead developer at Bill Murray, Jamal James, lead front-end engineer, Lightning Labs, Eric Martindale, CEO, Fabric Incorporated, and Olaula Osuntukun, also known as Roast Beef, CTO of Lightning Labs. So this particular panel looks at the evolution of Lightning technology and how we can build distributed applications or Lightning applications on top of this new protocol. It's a very interesting hour-long technical session, so I do hope you enjoy it.
Alex Wafula.
All right, thanks, John. So my name is Alex Wafula. I'm a software engineer. Currently I'm working on the I Love Black People platform, which is a product that Bill Murray that basically aims to protect Black people by identifying safe places for them. In terms with my involvement with Lightning, initially when we started this project, we were really looking to have almost cheap to almost no cost remittance transactions back to Africa. So the initial technology we were using was Bitcoin, and we eventually ended up integrating Lightning into a platform to enable transactions back to Africa. So basically that's my role with the Lightning Network to date.
Thank you, Alex. Eric Martindale.
Yeah, so my name is Eric Martindale. I am a software engineer, early adopter of Bitcoin. I've basically been working on extending the Bitcoin protocol since 2013, using the smart contracting capabilities of Bitcoin to extend what's possible with sound money. And yeah, I'm currently with the Fabric protocol, and yeah, I mean, that's pretty much it.
All right, Rusby.
Hey, my name is George Beef, Cucumbers from the internet. My name is Lalo Lunafuku. I'm co-founder CTO of Lightning Labs, working on Bitcoin, development, maybe like 4 or 5 years now. So I kind of work on, all things Lightning, Bitcoin side as well, and typically very involved in research, communication, open source space within the industry stuff.
All right, thank you. Simon?
Simon Mugot. I'm a software engineer. I work at Melanin Solar. We are currently working on a platform that involves energy distribution using the Lightning Network, whereby people can be able to transact energy tokens across Africa. Thank you.
All right, Jamal?
Hey everyone, I'm Jamal James. I am currently a software engineer at Lightning Labs, working with WorkB, and got into Bitcoin class 2017 and began contributing to open source projects in the Lightning space in 2018, and yeah, and then eventually made my way into Lightning Labs and go Lightning.
Yeah, let's do it.
Awesome. So let's help the ordinary person watching the summit understand what exactly Lightning is. So I'd like the Lightning team to just give us a brief description and definition of what Lightning is. And that's for you, Rosbeef and Jamal.
Okay, all right. I guess Jamal, I know it. So people understand Bitcoin kind of has some inherent kind of constraints as far as certain things like throughput. So for example, maybe a block comes every 10 minutes. It can take longer than that. So kind of went to factors that make it a little more difficult. Maybe kind of real-time transactions. And also the case where it's the fees on chain may also be higher than other systems as well. Because it's kind of it's a global system. There's only so much throughput in particular time frame as well, right? So Lightning is basically about kind of creating what people call sometimes the Visa of Bitcoin itself. So it's kind of a payment network on top of Bitcoin actually. So a Lightning channel, or kind of what you have an account on Lightning itself. It's kind of a multi-sig address. So you kind of send coins to a special address, and from that address you can kind of rapidly update your balance off chain. It's really cool because you can then kind of chain the channels, basically create a network of kind of this transportation network itself, similar to the way the internet works as well, right? So Lightning is kind of a low latency, kind of low fee, high volume system on top of Bitcoin itself. Lets you kind of have that low latency type, maybe retail type transaction. So you kind of scan on your phone and instantly send. But also comes with a bunch of other trade-offs as well too. Something people are looking at now to send smaller amounts of of Satoshis or Bitcoin over the internet, and also something that's also starting now becoming kind of a development platform as well. People were able to kind of build by using some of the additional technologies for things like sending payments or sending maybe a memo with the payment. Whereas there's a bunch of other things that we have on top as well. And there's a really big development community around Lightning all around the world. Really, so it's not even just in the US. And I'm really excited to learn more about what we're doing with it as well. So.
All right. I think you just gave us very quickly the Wikipedia.
I don't know how you don't want me to go. Really awesome. Right? So.
Yeah. So Jamal, I know you're working on user experience side, and yes. We can discuss later, the issues there. So what would you add to what?
I just emphasize that I think Lightning enables use cases that are currently not possible in both Bitcoin on-chain as well as fiat currencies. Sending sub-penny transactions instantly anywhere around the world is a huge, asset to have in the tool belt of any developer's use case and building businesses around payments that even, the likes of Visa, MasterCard cannot compete with. So I think that for me is the biggest win. Things like micropayments, streaming payments, those things now become possible, which were not possible yet before. So it's exciting to see, the network grow and to see what developers all across the world are building on Lightning. And I think, the future is bright, and there's a lot more to be done. Myself, like you said, I focus on the user experience or the trying to make it as easy as possible for developers and users to use Lightning and to take advantage of the tooling that's made available. We have some really smart protocol level engineers that do amazing things at the blockchain level with the scripts and all those magic math that they have. So I spend a lot of time focusing on just the users side, the human side of interacting with the network.
All right, awesome. So before we go hyper technical with Eric, I've been working. I've worked with both Alex and Simon, so I know the use cases that both teams are developing are very interesting. So Simon and Alex, in that order, can you describe the opportunities that you're working on that are leveraging Lightning in a bit more detail than you did in your introduction? So we'll start with you, Simon.
Yeah, so what basically we're using Lightning for, it's to make the micropayments. That's where we are mainly focusing on. So this enables anyone using our platform to like distribute energy tokens instantly without waiting for so long. And we have a smart box. It's called the Melanin Smart Box. It uses a Pi. And in this Pi, basically something like this. This is a Pi. So that box, as you can see, it's behind me. So it contains the Lightning node and the WIPE protocol, which is our protocol, which is basically a Bitcoin sidechain. So combining these two enables us to be able to make transactions or micropayments. Since here in Africa, it's hard to find someone doing large transactions of Bitcoin. So for us, using Lightning makes it even more, makes the use case more feasible. And yeah, that's what basically we are doing with it. And that's what we are leveraging from it, yeah.
All right. And Alex, before you go, I was with you and the BitMari team, I think 3 years ago, when we did the first $100 transfer from Nigeria to, was it Zimbabwe, using Lightning?
Yeah.
And that was like the first Lightning transaction in Africa that was cross-border. So can you talk a bit more about that experience and what you guys at BitMari are doing today?
Right. So like I said before, initially when we began our work at BitMari, we had like a Bitcoin wallet back from I think 2015. Then we were building out a remittance platform in Zimbabwe. We ended up linking with one of the banks in Zimbabwe as a cash out center. And Bitcoin was one of the ways we would accept payments for people sending money back to Africa, especially trying to leverage on the low fees and all that. But I think also around the same time we're launching, that's when there are those fluctuations with the transaction fees on the Bitcoin network. So coming in with the Lightning was really a way of trying to sort of not just find a solution to reduce the transaction cost, but also to help build that community and use that opportunity as probably a leading Africa to further leverage cheap transaction solutions for remittances in the country. So on my end, I basically mostly managed a couple of nodes for BitMari back then. Most of them were cloud-based, but we also had Pis just for testing and supporting the network. And we had somebody from Nigeria who was interested in what we are doing, and essentially we'd already linked up with other people and found networks that are enough to support transactions on a network. So that's the first thing we really started trying to use it on a live platform. But of course, as most of you know, we definitely have those usability issues with the Lightning network. And of course, Bitcoin, again, generally with the regular user. So that was really a challenge for us, still kind of is to date. So really it's something we're still hoping to integrate because we would still be having a payment platform in the current system we're building, and we're still hoping to support Bitcoin transactions with the Lightning network.
All right, awesome. I think Alex, you began to unpack sort of the user experience challenges that we have with Lightning, and thankfully we have Jamal and Rospif here. So before we look at those issues, I've seen Eric Martindale on other sort of videos really dive deep into Lightning and talk about the pros and the cons of the system, and also talk about why Fabric OS sort of attacks a different or a particular niche that Lightning is not optimized for. So Eric, maybe now you can just tell us in more detail exactly what's going on and what you think the future for Lightning is going forward.
Yeah, absolutely. So just to kind of recap for everybody, Bitcoin as a system is a periodical system, which every 10 minutes, has a block, which basically encapsulates a miner will encapsulate as many transactions as they feel is profitable for them to include within their effort. And they basically settle the outstanding transactions that have been created within that past 10 minutes or any overflow that were created from the previous periods. So, Bitcoin users, when they're making payments between one another, they create a transaction that includes what's called an encumbrance or a script, a small little portion of a program, and then they hash that system. They broadcast that to the network that is paid to a particular, usually it's a public key or a public key hash. And in the modern iterations of the Bitcoin protocol, a number of different scripts that encumber the spending of those outputs. And those are included within what's called a block. And that's kind of the whole design of the Bitcoin protocol, which is mining of blocks, inclusion of those transactions within those blocks, and then the spendability of those transactions in future blocks. So barring that whole design, the periodicity of the Bitcoin system is approximately once every 10 minutes. At least the protocol is designed to target one every 10 minutes. So we call that the settlement period. In the traditional, well, as long as Bitcoin has been around, 11 years, we call that the settlement period. And while that is superior to pretty much every system that has come before it, whereas you might look at a credit card system or a check clearing system and see a periodicity of, say, 2 or 3 days even, Bitcoin's clearing period is one every 10 minutes. And that's the mathematical design of the system, is to target every 10 minutes the thermodynamic sum of the entire mining network of the Bitcoin protocol, as according to proof of work, will generate a new proof of work. Now, obviously, sometimes that happens every 6 minutes, sometimes that happens every 15 minutes. But all of the transactions that have been created within that window of time, at least with regards to what the miner views as profitable, will be included in that block. Okay, so Bitcoin, as on its own, is what we call a layer 1 system that encapsulates these transactions in the clearing layer. Lightning and to a larger extent, all of the other layer 2 systems. Layer 2 is a description of a system which utilizes these unspent transaction outputs as programs which may or may not run in a higher order system. So these are what we call, from what we call unspent transaction outputs. They are basically inputs into other programs which will or will not compute between these peers. Okay, so these transactions may or may not be shared with the miners. If we share those transactions with miners, we end up with having to pay some fees, but ultimately we get those transactions included in the layer 1 database, which presumably, if Bitcoin succeeds, will be a database which lasts 10,000 years plus, right? These will be transactions that get shared across many nodes in the entire network, included in the database, thermodynamically secured by proof of work, and ultimately settled. However, Lightning and any other layer 2 system makes the presumption that we can share transactions between a smaller subset of peers, just between the operators, that we don't need to settle out. We don't need to pay fees on that higher order chain, on that layer 1 chain, until later, or until we desire that finality, basically. So there's not only Lightning, but several other layer 2 systems that use this transaction finality or computable contract, these encumbrances on the spendability of funds to construct higher order systems. So I work on a system called Fabric, which relies on this mechanic to basically exchange portions of transactions between peers. There are many other systems, for example, a side chain which might have a federation that includes multiple signers on a transaction to deposit and redeem funds like Liquid or any other multi-sig system. These are also typically described as layer 2 systems, but instead of requiring that you have a limited amount of block space, you end up with a system where you have effectively as much bandwidth as you have connectivity, the ability to transact on scales like Visa, MasterCard, etc., where you're talking about tens of thousands of transactions per second, whereas in the layer 1 system, you may have only 20 or 30 transactions per second, depending on the size of your transaction and the size of the available space in the block correspondingly. And blockchains are fundamentally limited by this constraint. So this is the design of Bitcoin, and this is the design of blockchains in general.
All right, that's a really great synopsis. So back to roast beef. Of course, we see a lot of criticisms about the Lightning Network. People say it's always coming, it's always coming. But if you look closely, there's a lot of work going on that people don't see. Yeah. So maybe you can tell us the state of play and what challenges you guys are facing on the different teams that are working on different what you call them, instances of Lightning, different versions of Lightning.
Sure. Yeah, I mean, so, very good question. Because obviously, like, it's an actual system. The system kind of like has certain trade-offs. Maybe like you can see certain particular goals, kind of like for direct line, right? So in the beginning, there's kind of like just the protocols, kind of like just us developers. Maybe there's like us, Lightning that runs LND, blockchain that has C Lightning, and then also Async that has a Clear. We kind of like got together initially. All right, we want this thing. How do you make it work? So kind of like have the process, right? And you're actually like kind of like filling in some of the blanks, part of the goals off the paper. And paper kind of describe things at high level, but not really kind of how do you like page messages, things like that. We had to like go to like the protocol and have things work itself there. But then once that kind of like over running, we kind of like had a number of kind of like other participants starting to work in the ecosystem. So you have like developers making what we call like labs. You have people actually making laws for themselves. You have people maybe like working on kind of like the UI design, UX of actually, how Lightning works itself. Because as y'all mentioned, like up to kind of like additional kind of like things you need to keep track of. So like maybe just on the Coinbase apps like on-chain balance Lightning, you have your off-chain and your on-chain balance as well too, right? What are the other constraints, as far as like Lightning, which we run into is like, in order for you to like receive instantly, you basically need to also kind of like have someone committed that capacity towards you, what we call kind of like an inbound damage, right? Just kind of like a money tube where you're like the more you receive, basically, the more budget you can actually receive, the more you can send, right? We have to kind of like go through a number of like different kind of like techniques to actually like fix what we call kind of like these like bootstrapping issues themselves, right? So like, I feel like the main thing that we kind of focus on usually kind of like making sure people are able to like onboard effectively to Lightning itself is similar at maybe just them like down providing wallet, right? So you could definitely go turn this wallet together. I think like the current generation of wallets are like pretty good as far as where they have different user experience. And if I recommend think of wallets like Breeze or Phoenix, basically kind of have like a more like streamlined user experience for their for like more the average user. Obviously, like another individual can maybe like open their own channel themselves, like go on that, but we're trying to automate away all that infrastructure behind the back end, right? And one other Lightning the time people maybe forget about is like it's actually run by a number of individuals like around the world. So basically everyone's actually running like their own Lightning node, and like that's kind of like that node factory, right? So like I think in the beginning people thought it was going to be like an easy button, like okay, I'll have like my money on Lightning node, hit go and then I'll make money, right? Like that's what everyone wants. They want like the money printing, like software that like doesn't really exist. There's usually some different trade-offs involved there, but that's really kind of tell that to work, right? So one thing we should focus on is actually making sure like the Reddit node kind of like being the backbone of the infrastructure network was actually very like robust, actually very responsive, like reliable itself, right? So we kind of went to like guides for like how do you effectively run a Reddit node, what tools do you need, how do you monitor things like that effectively as well too. What we've seen over time, we kind of like seen like what's emerging as kind of like this like very like large backbone of the network itself. You can kind of imagine maybe there's kind of like merchants and whatever else can connect to this like very like large backbone, like similar to basically like maybe the way like or like like highways like the roads like that as well too. We want to make sure we have like a very strong core of the network together itself. Like if the nodes in the network actually aren't viable themselves, nothing else really works out because like your payments will fail because someone's offline, things like that as well too. We're trying to really work for that core network itself. One thing also that we have the thing is like before now you actually had kind of like a limit on the channel size, so it was kind of like 0.167 satoshis or sorry bitcoins like 0.1 a little bit over 0.4 bitcoin itself. Those are kind of like meant as like in a sense kind of like training wheels. Okay, it's still a little bit experimental. One thing we try to do, we try like make sure we kind of like like under promise over deliver. It's kind of like we're not going to try too much. It's kind of like okay, well don't do big payments yet. So it's kind of like try small and like really work our way up. So at least we kind of like lift this limit. Now you can actually have what we call like Wumbo, which is kind of like a nod to this like SpongeBob meme. People have seen that, which basically means kind of like larger channels essentially, right? Now we can actually have like very large channels maybe between like different exchanges, between different merchants as well, which would really like help things a lot easier because like when you have like larger channels, people kind of like need to like they're a little bit easier to manage as well because like you can say like they get exhausted a little bit less quickly. So that's something that we're working on as well too. So like there's definitely a bunch of different like kind of like layers to the ecosystem, like developers, there's wallets, people like making different games, we're doing kind of like micro platform things like that as well too. One thing that we kind of focus on very early on right now is kind of like making sure we're kind of focusing on the developer. That's kind of like seeing like okay like what would I want to build in like maybe 2 or 3 years? Like what do I need to build right now so I can build that thing in the future? Like my hypothetical developer stuff, right? That's what we're kind of really well because now we have like a very like large community developers all around the world. They have like hackathons, they have like all these hack days. They're really passionate about Lightning itself because now they realize like maybe like what they need for the application isn't like some crazy like smart contract. Maybe they need kind of like abstract away from the payment itself and actually make that reliable and kind of like abstract that away, and then from there on they can do so many other things.
Awesome. So are you saying that it will take 2 to 3 years for Lightning to stabilize?
No,
Simon and Nick can actually deploy the applications in the market.
Sure. I was saying that like in the past, I would try to think 2 to 3 years ahead of like what I would want to build as a developer. Kind of like make sure the API and everything work in place. But I'd say we definitely solved like a number of problems as far as the user experience. I think like number one thing that people were interested in, kind of like the whole thing about okay, well, how do I receive your money initially? I feel like one thing is like you kind of like need to be connected to the network first in order to receive. So we have something called like Lightning Loop, which kind of like lets you effectively like recycle your funds. So like let's say you receive a bunch of money, all of a sudden you can't receive any more, right? So you use something called Loop to effectively kind of like take the cash out of the cash register and like put it into kind of like cold storage somewhere else. This can free up space that you actually have in your channel there, right? And so like, that was one thing we developed and kind of like in Lightning Labs. We were working on a number of like kind of like user experiences as far as like the walls. Basically, people were like, okay, well, why do I have 2 balances? Like, don't I just have 1 balance? Was I'm worried about Bitcoin right now, but okay, well, why can I spend it for Bitcoin? What's the channel? So I think one thing we're working on kind of like really track away from all that stuff itself is to add a lot more automation in the back end. People can just like come up a lot more easily. But I mean, I guess if Alex or whoever else could describe some of the issues that they were having, maybe we can kind of like dive into like what the current like working solution is and kind of like how maybe we're working on fixing these things in the future as well.
All right. So I'll let Alex and Simon describe the issues they're having in the fix or make their suggestions. So over to you, Jamal. Do you think from a user experience point of view that we'll ever have a mobile wallet that's number 1, non-custodial, and number 2, hides all the complexity that Rosnik is talking about in the near future? And how can you help Alex and Simon build that application?
Yeah, definitely. I mean, I think Lalo just mentioned a couple new functionalities that were integrated or introduced into the network more recently that make the feasibility of a kind of easy to use wallet more realistic. You know, things like Wumbo, or basically removing the limit. Also, multipath payments was a big deal. I think in simplifying the user experience, because at this point you really have less to worry. I can't say you don't have to worry about channels, but you have less to worry about channels with multipath payments, because you don't have to keep track of, okay, this is the most I can spend based on the limitations of each channel. Now that payments can go across multiple channels, you basically have the availability to spend up to your full balance in your Lightning wallet. So I think there's still plenty of stuff to be done, but I definitely think you can, looking at wallets like Breeze and Phoenix that make certain trade-offs in order to improve the user experience. Those are great examples of actual products that are usable today that offer a really great user experience, and are non-custodial, so that the users keep control of their funds at all times. So I think we're there today. To be honest with you, I think there's always going to be the balance of trade-off from most custodial to less custodial, or more secure to less secure. It's unavoidable to have those trade-offs, and I think over time we'll sway more to where it's more private, more secure, more non-custodial as time gets better. But I personally think that we have usable products in the market today, and the network is today, as it stands, is fully functional to be able to actually use it for normal people, non-technical folks.
All right. And both of you think that in the near future, we may see that hockey stick growth in terms of user adoption of these wallets that you're talking about, because of the multipath gateway and the Rainbow features, and maybe another feature coming.
Yeah, I definitely think so. I think also kind of like a whole infrastructure is a lot more kind of like mature, and actually like the participants are a lot more mature as well, as far as like their own infrastructure, like how they approach things, how they explain things as well. One thing we've seen like kind of like for Lightning itself, are kind of like people like emerging and kind of doing a lot more kind of like research inside the network itself. So maybe like the back of gift card, maybe they're using something called Stripe. And Stripe actually like pretty cool, because what it does, you can basically pay like on one end like through debit card, and then send payment for you on the other end, right? So maybe merchant like one Lightning themselves, maybe or maybe possibly like they can use that as kind of like another rail. Maybe the merchant itself is actually like effectively on like the US bank system, so you can actually use that stuff to kind of like make like really cool trades. I think you can get a lot more mature. You have other things like gaming as well, if you work on these marketing apps. So things depend exactly like what you're focusing on. I think people are also realizing like maybe there is like one way to present things that works for all these different domains. Maybe like a marketing page, you have like a site, whatever else. I think we're really seeing a lot of kind of like innovation, open source is really cool. You kind of like scratch their own edge, and also kind of like both talk to each other, make sure we're all kind of like work towards the same goal. And that's just like a really cool experience. Maybe you work with people like remotely on GitHub that I've never met before, but they're still helping towards the same goal. Definitely like really cool thing to be working on these days. So.
All right, awesome. So Simon, I've heard you mention Rainbow in the office. And this is to Alex as well. What other issues that we've not discussed do you want to highlight in terms of helping you guys with the applications? Because in Africa, smartphone adoption is increasing rapidly. But even the smartphones that are available are sort of, I would call them the low-powered or low-end smartphones. So these applications need to be really conservative in how they use data and how they secure the keys and so on and so forth. So maybe both of you can highlight, maybe a particular issue that you think is of great concern as far as the evolution of Lightning is concerned.
Yeah, so on our side, I think the major issue, like 2 years ago, we used to have the issue of channels dropping off as you try to transact between two Lightning nodes. But I think that one, the team has worked on it, the Lightning team. They have fixed it in the newer version. So the other major issue which we are facing right now is how fast, as you have seen, we're mostly using Pis, and we know Pis are not as powerful as regular machines. So is there a way the Lightning team is working to make it more optimized for ARM devices?
Yeah, that's a really good question. Which I guess historically, definitely a large portion of nodes today are kind of Raspberry Pi. There's something called Raspberry Pi Boost, which kind of an enthusiast way to kind of get at least we definitely have a lot of nodes and height. I think one thing we're looking at to kind of like improve things a lot is kind of like to move like certain parts of like, pathfinding, kind of like, their operation actually into memory controllers right now. Maybe it's like on disk, maybe like a particular disk, maybe you have like a hard drive, like hard drive, kind of like redundancy purposes. I think that's one thing we're looking at in like the latest release. It's coming pretty soon. For like optimizing that kind of like, latency, like the first payment itself, also kind of like things beyond there. So like, we can definitely optimize the time to kind of like the first payment to going in. The thing we start to do as well is kind of like to have like the clients kind of like retain like more memory of like the path, kind of like a pathfinding attempt. So this is what they're going to do now. They're going to kind of remember, well, the path from like Eric to Jamal was really good. We're going to use that again because maybe like those nodes really good. So you can kind of like build up this like memory over time of like what's going on. You can also eventually even like have it be distributed, so that you basically have like other kind of clients kind of exchanging like what's effectively like traffic information. Okay, oh, that road is closed. So it's really good for those. You can kind of like share that information, basically make pathfinding go a little more smoothly. But obviously, like even once you send the payment out, maybe there's other things pop up. There's things to work on our end. I guess the other thing as well is like many of these apps as well, like Breeze and other like Zap and Android apps as well too. They also run on kind of like Android phones as well, which maybe at times a little more empowered. So I think Breeze in particular has done a lot of work for Neutrino, which is kind of like light client technology. It's like things are working fast. Basically, light client is really good because now you don't really need the entire block on your phone, right? Or it's like obviously that'd be ridiculous. You don't have 300 gigabytes to spare. You got like music and all this other stuff, right? So it makes like store the actual kind of like headers, maybe like a few tens of megabytes, and that makes this thing a lot easier, right? So rather than like someone like waiting, potentially like days or weeks depending on like their hardware, like blockchain, they can do it maybe like 5 minutes or so. And this is another thing we're talking about towards kind of like to improve the onboarding experience, and people have done a lot of work on that itself. And this is also now, so I guess one thing like in the past, it wasn't in like kind of like the main Bitcoin client, like in the Bitcoin core. So I work on BTC by Labs from like another interface of Bitcoin itself. So yeah, I think this is actually going to be the upcoming .2 release of Bitcoin Core or Bitcoin B. Now we actually have to be able to kind of like support these like light clients kind of like a wider scale because like they have like more nodes on the network itself, and like once you have more nodes, you can actually like find more peers more easily as well. So there's some things I think on that end to kind of like run on more low power devices. Obviously, the other thing there like bandwidth. I think that's something that we haven't done as much work historically, just because I used to be I remember there was one time like we were testing our mobile phone, like we were on offsite like Argentina. We're like, oh, we're in San Francisco, we're in Argentina. So like my server and my staff were like, oh, this is really hot. Optimize this, right? I think it's something that shows kind of like the beauty of like having people all around the world to potentially boost. Otherwise, maybe people like have like more like better in the infrastructure, like maybe in the infrastructure for the bank. Maybe we kind of like forget, okay, well, not everyone have like this like 50 meg down, right? Maybe there's gonna be like more latency, there's gonna be more packet drop things, and definitely important thing. Make sure we're always testing around different places in the world, or even if it's like simulate that latency with kind of things like drop packets on the laptop.
All right, Alex. Any question?
Yeah, maybe I think for me it's more of an observation, maybe on something that I've seen probably like happen on with the Lightning Network, and it goes towards developer documentation. So like basically, usually my main role as an engineer, like I do like a lot of integration. So like I tend to know a lot of everything, but not to like I don't know specifics. So like so that I can actually integrate stuff. So something that I found really well with my time from working with the Bitcoin the Bitcoin network and later on starting to work with the Lightning. Like I had like more of a challenge getting into the Bitcoin network and developing for that compared to like when I started with Lightning. So like because I found the initial documentation that was there was like pretty helpful in terms of getting you to a point of getting started and now starting to figure out with debugging stuff compared to like when I got started with Bitcoin. So like I think that's something I'd specifically like to note with the Lightning Network and possibly even like encourage more towards that, and even basically involving developer community more towards improving the documentation around that. So yeah.
Yeah, I'd actually like about what we're working on. Oh, yeah, go ahead.
Yeah, I'd actually like to add that's definitely high on our priority list. I too, as a developer building on top of mostly application level development, having experience building on top of Lightning in multiple projects, definitely felt the pain of getting onboarded and trying to figure out what APIs this was, how to set up a development environment locally. That sidebar, that's actually a reason why I created a developer tool called Polar. I don't know if anyone's familiar with it, but it basically allows you to easily spin up a local Lightning network on your computer in order to write your application against, in order to develop a lot easier. But it's called Polar, Polar, Lightningpolar.com. And So yeah, I created that development tool for developers like myself to ease the experience of building on Lightning. And currently, which is at the top of our list, we're currently working on today, is adding a bunch of additional documentation to sample code and updating the resources available to Lightning developers, specifically around L&D, to be able to get started, to build and communicate with the Lightning node, like how to walk through adding Lightning support to your applications. Also, when you're ready to go to mainnet, adding more best practices and guidelines around security and reliability in order to ensure that when your node is on mainnet, you have actual money living on these servers, that your applications and your machines are secure and possible. So that's definitely high on our list, and we're actively working on that today.
Awesome. So I think let's look now at sort of Eric and what you're doing with Fabric, and I guess Simon can also chip in with the WISE protocol. So it didn't really come out clearly why there's Lightning and then there's a need for other protocols. What gap does Lightning look like it does not fill that you guys are exploring?
Yeah, I guess I'll take off. So Lightning fundamentally attempts to solve the issue with the 10-minute gap between blocks. So it allows you to create instantaneous payments between participants in the network versus having to wait, say, 10 minutes, for example, for a block confirmation. So Lightning allows you to spend these transactions instantaneously, and then if you receive a payment, you can instantaneously say, yeah, okay, this is a valid Bitcoin transaction, and then basically use that commitment, that unspent transaction commitment, to pay another user. One of the things that we at Fabric Labs are most excited about are the ability to pay other members of the network for actual computations. So this can be things like processing some function, storing some data, and then later retrieving that data at some point in the future, let alone basically doing smart contracting. So things like multi-signature, basically saying like multiple people are required for this, for spending these funds, to basically paying for bandwidth. That's another fantastic option. So you might imagine something like the BitTorrent protocol, where you have a file that you're trying to retrieve all of the various components of. So if it's a large file, you might have 1,000 portions, and different portions of that file might be stored by different parts of the network, and you're going to pay other members to deliver that portions of that file to you. So this is a really fantastic use case for layer 2 networks in general. But ultimately, computation as a general idea, this idea that rather than performing all of the computations for a particularly heavy task on your own machine, you might distribute those tasks. You might divide that work up across many different member nodes. And you would use a layer 2 system to pay for other nodes to compute those parts of the computation. So, Fabric is basically trying to address very similar problems to Lightning in general. And in fact, we are compatible with the Lightning network in that we can receive a unspent transaction output from the Lightning network and use it within the Fabric network. But the most important aspect of this is that, if you're not going to settle out to the main chain, you want to be able to reuse those payments in other regards. So maybe I'm downloading this movie and I'm paying for the other nodes in the network to deliver parts of that movie to me. I want to be able to reuse those payments as a provider in the network to download perhaps even the chunks that I don't have because I'm closer to the person who's requesting it. So the main idea is that you're consolidating existing transaction outputs that are not settled on chain across a network of other peers. And Lightning fundamentally addresses the need for instantaneous payment confirmation, whereas what other systems and Fabric in particular attempts to resolve is how do you compute, how do you prove the fact that you have computed the correct solution to some programming or to some computable value, and this is exactly the idea of Fabric at large. So I guess that's pretty much it.
Awesome. So Simon, briefly, how does Wive pertain to Lightning? And full disclosure, I'm also involved in the project, so you can briefly state that. Then we'll welcome Eric later. Simon, you're mute.
What's up, guys? How's everyone doing?
Good. Awesome. So Eric, we'll welcome you in a moment. Simon, continue.
So the main use of the Wive protocol is basically to incentivize people who are deploying the Lightning nodes across Africa using our Melanin Smartbox. So by incentivizing people, you enable them to maintain their nodes, since they know at the end of it, sorry about that, the more active their nodes are, the more rewards they get now from the Wive protocol. And Wive is basically a Bitcoin sidechain, and it works on low power devices like the Pis, which is part of what we're using.
All right, awesome. All right. So Rose, you wanted to say something?
Oh no, sorry, I forgot. I was really...
All right, okay. So Eric, thank you for joining us. Could you briefly talk about what you do? And I know you work on the Bitcoin gift card, how it pertains to Lightning, and what your thoughts are on that.
Sure. So yeah, the project I'm working on is Bitcoin gift card. So it's actually a initiative to turn individuals into Bitcoin ambassadors. The concept is that you yourself are the gift card, and you're giving the gift of your time, and if possible, you're giving the gift of Bitcoin. And you do this through volunteering, and you volunteer wherever you can, but hopefully where it can help people understand how this money is sovereign and how it can help yourself in the community. With that, it leads you to not only build community bonds, but it also builds a structure of, it's an educational moment as well, because you can donate with Bitcoin. The way we are promoting donating Bitcoin is through the Lightning Network, as it just makes, it's closer to real use cases, such as using a Visa payment. So right now, I promote the custodial solutions, such as like Wallet of Satoshi, or maybe the Blue Wallet, just because it makes that much more sense. Because I'm finding that the education side of it is a process. And so it's a huge hurdle to overcome. It's almost a paradigm shift in thinking. But as we go out and volunteer, I think people will also get the idea of, wow, this person spent this time and they're really promoting this idea of Bitcoin to us. To incentivize volunteering, we're setting up a structure and we're creating a store where you can redeem your volunteer hours for actual items in the store. So the only thing, you can't buy anything with cash. The only thing you can redeem is your volunteer hours. And so we hope to create a community where we have artists donating items to the Bitcoin gift card initiative. And then we have volunteers who are able to redeem those items. So you have this circular community of giving and receiving, one of the items is this shirt here, the Bitcoin Volunteer Vote shirt. And that is redeemable now for volunteer hours. So you volunteer for 4 hours, you get a shirt. You got to pay shipping and handling, but that's about it. And the cool thing with the shirt that is here, this is an Ellen URL right here. So we call this the leaky faucet tee. So this just leaks sats. Yeah, and so
can you explain that for them? So like someone like scans the code and they get some issues, or
yeah, it's the Ellen URL, so it's a leaky faucet. It just leaks sats every so often. And if you're familiar with the Ellen Bits project, it's an incredible project. And so yeah, I can program this to. I can program it to leak sats whenever. I can change the intervals, time, month, day. There is a thing where you can write a script and keep scanning this once you get it. Yeah. But whatever. It's get a set off of it. Yeah. But yeah. So that's that. The whole thing. It should be fun. This whole process, volunteering should be fun. Talking about Bitcoin should be fun. Donating should be fun, and we're making this all possible with the Lightning Network, as it makes more sense to an individual to, in their education. I think you get to a point where you start to ask, well, what is the confirmation time? And then you start to ask, well, what is money? But before we get to all that, how about I just give you some Bitcoin? And how about if I can get an army of people being, I like to call them Bitcoin ambassadors, or the Bitcoin gift card, where we go and we vote, and that's the initiative. That's the concept and the goal and hope of the initiative.
Awesome. Thank you, Eric Latham. So I think there's a big sort of controversy on Twitter today about not having enough Black core contributors to the Bitcoin protocol. There doesn't seem to be that problem with the Lightning Network. But how can we get more people, particularly from Africa, involved in contributing either to Bitcoin or to Lightning? I know Simon and we have some other guys in the team. Really, they took about almost 2 years looking at the Bitcoin core code. Same with Alex. So there is a huge sort of learning curve or mountain you need to climb just to get to the point to understand exactly what's going on. So what methodologies do you propose to get people not involved, to volunteer their time as co-contributors? And I'll start with you, Eric Latham, and we'll go around the room.
Again, I believe it's a angle of education. That's the foundation. The why, the who, what, when, where, and whys. And I think once you can solidify why this is important, and also how there's no guarantees in this project. This project works because of the people who work on it. You know, if you're sitting back and you're comfortable and you think you're just going to collect money, good luck with that. You know, this works because people work on it, and we need people with in a good place to work on it as well. And so while I'll be out there volunteering, that is also the message that I'll be sending out to the community, that we need an army of volunteers, we need an army of developers, and it's very important that we have people working on this.
Yeah, Eric Martindale, I'm sure you can chip in as well.
Yeah, absolutely. You know, I really, this has been a long-standing issue between people that are aware of Bitcoin versus people who can contribute to Bitcoin. You know, this is a Maslow's hierarchy of needs, right? So Bitcoin fundamentally was created to address the issues of trust in the central bank issuing money. You know, Satoshi even said that it's an issue. It's trust that we had in the central bank to issue our money and hold the value of that money the history has been full of breaches of that trust. So getting Bitcoin in the hands of people will allow them to overcome their own local needs. So between, acquiring housing to, acquiring food, to ultimately being able to manifest their intellectual capital, of which there is much worldwide, especially the latent capacity of the African continent and people's knowledge being locked up and unable and focused on things like acquiring food and so on. I think getting more Bitcoin in the hands of people is super essential. Not only because it allows them the personal sovereignty, the independence. Having money allows you to have the independence from a government authority or any sort of central bank, but also because it allows them the time, because they no longer have to spend it on other things. They can now spend the time on learning what money is and creating new systems that use, for example, Bitcoin as a prime example. The general thesis, of course, is that the more time you have, the more creative things that you can do with that time. And I think just making sure that people's needs are met is the biggest, most important thing. And just to the other Eric's point, increasing the knowledge and capacity for people to understand what's possible with a digital money, that grows over time. So that's pretty much it.
All right, Rose.
Yeah, I guess the first thing I want to say is I feel like at times people are kind of too tightly coupled to a model like Bitcoin users as a whole with a select few individuals on Twitter as well, just because the nature of Twitter, it's the more engaging thing is probably the more controversial thing. You want to get the retweets, clicks, things like that. So I would say so I think there's definitely a lot more than people think. They're just maybe not as loud. They're still doing their own thing or whatever else. Well, but I'd say definitely important thing is education. So I think that thing as well, maybe trying to have education at the universal for those still going to university, college, or else. Kind of make sure they have a very foundational knowledge they can go off of themselves. Remember when I was in school, I was kind of the crazy Bitcoin kale, kind of Brian, whatever I can do to make the project, the class project somehow with Bitcoin related, class ground at me. So I think it's definitely an important thing there. I think from then, like you're saying as well, I feel now we're kind of seeing Bitcoin become a lot more popular Africa and everywhere else. I think once individuals come have their foot to the door, they'll come they're very cleverly they're grinders, right? They're gonna be like, well, how do things really work? They do what I need to do as well. So I think it's a matter of time, kind of education and acting basically, and we'll just see it go on over time because like Martin was saying, it was kind of initially very a slight group on Twitter or or not Twitter, kind of just very like to keep up community, maybe people themselves were somewhat homogenous as far as it's a person I knew from browse. Then we're trying we'll slowly expand the community to be a global thing because Bitcoin is global. It's not just one country or one industry or something like that. So really I look forward to just having more participants and more people understanding what's going on in the community as well.
All right. I know at least one other Nigerian Bitcoin core contributor. He's called Tim Akimbo. So shout out.
Tim Akimbo. Yeah, exactly. Yeah. So that's what I think. I think as you have more companies, start to in Africa doing Bitcoin, so building the engineers. They're needs a certain kind of thing. Maybe right now they only have a direct need because maybe they're happy working on other things, or maybe they have a more maybe because I think for a while many years it wasn't even possible to basically get a Bitcoin job. Everyone was basically a contributor, kind of do a bunch of stuff. But it wasn't until we got a little more funding that actually have real companies that people actually do things. Then people were able to actually make it to a career. So it's definitely took some time. I think that'll also be the case Nigeria and Africa or wherever else. When you have these companies that get hired engineers, they know what's happening. They got to build the thing, right? Get a lot more deeper, and then from there that'll be it. So I think it'll be a natural progression there of just kind of the access to education, and then well, I got to build the thing. I got to learn how it works. Okay, now I'm a contributor. So.
Amen. Yeah, we need startups. For sure. So
exactly. Yeah. So I think they can definitely be a fuel.
Let's go to Alex and then Simon.
Yeah. So I think I volunteered with a bunch of open source projects probably for the past decade, and something that has always been constant, even just when looking at the presence on a map, is you'll sort of see a lot of presence North America, it will go above to Europe, then Asia, then like Africa will just sort of be there. And like echoing what basically Emma has already said on the call, like I think the education aspect is very important. Like a lot of open source organizations, I think, have been able to get away with the fact that they can just ask for volunteers, and the people who have opportunities to volunteer actually give their time and volunteer. But like when you come to Africa, like I don't think it's just enough to ask for people to volunteer without providing that opportunity to educate as well. So, and with Bitcoin specifically, I think at a very fundamental level, I don't think Bitcoin can actually get away with doing that, because we're really talking about sovereignty and all that. So you actually really need to involve everyone else, and like for the Bitcoin network to succeed, like you need to get more individuals to the network and like get them involved. So I'll really advocate for like especially organizations that have been able to get funding to like invest back in the community, and like create programs whereby like people who are not able to just volunteer their time actually get programs where they can get educated, even to just get to a point of volunteering.
Awesome. Simon? You're mute? You're mute, Simon.
So I think the major challenge about knowing about Bitcoin is something to do with documentation. Unlike what the Lightning team has done, they have like proper documentation as compared to Bitcoin, whereby you have to go through like so many platforms, Bitcoin Talk, you go to Discord, you go to Telegram. Yeah, so I think first of all, you need to like create proper documentation on that. Like for us, our team, what we are doing, everything that we have learned from the building of the OIF protocol, we are now able to like document it and share it with the community, so as to enable them learn like what it takes, or what's the tech behind the Bitcoin which they hear about, or they read in the Twitter, they read in the newspapers. So the other thing is also volunteering from like the bigwigs, people who have been there for the past decade. So if we have like more of such people sharing what they have learned, and maybe volunteering in such events as we're having here at the Black Blockchain Summit. Yeah, so I think volunteering is also play a big part in that, and giving back to the community as well. Yeah.
Awesome. Yeah. Jamal, UX is a very, very huge issue on the continent in Africa. There are very few people who've gone through the modalities of understanding user experience as an app. So, I mean, I wish you could have you, speak to, these sort of guys that we train in the future. But could you sort of tell us from a UX point of view, what are the key things that people should look out for when building these Bitcoin Lightning-based applications?
Yeah, I mean, I definitely can agree with most of the statements here in regards to education being like one of the core things that need to be improved on. But I also think that, if you look at the state of apps today, like if you look at your Android phone or your iPhone or the apps on them, I have 2- and 3-year-olds that can navigate these phones. They didn't read documentation. They can't even read. So it's making the product as intuitive as possible to the humans, not to the machines. So that's got to be a big focus on building products that incorporate Bitcoin and Lightning. Is making them so that they don't need documentation. I mean, that's not to say that documentation doesn't help. I definitely think for like the developer community, documentation is a must-have. For end users or people that are not developers, non-technical, you got to make the product as intuitive as possible. You have to, study, where, simple things just like changing colors of buttons can have big impacts on the usability of a product. So I definitely think from that perspective, incorporating some UX ideas into the applications we build would have a really dramatic impact, as well as word of mouth and speaking about it. I think there's a big hurdle of getting over just even being interested in Bitcoin just simply because of the press and the media and all the negative stuff that you hear about that. So you need your friends or people you trust or communities online that to spread the word, like what Eric Latham was saying. I think that's a great project he's working on in terms of getting people to understand that Bitcoin is not for criminals. You know, the vision of Bitcoin is the power of the people, and that's, you know, a big reason why I'm passionate about it. And I think once most people understand that, you'll get them more interested in understanding and wanting to dive deeper into building as well as using technologies we're all building here.
Awesome. So now let's land this rocket as we make our closing remarks. Maybe you can, give a last thought and also mention the websites or tools that you feel developers and people interested in these technologies can use. And we'll start with you, Jamal.
Sure. Yeah, I mean, I think the reason why I became so interested in Lightning is simply because I feel like it closes the gap from Bitcoin. I mean, in general, I'm a huge fan of Bitcoin itself, and I think it's going to have a huge social impact all across the world. But why I focus on Lightning is primarily because I think it closes the gap of a payments technology, which is how most humans are going to interact with Bitcoin. And I think there's a lot of room for improvement, and I feel like, I can offer some skills in order to help with that improvement. So I think, continuing forward, the sky is bright, and there's a lot that will be accomplished in order to improve the user experience as well as the security and reliability of the Lightning Network itself. And I'm just excited to see what use cases come out of it, because I think, like I said earlier, there's a lot of things that can be done on Lightning that just cannot be done today at all, and no matter what technology is used. So I think the same way we didn't imagine, 12 years ago when iPhone launched, that we would have the power that we have in our pockets today. I'm like, I can't even think about what will be possible 10 years from today with what people can build on Lightning. So, I'm working with Lightning Engineering, so lightning.engineering is where you can find what we're working on, and look out for more on the education side and on the product side there.
Amazing. Alex?
I think for me, like I said before, in terms of making the documentation accessible to developers, I think that's a very important aspect, because something that I get very comfortable with as a systems integrator is that there isn't a lot of friction in terms of the systems interact with, because they've been there for years. But understandably, with how new the relatively new Bitcoin network is, and furthermore Lightning, I think Lightning specifically has made I'll say leaps maybe in terms of being stable and having enough documentation to go through. So I think currently that's something that I'll really applaud towards that end. And I think probably Bitcoin has some catching up to do in terms of making it seem more feasible for people who are on the production side of things versus testing and building things that are on the edge of technology. So I think moving forward, if we can make both platforms more easy to use for people who are just getting started and getting onboarded, I think we can really see a good progress for both platforms.
All right, Simon?
Yeah, so I think documentation, I see everyone is talking about it. So I think that's part of the major big thing. Yeah, also, I'm seeing Roastbeef is working on something, mastering Lightning. I'm still looking forward to that as well. Yeah, so I think for Lightning per se, in terms of the user interface and user experience, I think the major challenge we're facing, if I speak on behalf of my team, is like how to integrate and make the Lightning application more user friendly to someone out there in the village, like without them struggling so much. So I think if we can have like such documentation on how to create such apps, apps simple like the USSD, so if someone can be able to dial a number and do a Lightning transaction, I think those will be good things to see in future. Yeah, and also for those interested in viewing a few materials in regards to blockchain and
Let's go to Eric Latham.
Yeah, it's becoming a dev. It takes a certain aptitude and a tenacity. So I think if you have that tenacity, go for it. But there's also different levels of involvement as well. So there's always just knowing the technology, learning. So teaching people how to use a particular Lightning wallet. And then there's the Raspberry Blitz project that you can get involved with. And Rootsall, the developer of that project, has the Raspberry Blitz for Community software or setup there where you can actually make vouchers with your node and hand them out, and people can just scan the voucher, something similar to the shirt, to onboard them with some sats. So there's the level of just knowing the technology. The next level is maybe running a Lightning node with the Raspberry Blitz project, and then the next level to that is eventually, if you have the aptitude or the tenacity to start coding, because there's days where my node goes down and I'm ready to tear my room apart because I'm resyncing the blockchain for the second time in a month. So, but yeah, just get involved. I like to tell people, just get involved however you can, but it is important to be active. And then you can find me on Twitter for now at I am the character. And once we have the Bitcoin volunteer vote, the store set up, then while you're out volunteering in your community, hit me up, let me know how many, and get something from the store to reward yourself. And let's keep building this community.
Awesome. Eric Martindale.
Yeah, so I really want to double down on the idea that Bitcoin is an alternative to state-backed money, and just reiterate the importance of using Bitcoin as an actual currency. So the idea of building a local economy where rather than just simply selling your goods and services for a local currency, selling those things for Bitcoin is super essential to closing that loop in not only just having access to your local markets where your local government-backed currency might be accepted, but opening it up to a global market and making Bitcoin useful and making Lightning useful with regards to a complete circular economy. So you have the opportunity to open yourself up to a global market, where you might have maybe 1 million or even a couple of 100,000 people that enter in your local economy. You can sell your goods and services for Bitcoin to a global market, which is 7 or 8 billion people now, and you really have the opportunity to close that loop. And then obviously, once that circle is closed, you have the opportunity to move on into other economic effects by simply creating that closed loop economy with a wider market. So I really think that selling your goods and services for Bitcoin is essential, especially with regards to distributing the currency such that it's in the hands of as many people as possible, so that they can go on to participate in the wider economy more globally, which I think will result in the wealth and empowerment of many more people to come. So that's it.
Yeah, shout out to Fabric OS. Where can guys learn more about it?
To Fabric?
Yeah.
Yeah, so Fabric OS is fabric.pub. We're basically building a complete closed loop ecosystem for Bitcoin-based payments and infrastructure. Fabric.pub is the best place to go to learn about that. We've got a privacy-centric application, a user application that members of the chat can actually pay each other to store messages and content. So I would encourage everybody to not only look into the Lightning documentation and the wider Bitcoin ecosystem, but also the systems that can be built with Bitcoin at fabric.pub.
Awesome. So roast beef, strike us with lightning one last time.
All right, I guess I'm closing out. Yeah, I guess I just want to say, like, I'm really happy to hear about like things improve for Alex as far as like, hitting the thing we talked about a few years ago. I just want to say like, like definitely like technology is always like a incremental progress. So if you have kind of these like very like big jumps like in between, if you like really like working for like the individual use case like moving towards somewhat. So I'm just really excited to see where things go, and also to encourage people definitely check out like what's going on in the ecosystem, like contribute to any level like like Eric was saying as well. I guess if you want to check me out on Twitter, I'm twitter.com/beef. My DMs are open, so if you just want to ask me questions or whatever else, I'll get around to eventually. We're also on twitter.com/lightning. That's kind of like us, Lightning Labs, Lightning Engineering, which is really cool to see like people just like work on the technology, like using it as well. And I just like love like feedback, because I feel like you can never like build in a bubble, because otherwise you think it works better than you think it does. You always need to continually get feedback, and always validate yourself. So I'm always like loving to be hearing about different challenges, like how we can solve them, just like see if we can go forward. Because like when I started like a few years ago, it was like, okay, is it gonna work? Like it's just like me and some people in San Francisco in this like co-working spot, and now we've got something here. I think this is really amazing. So looking forward to what we'll see like from here on out. And like I just know that like we can just do so much more together, because people just like really coordinate on this one thing, and it's just really like beautiful to see on the world. So.
Awesome. I remember Lightning Labs and just a desk, 2 desks with 3 people.
Yeah, exactly. You saw us in DG in San Francisco. Yeah, it was just 3 of us, like just grinding there. Like the funny thing is like there's no window, so I didn't even know like what time was. I heard them just grind out code, and it's like 8 p.m. All right, maybe I should guess dinner or something like but we definitely come a long way.
It's a great job, and best of luck certainly to the Lightning team and the rest of you. This has been our amazing Lightning panel. Asanteni sana for gracing us with your excellence. And if you're looking for the future of Bitcoin, Lightning, technology around the world in Africa, watch this panel again and again. And with that, do not forget, Satoshi is black. Thank you. I am John Wanena Karanja. Bye.
Cool. Thanks.
That was the very interesting Lightning panel moderated by myself. To save time, let's immediately go to our next panel, which is Black Wealth Matters. And we'll be having this conversation with Reggie Middleton, as well as Tavonia Evans. Enjoy. Again, this is Black Wealth Matters with Tavonia Evans and Reggie Middleton. Welcome everyone to the 2020 Black Blockchain Summit. Today here with me is Reggie Middleton and Tavonia Evans, and they're going to be speaking about the topic Black Wealth Matters. So hi Reggie and hi Tavonia.
Hi.
How you guys doing?
Great.
Awesome. So I'd like you to take about 2 minutes each to introduce yourselves and what you do and why you think Black Wealth matters.
Okay, ladies first.
Ladies first.
My name is Savannah Evans, and I'm the founder of Blockcoin and Cowrie, the Cowrie Exchange, and New social network. I'm a data scientist, developer, marketer, mom, and a serial entrepreneur, I guess you can say. And I'm sorry, what was the second part of your question? you said to introduce yourself. Yeah, so
yes, and why does Black Wealth matter?
Why does Black Wealth matter? Because number one, it ties into our values. When you look at Black people over the generations, I'm going back generations. We have had a lot of history. Basically, how do you say? I'm sorry, I don't know why I'm like tongue-tied now. But our history is very rich. And we seem to have forgotten how rich our history is, especially in the current times. There's a lot going on in this country. And I think we've been very, very, very distracted from building ourselves up and building our communities up because of course, we've been distracted on purpose. But I think that once we get our values back on track, we'll begin to see pretty much how much of an impact we've made on the entire earth. I'm big on the fact that we are social leaders. We are social, we inspire the world. We inspire the world through music, through art, through creativity, through innovation, and all of these things. And these are some of the most wealthiest things on earth. But yet we haven't quite connected our creativity to that wealth. But I believe that once we start learning more deeply about how wealth is formed and where money comes from and what value is, we'll start to see how wealthy we really are, even despite what's been said about us right now by some of our opposition in this country. We're really a very, very wealthy people, and that's because we're very creative.
Okay. Yes,
thank you, Tavonia. Reggie?
Okay. Reggie Middleton. I can't call myself a serial entrepreneur. I think I had a W-2 for about 9 months coming out of college. And that's about it for the extent of my professional life. I'll be 53 later on this month, just to put that in perspective. I had a .com. I did real estate investment, purchasing real estate. So financial software, real estate crash approached 1 + 1 started to equal 98, which even though I'm not that good at math, I figured out it probably didn't. I sold out of real estate, started shorting everybody who did business with me. Predicted the collapse of Lehman Brothers, Bear Stearns, General Properties, about 85 other calls about banking, real estate, insurance, finance. Shortly after that, the government changed the rules on finance and wealth, basically allowed big companies to cheat. So fundamental analysis didn't work. I caught the Bitcoin bug 2013-ish, about June 2013. And I've been in the blockchain realm space ever since, straddling that and finance, investment, valuation, economics. Founded Boombust blog, which was my advisory business from the beginning of 2007 up, and then Veritasium, which was a blockchain business from about 2013-14 to present. Filed a lot of early patent applications in 2014. We'll see how those end up, and did a lot of what I consider interesting and first not to go through a whole bunch of those, and ran into exactly how important wealth is. Now, as for why Black wealth matters, I'm going to run one of those controversial semantic memes. All wealth matters. Okay, so I'm not going to go and say Black wealth matters. But you see, the difference is, even though all wealth matters, Blacks, not only in this country, let's say African American, African diaspora, and Africans in the African diaspora worldwide have had the opportunities to wealth and to capital cut off ever since the dawn of the European colonization. It's around roughly 650, 700 years ago. So from European colonization on, although all wealth matters, those of the African diaspora have been from outright cut off to avenues and roads to wealth, to hampered, to disenfranchised, where the opportunities simply are not there as they are for everybody else. So with that being said, and knowing this, okay, Black knowledge and pursuit of wealth matters, particularly to Black men.
Can I add something to that? I think that we say what Black lives matter, Black wealth matter. When we're talking about matters, we're talking about the association of time now, you know, because usually matters. What matters? What is the matter now? What are we dealing with now? And currently what we're dealing with now is the deficit. You know, where is the deficit? So that's why we're drawing attention, and we're putting a light on, of course, Black people in general, when it comes to Black lives or when it comes to Black wealth, because that's where the deficit is. So it's like, we got to look over here and say, okay, this is what we have to deal with now. This is our priority now, I guess you can say. So it's like Black wealth, what is the priority? And the priority is building Black wealth.
All right, I think those are great insights from both of you. So just picking up on the last point, Tavonia, how does blockchain fit into this story or narrative of building Black wealth? What have you seen, given that you're the founder of, you know, two projects that use blockchain heavily? So what would you say is the role of blockchain?
Well, the role of blockchain, as I see it, is disrupting power. You know, that's the whole initial bottom line of Bitcoin itself, was the disruption of power and providing an alternative, a financial alternative to our current system. And I think that we as people, we've been locked in and blocked in because we haven't felt like, number one, we had alternatives, but that we could even create alternatives. So it goes back to the creator phase. And I know me personally, I dealt with the lack of funds that were available to Black women in startups, because I had a startup before as well, Safe to Meet, which had a lot of accolades, but we couldn't raise money. No one would give us money. So we ran into the problem of getting funding. And I think prior to that, me being in the tech world, I never really looked at a ceiling when it came to funds. I felt like, well, I'm in tech, I can make any amount of money that I want to make and take care of my family. As soon as I stepped out of working a job, I found that, wow, I'm not going to be able to pull off these ideas because there's no money available to me to pull up these ideas. And that's when I saw, you know, blockchain as a way of creating a new source of revenue. Like if you look now, what's going on right now and what the real buzz is, the DeFi movement, decentralized finance and lending and all of these things that came out of blockchain that can be built on blockchain. So literally you're building opportunities for people like me who is difficult to get funding for your business or your tech project or your idea, or even just to live on, or to buy your basic needs. Is difficult to get these things. And here we are in the helm of being able to create that and to create that system. So blockchain really, you know, gave us the power of creation and a solution to a lot of the problems that we currently suffer from today.
Wow, excellent. So Reggie, you have been on the cutting edge of sort of building digital assets products on blockchain, and probably have some, you know, great insights to share from your experience. So, as a doer, somebody who's been building wealth or opportunities to create wealth on blockchain, what are some of the challenges and insights that you can share with the Black blockchain community on how to do so?
Well, first and foremost is a continuation of my introduction. Ever since roughly circa the advent of European colonization, worldwide colonization, you have semi-permanent casts of access to wealth, capital, power, etc. It wasn't just 650, 400 years ago. It still exists today. Just as the sister said, when she went from her job, her W-2, I'm assuming it's W-2, to self-employment, she ran into an issue with access to capital. What first drew me to the blockchain space was the ability to write smart contracts, basically self-executing contracts or agreements that are cast in software, which takes a lot of the bias, the prejudice, the racism, yes, of course, there's plenty of racism and anything else out of the transaction. But that is empirical. I have been taught with a very, very painful lesson that the system has a lot of these biases inherent in it. So despite the fact that you may have a platform that can execute without external biases, so that platform has to live in the real world. Now, of course, I knew that going in, but what I didn't know was how adamant and aggressive those real world forces who currently collect rents, economic rents, will go to prevent you from even getting started. So economic rent is basically money or profit that you bring in over and above what you deserve. A good example of economic rent would be you have a piece of land that's about 3 feet wide and it separates a river, right? Or a water source from a population, okay? The land between the land of the river and the water source combined could be 400 acres. You only own, say, 3 feet of land, but that's the only way to get from the population to that water source. You charge $400 toll each way for everybody to go and get water and come back. Okay, you should be charging between nothing and a fraction of a penny. Okay, but you charge $400. You get away with it because you're the only player in town. You're charging economic rent, $399.99 of economic rent. Okay, so what the blockchain economies and technology does is it allows you or anybody else to easily build a way around that 3-foot piece of land you have. Okay, so now they can enable everybody to get to the water and back with ease. Okay, as a matter of fact, you could build economies around your 3-foot monopoly and basically take you out of business. Okay, now there are many ways for that to work, but if you have collected economic rents for centuries, you've amassed so much power, you can simply stomp out everybody who comes up with that idea. That is the biggest impediment right now to blockchain startups. In the US, most entrepreneurial startups that are not founded by those who are part of the club are easily spotted, beat down. They're taken out by regulators, by competitors. Accidents happen, their names are smeared, they're called frauds, etc. That is a way of slowing down the competition so the oligarchy can continue. It's human nature, that's the way it is, but it slows down the progress of the technology. In the meantime, while that's the modus operandi in the US, throughout parts of Europe and Asia and Africa, okay, projects are moving because they don't have these, except for portions of Western Europe, they don't have these strongly entrenched interests, right, that ensure their survival over the benefit of the entire economy. Okay, and you'll see the US in this upcoming depression, and we're going definitively into a depression, and Western Europe, as they go into this depression, you'll see where these entrenched interests will put themselves before the entire country and the economy. And then as it collapses, you'll see where those who don't have these interests will do better. And those who do have these entrenched interests, who also happen to be currently the largest economies in the world, will all stutter and putter. This is the opportunity, right, for Black wealth to gain. Whenever you have an extreme shift of wealth, of capital, that's when the true wealth is made. During the Great Depression, there was a lot of poverty. You can Google it, look at pictures. You can see what used to be middle-class people eating out of food cans and eating with dogs. At the same time, you had some of the greatest wealth management imaginable. The Rockefellers, the Vanderbilts, etc. Okay, they were wealthy to begin with, and then they became mega wealthy. The Rockefellers, John D. Rockefeller, created a check. He actually cut a check to save the entire country. He bailed the country out personally, got his fellow, which would have been billionaires back then, in to join in, and a central bank was formed. And the central bank is basically a company, a bank owned by other banks that controls the money in the US. And the US is the largest economy in the world. The Great Depression is the small microcosm of what we're going through now. So what we're going through is going to be worse than the Great Depression. You're going to see significant Black poverty, but you're also going to see the opportunity, not necessarily the wealth, but the opportunity for some of the greatest Black wealth since the days of, wealthy Africa. Okay, now that's an oversimplification, but that's what we're saying. What we need to do is we need to get our ducks in a row. We need to understand how macroeconomics and the actual business of this country works, see what's happening, what we should do and what we should not do. I'll give you some examples later on if you wish.
Awesome. I think you're both talking about the decentralized finance and the opportunities that are there. I work in the blockchain education space. We've been training people on blockchain, on cryptocurrencies for the last 5 years. And one of the biggest challenge that we faced is it's not easy for the average person to understand what's going on. So what should be our next steps to make more people aware about sort of the dangers of the financial crisis you're talking about, Reggie, and the opportunities that lie there? So what can we do to sort of, make more people aware other than just, education? Are there practical steps that we can take using technology?
I'm sorry.
One of us, would you like to go first? I'll let the lady go first. Go ahead.
Oh,
yeah.
As a mom, we tend to look at the more practical needs that are kind of, are necessary in our community. And I think part of the problem of why people haven't been getting cryptocurrency and blockchain is that there definitely has been an influx of technical information and confusion in terms. When I approach people about cryptocurrency, particularly my grandmother, because she knows about Blockcoin and she's 96 years old, I talk about money, you know what I mean, from a money standpoint and from a small business standpoint. And that's the approach that we're taking from Blockcoin. We're taking the approach of small business and money, because at the end of the day, like Mr. Middleton said, when there's a collapse, what are we worried about? We're worried about buying the food that we need and keeping, the roof over our head and buying clothes and taking care of our families. So we're at a critical time right now where people are actually seeing this as a risk. So that means that they're listening, right? But everybody is not a finance person. Everybody is not an engineer. They're not a developer, and they may never be a developer. So you have to have a different approach when you're talking to the general population about cryptocurrency. Definitely dividing it or separating it from blockchain technology and just bringing it in terms of economics, just regular economics. And there's been a lot of people in our country that have come up with, in our communities, has come up with economic plans, but they never had the backing. You know what I mean? They didn't. The only thing that was missing was the money, right? So now we have the economic plans, and we have the desire, and now we have the money. So taking that into consideration has been a really, really big task. And the only thing that people have come to me, the only pressing question that people have after all of that said and done, when I'm like, this is money, is, well, how does it build value? That's all they want to know. How does it build value? That's the only thing I can't understand. Okay, we can explain that to you, you know, in very, very simple terms. And it's really tied to your values and what you see as valuable. Because a part of that education, when it comes to especially Blacks in America, we have to undergo the education in terms of how valuable we are and how much of a valuable contribution we've made and how much value we leave on the table. We don't even realize how much value we leave on the table, how much social value we live on the table, how many social trends we start, how much you know, spending we do in terms of, that's a form of value, just the sheer amount of spending that you do. But all of this has to be reworked and taught. We have to look into our values and our value system, because once we look into our value, like years ago, when I started Blockcoin, the biggest question I got from people in the industry was like, why would you want to have a Black coin? And that's because I believe Black people are very valuable. You know what I mean? So when you take that value and you can quantify that value like they've done in the internet, like social media has done, like Facebook has done, and like Instagram and Twitter has done, then we can take that value back for ourselves and actually turn that into something that's investable for our community.
Thank you. Reggie, how do we reinvent ourselves?
Well, education is the key. I'm a father too. I have 3 children. Mine are a little older, 14, 19, and 28. And I go in and I teach everybody. I go into the class, I create mini classes, and I break off from the schools, both public and private schools, and we teach high-end finance, investment. I started teaching cryptocurrency back in 2013. They traded actual value, etc. But when I say education, I adamantly do not mean academic education, because academics has failed the Black population. I hate to say the Black community, because the Black population is much too diverse to be considered a community. But the Black population, the African diaspora population in the developed nations, you know, academics have failed us. You can go and get a PhD in a certain topic and couldn't earn your way out of a wet paper bag. That means that your PhD is not worth what you paid for. So the key is education, as in learning something that is instantly productive, useful, and valuable. So the first thing to learn that we've been miseducated on is money. What is money? I tell the preteens in 5th and 6th grade, I go and have a class on the definition of money. I ask most of the children what money is. We usually say the most popular answer, they raise their hand, something to spend, something that you use to buy other things with, or something to spend. Absolutely wrong. Okay. A, that's mostly currency, but B, the entire concept is backwards. Okay. I want our youth, our adults, and everybody else to think of money as capital. So my definition of money is a proxy for labor. Your labor is everybody's core value. You can go, you can work, you can make, let's say, $20 an hour. Once you work for a certain amount of hours, you've made enough money that it takes care of your core needs. You can pay your taxes. You can put some savings away, and you still have excess disposable income. That disposable income can go several ways. You can use it to spend on Apple phones and flat screen TVs, or you can use that to invest to make more disposable income. So you could go and hire another worker, and then you could benefit from that worker's labor, right? And doing that and layering, right, by investing is buying other productive assets, you build wealth. If you go and do what the typical student would say, and not just student, but most adults, to buy things, well then most of what you buy depreciates, and that decreases your wealth. So you have 2 tracks: increase wealth, decrease wealth. When you buy things, chances are you're buying things from people who are purchasing those productive assets, which makes them even wealthier, makes you even poorer. Okay, once you understand what money is, a proxy for labor, and understand what labor is and the value of labor, like the sister just said, you're on your first step. The next step is to understand the pitfalls of money and the strengths of money. Right now, the United States is on a printing tear. We are printing more money than we've ever done in the history of this country. I think about 40% of the monetary base has been printed since last October. Okay, that's more than the history of the US dollar. So this has never been done before. So when you look at things such as stocks, which have been flying through the roof, certain parts of even real estate, particularly suburban real estate, have been going up. People think, wow, I'm getting wealthy. No, you're not. Stocks are going up because the dollar that stocks are priced in are dropping. So if you buy a widget that costs $1 and the value of that dollar falls to 50 cents, how much should you be charging for that widget to get the same amount? $2. Okay, so people grab that widget say, oh, I've made money. Okay, I made $1 on profit. No, you haven't. You've stayed the same, but the dollar has gone down in value. If you took that money and you put it in something that was hard and didn't fluctuate in value, you'd see that that widget probably dropped in price. If you put it in gold, price your house in gold, your car in gold, etc., you'll see how fast things are dropping. Okay, so certain assets or commodities go up and inflation is on fire. Inflation is on fire now. I don't care what anybody sees. Just take a pen and pencil and look at how much it costs to buy something 3 years ago, how much it costs to buy something now. You can see for yourself, forget what CNBC says, Wall Street Journal, etc. Don't believe anybody but your own eyes, okay? So when inflation is on fire, certain assets and commodities go up in price. They rarely go up in price more than the dollar's going down in price. It's just the equilibrium. So your goal is to find something that keeps pace of inflation while you're also investing to create more money. Now, you could go into crypto assets. You can custom create a crypto asset to do all of that plus more. Then you can transact with that crypto asset without using any of the brokers. You can use it. You don't have to use exchanges. Now, our company has tokenized gold, tokenized silver, palladium. Silver is volatile relative to gold, but over the last year, silver's up 50%. No, over the last month, it's been up like 40% and change. Okay. Without using any of the brokers, you don't have to use exchanges. Our company has tokenized gold, tokenized silver, palladium. Silver is volatile relative to gold, but over the last year, silver's up 50%. Over the last month, it's been up like 40% and change. Okay, why? Silver hasn't really been anywhere. The dollar is so low. So gold, similarly, less volatile but more stable. Gold is accepted everywhere. Central banks around the world are hoarding gold. Why? Because they all know that the US dollar, which is the reserve currency, is dropping in value. It's going to drop in value because the Federal Reserve has to keep that oligarchy that I explained earlier in the conversation, has to keep it intact. Okay, so they change the rules of the game. It will allow them to, for instance, big banks such as Citibank, JP Morgan, Bank of America, that are supposed to be universal health. They have a large mortgage portfolio. They say that our 30-day delinquencies on these mortgage portfolios have actually went down from this time last year. And it had, you look at their balance sheet and what they reported, but if you look at the fine print, you'll see that they took a bunch of mortgages, right? 30%, 40% of mortgages that they have, they've taken them more dollars. That's monetary inflation. Okay, that drives the price of certain commodity assets up. During the upcoming inflation months, years. Same thing with Bitcoin, but Ether and Bitcoin are not big enough markets to actually forecast big inflation. Markets that are big enough, gold. I would say the equity markets, but equity markets is so aggressively manipulated and maligned that that doesn't really count, etc. So now the next step is, and this is advanced crypto, is to get in crypto assets where you can custom design your exposure to the stuff you want to be exposed to and wean yourself off of the need of the things that you know are going to collapse. Mortgages and loans, worst business to be in. As a consequence, this is not time to be buying real estate. But the time to buy hard assets is after they collapse significantly. If you live next to a big city, that city's in trouble. This big commercial center is probably spread, a lot of vacancies. These prices are going to go down. Everything else is going to go down. Everybody's going to be bearish on real estate. And then it's time to buy. Okay, so education is the key. Economic cycle. When the economic cycle goes up, right? You want black wealth to sell. When the economic cycle goes down, you want black wealth to buy. Currently, it's the other way around. Currently, everybody buys.
Go ahead, Toboni.
No, I wanted to add to that. We're on the verge of, yes, you should buy real estate. Not, in my opinion. I think we're kind of basing our future off of archaic practices that are really about to die a very hard death. I do think you should be buying land because everyone knows who owns the land makes the laws. And that's the problem that we have right now. And the reason why so many laws are being passed that we don't have much input in because we don't own the land. Landowners are lawmakers. I live in Georgia, which is one of the oldest Confederate, rich wealth. They're holding on to the land states there is. And the reason that they've done it as well as they have is because they've held on to the land as long as they possibly could. And holding on to the land, they were responsible for making a lot of the laws and keeping the archaic laws that we have here going. But now we see a turn of events where people are buying land. And mind you, you don't have to get a mortgage to buy land. There are Black people now that have money that can literally go up and buy land, cash out. And I know many of them, and I'm working on that myself. So we need to be taking that money and buying land. I think that's very
land in America.
No, I mean, not necessarily. I wouldn't limit you to America, but I would definitely say buy this land is obviously worth a lot of money because they're fighting hard and heavy for it. So this land is worth a lot. So I definitely would say if you are in America, buy land in America. Because in effect, there are people who are losing their land. There are people who are, I'm sorry about that. There are people who are losing their land. There are people who see the crash coming and they're ditching out fast all around me. I see them all out here. So there's millions and millions and acres of land. You know what I mean? That's becoming more and more available. And those people who buy that land will be the future wealthy people of the next coming age. And that could be us. So I definitely suggest, I'm not saying speculate. I'm not saying going, flipping properties like everybody's doing. It's not, of course, not going to be a great time for that. But buying land, building homes, building multi-family residences where your actual family is going to live, yes. You know what I mean? This is the time to do that. This is going to be prime time for doing that. You can make a bargain right now on that.
Yeah. Thank you very much. I think we have about 2 minutes, so let's take about a minute each to sort of give some closing remarks. I think this conversation is really amazing, and I wish it could go longer. So we'll start with you, Toboni.
Well, since we're on the topic of Black wealth, I would say that if you honestly look at the last 2 decades, you will see that we've been accumulating wealth more than we ever had in life. We have more millionaires and billionaires and all of that than we've had. So obviously we're moving towards an upward trend. And we literally have an opportunity to take that upward trend and make it grow exponentially, despite everything that's going on right now. So the key to it is going to be keeping your ear to the community and keeping your ear and forming some type of allegiance on some level. Is going to be the key to building and making that wealth grow, because it makes no sense. If you're going to die off in the old system, you're holding on to old ways of doing things and holding on to your new money, which is really old money, but not taking it and investing in the future by bringing communities together, investing in small businesses, these types of things that we obviously see are coming back and making a resurgence. Then, all that money you have is going to be nothing, especially when crypto really, really, really comes into play. So you better take that money and invest it in something. And I say, now's the time to take a risk on us, on the community.
Amazing. Reggie?
Well, most of the topics take a lot more than a minute to go through. So I'll take the number one investment I think everybody should take. I'm pretty good at investing, but the reason is because I know how dumb I really am. So instead of thinking I'm smarter than everybody else, I come with the aspect is, let's see what I don't get, okay? And in order for me to see that, I have to learn myself. So if I had to pick anything to invest in, number one will always be myself, okay? I will teach myself the lay of the land independently, not from what everybody else says, but from what everybody else says, and then find out where they're wrong, how they could be wrong, okay? There are a lot of smart people in the world, but just because someone uses big words or says if you don't understand, doesn't mean they're smart, doesn't mean they're right. Chances are, if they speak in a language that you don't understand, it's probably not understandable, okay? When I was selling off my real estate in 2006, which is the year before I collapsed in New York, my son at the time, he was 28, at the time he was saying, Dad, why is someone paying you $2 million for a building that you bought for $400,000 3 years ago? It looks like they're paying too much. Why is that? He says, what is it that I don't get? And I said, you get everything. They're paying too much for it. It's really just that simple. So I think a lot of people are intimidated in using their own critical analysis powers. And that is really the only thing that you have. Simply taking as much data from as much disparate sources as possible, okay? Stress test it to see where it's right, stress test to see where it's wrong, come up with your own conclusions. As long as you independently educate yourself, and I don't mean academic education, you have as good a shot as anybody else. Okay, so your best investment is always yourself, number one.
All right, the best investment is always yourself. So I've really learned a lot from you guys, social capital, hard assets. I think we should do a masterclass for both of you separately. But thank you very much for giving us this fireside chat at the 2020 Black Blockchain Summit. Thank you.
All right, that was a very interesting session with Tavonia Evans and Reggie Middleton. We now quickly move to the next session where we'll be discussing blockchain and essentials to life and liberty with Lynn Albright, who is a mother of Ross Albright, CEO of FreeRoss at freeross.org. One of the hashtags at our summit is FreeRoss, where we are supporting a campaign for clemency for Ross Albright, who is serving 2 life sentences for the Silk Road project that he launched in 2013. She will be joined by Isaiah Jackson, author of Bitcoin and Black America, which is a book that goes into Bitcoin and its use cases for Black communities around the world. It's a very enlightening book, and I do recommend that you get yourself a copy on Amazon. So without further ado, let's go to this session. This is the blockchain and essentials to life and liberty with Lynn Albright and Isaiah Jackson. As we wait for that session, let's just look at some of the highlights for the day. We began the day with Black survival in a post-corona world with Reggie Middleton. And we had the Enabling Voice Commerce on the Blockchain panel with Hassan Karim and Deidre McIntyre. And then we had the Blockchain Startups University Collaboration and Research with Dr. William Macy, Deidre, and Professor Todd Shan. Then we had the Enabling Sustainable Energy and Environmental Justice with Blockchain Technology with Ala Kanani, Tumelo Ramaphosa, Tasha McCarter, and Adrian Gardner, as well as Telly Valerie. Then we had the Bitcoin Hyperwave Baraza with Tone Vase, Tungai Choto, Leah World, Niall Majok. And then we had the Trading Digital Assets and Wealth Building panel with Valerie Dahia, Roslyn Wanjiro, Alakanani Iterelang, and Maureen Murat. And then we had the Building on Lightning and Next Levels with Olaoluwa Osuntukun, also known as Roast Beef, Eric Martindale, Simon Mugo, Eric Latham, Alex Wafula, and Jamal James. We then had the Black Wealth Matters Baraza with Reggie Middleton, as well as Tavonia Evans. And now we're going once again into the Blockchain and Essentials to Life and Liberty panel with Isaiah Jackson, as well as Lynn Albright. So enjoy this session.
What I really want to do is, hello, my name is Deidre McIntyre, and it's my pleasure to serve as one of your hosts for this fireside chat with Lynn Albright, as well as with Isaiah Jackson. This is going to be a little bit different from the Barazas. I am going to give somewhat of a very brief, too brief of an introduction of both speakers. And I may start them off with a challenging question, but what I really want to do is see the interaction between Isaiah and with Lynn as if they were sitting in front of a fireplace and they were just eavesdropping on the conversation. I think that's the best way of kind of getting the two sides of many different stories in terms of our topic for today. So without further ado, our fireside chat features Lynn Albright, who is the mother of Ross Ulbricht. If you're not familiar with Ross, you can certainly search for him, but he was founder of a decentralized platform called the Silk Road. And ultimately he became charged with several different nonviolent charges that landed him in prison for 2 life sentences plus 40 years without a chance for parole. And he's still there now. He's been there for several years and he's there mostly locked up most of the day. And in terms of Isaiah Jackson, he is the publisher of, well, he's involved in a number of things, but a publisher of a book called Bitcoin in Black America, which is the first book targeting Black people and trying to educate them about the decentralized space. And the fireside chat that they're going to be discussing today really is involving this idea of privacy. And are we sort of losing the war to this privacy battle in this decentralized space? So the challenging question that I want them to have now, when they come to speak, I do want them to introduce themselves more fully. And then the first question I'd like each of them to tackle before they start talking to each other about whatever it is they wish to talk about is, are we losing the war to decentralized privacy? There was an article that came out in Decrypt on August 31st about a startup that supposedly states that they can now trace Monero wherever it's spent. It's a brand new article. So, what are your concerns? And sorry, Isaiah, ladies first. We'll go with Lynn first. To what are your thoughts on freedoms and privacy in the blockchain space and these news in terms of your individualized story, as well as in terms of the latest news that have come out that seems to be that the current paradigm is basically to replicate what currently exists in banking and central banking and government controls of money, are we moving away from the original tenets of Bitcoin, and how do you think it's going to affect us on a national and global scale?
All right. Well, I'd like to just say a little more about Ross as far as Bitcoin, because Ross created the website Silk Road, which was the first proof of use of Bitcoin. It proved that Bitcoin could be used as money, and it really put it on the map. Very few people had heard about Bitcoin before Silk Road. And so because of that, he's been called the second most important person in Bitcoin history after Satoshi. I mean, it's like, some people say that. And he did it. It was all about, for Ross, freedom and privacy, because he could see that we were losing it then, which was 8 years ago. And, I guess when he started it was in 11, so it was more than that. And it's still the question, even though I go to conferences and everybody's talking about money and how to make money, when I'm asked to speak, I always talk about the freedom, and privacy and freedom are the same, right? You can't really have freedom if you don't have privacy. And Ross wrote a essay that's been published, I think in Bitcoin Magazine published it, that is Bitcoin equals freedom. People say Bitcoin's a money, or it's a store of value or whatever, but it's really freedom. And so I just wanted to read a quick quote from his essay about the early adopters, because the reason they adopted Bitcoin was for the freedom. And he said, they dreamed of a future where the economic power of the world is accessible to everyone, where value can be transferred anywhere with a keystroke. They dreamed of prosperity and freedom. And to me, that's what's so amazing and great about cryptocurrency. And it's being proven all over the world. And we can talk about that more with people, the unbanked, people who cannot, get a bank account, things like that, that it gives them that freedom. But in any case, as far as do I think we're losing? Well, today it came out, or I just was informed today, I think it came out today, that the Ninth Circuit Court of Appeals said that what the NSA spying on Americans is unconstitutional. Big deal. I mean, that's amazing. But it is overwhelming sometimes to realize, I kind of assume everything I say is being listened to or recorded and that sort of thing. And it is very concerning to me about our losing our freedoms. But I have hope, you just have to hope that with things like Bitcoin, we can keep it. So.
Oh yeah. Perfectly said, Lynn, and I definitely agree with you. Again, I'm Isaiah Jackson, the author of Bitcoin in Black America. I've been in the space for about 7 years now, and most of my clients have been in the Black community. And Bitcoin is one of the tools that, of course, as Lynn said before, is for freedom. Freedom and privacy are the same thing, like she said. And that is sort of the reason why I got into Bitcoin, to start. I saw dollar signs at the beginning, but once I realized how much freedom came from using Bitcoin, from using cryptocurrency, from being able to manage economically where you will be in the future, that to me showed that, that is the freedom that we need. Because at the heart of it, most people socially feel free, or, in different ways feel like they're free. But as long as your economics are tied up in the Federal Reserve currently, you don't really have any freedom. And at that point, we have to worry about the tracking of your ability to use that Bitcoin. So yes, that Decrypt article I saw as well. One of the things, I think the biggest question about Bitcoin over the last few years has been the privacy aspect. We've seen companies like Coinbase sign with chain analysis. We've seen exchanges have to get bit licenses. We're starting to see governments co-opt the on-ramps for a lot of people to get Bitcoin and cryptocurrency. So the privacy aspect has been a big question. One thing I do want to encourage people whenever they use cryptocurrency is that there are private coins, even like Monero and Zcash, that people say can be tracked. However, in my opinion, what will keep the crypto market strong and to keep it private is the resilience of people. There will always be people who come up with solutions with new private coins or new ways to transact with atomic swaps or other ways to keep that privacy in our industry. And one of the things I don't want people to do is to forget that, 2 or 3 years ago, people were saying, hey, how can Bitcoin scale? Hey, how can Bitcoin have smaller payments? And now we have Lightning Network. So technology always, increases, the rule doubles every 2 years. I'm pretty confident that privacy question will be answered, and that for the most part, some of the bigger transactions are what's being tracked now, and that most of the retail consumers, your transactions from a privacy standpoint can be tracked, but I don't want to scare you out of the industry thinking that every little thing you do will be tracked. The privacy question, I think, will be answered soon enough. And I think that will be answered probably by the younger generation. So you may have to wait a little bit, but I think the beginning, like Ross Ulbricht saw for freedom, is still intact. And I think going forward, that we can keep that dream alive simply just by being vigilant and relying on the technology.
Oh, can't hear. Why can't I hear?
Can you hear me?
Now I can.
Okay, I want you to talk to each other about where you see the direction going in terms of how will people know how to access this privacy. If it isn't possible, it is possible. I think the company was called CipherTrace that is making the claim that they can trace Monero now. And also, if people have the privacy, how do they maintain their safety in this decentralized space? Because it's kind of the argument that's being used is that, well, you don't need your privacy because you need to be safe, and we're the people to keep you safe. Whoever the we are, whether it's a financial institution or a government. So where's the counter response to that to say, no, we can maintain safety, and these are the tools that we can use to maintain our safety as well as our privacy in the digital space.
Well,
I'm not going to chime in there anymore. So now this is Lynn and Isaiah sitting in front of a fireplace. You guys can go back and forth, and I'll just let you know when we're coming short on time.
Okay, just real quick, Ross he did not get his technical abilities from me. I'm totally low tech. I'm one of those people that gets intimidated by the whole thing and using it. You brought up how to use it. And I think that is a barrier. I think that is a barrier for people like me. So just saying, I think that needs to be, but I think it's always going to be a choice between safety and freedom, because, and then we see it now. We see it with a lot of things, not just crypto. And, I don't know how you can have a free society and still think, oh, the government has to take care of me, so I'll sacrifice whatever it takes to be safe. It's just kind of the way it is. And as far as, I have a friend whose company uses a thing called Chainalysis. I don't know if you know about it, Isaiah. They can track things, for sure. And so I don't know, as far as knowing where your coins go and stuff like that, I don't think it's private. But I don't know enough about it. I think really, Isaiah, you should speak to it, because as far as what actually can happen.
So I'm there with you. Like you said before, don't give up your privacy for security, because it always ends up blowing up in your face every time. We've seen this. And one of the things with Bitcoin, there's a level of privacy you can achieve, but Bitcoin as a whole is not completely private. So I think the number one thing we should start discussing, like we have been the last 2 years, is education. How do people like yourself, who aren't as tech savvy, begin to realize there's only a few steps you need to make yourself as private as possible? And that's something that I do on a daily basis. And that's something that I think in this conference, as well as others, is going to take some time. I keep alluding to that, but I've been around long enough to see that a lot of the questions that we have at certain times are usually answered because it's asked over and over. And I'm one of those people that wants to find solutions to problems. And I think, like you said, it starts with people. Like individuals, because people are just gonna go what the government says every time. Unfortunately, that's what we have. But I think Bitcoin has matured to a point, and cryptocurrency as an industry, we're getting into the political fight. The money aspect, I think we've won. I think we've proven our point that it can transact, you can send it, you can use it as a store of value. I think we've proven that. But now it's becoming political to where countries are fighting for mining power. Governments are fighting with each other over whether Bitcoin can be transacted here or can it not be, or is it money laundering or whatever. It's becoming political. So I think what's going to ultimately happen, people are going to have to not necessarily choose sides, but you're going to kind of have to choose sides. You're going to have to say, do I want to go with these man-made laws that make me not able to live, better long term, or am I going to actually use a system that gives me sovereignty? And ultimately, if we work together, we can come to the solutions to a problem like this with privacy and with other problems that we have as well. But I think it's getting to that point. We all knew this was coming in the Bitcoin industry. We got to go to the political fight, or sort of get people in office who understand that Bitcoin and blockchain technology is here to stay. So we should do everything to foster that growth. And those people are starting to appear now, I think.
Well, yeah, in fact, that was really good. I was interviewed for a show called Open Money. I don't know if you heard about it. It was on Discovery Science. The point a lot of people were making is, we're going to fall behind as a country if we don't start acknowledging this technology, which is the future, And so the more our government tries to control it and suppress it and regulate it and all that stuff, it's stopping progress for our country and our economy.
We're shooting ourselves in the foot. We're literally telling people who come up with innovative ideas, hold up, stop being innovative for like 2 years. Let our slow ass Congress, who takes breaks every couple months
and doesn't understand it.
Doesn't understand it. Let's let them talk about it. And I don't mean to be ageist, but a lot of them are older to the point where they don't even want to understand it. They're like, let me get some intern.
I know how they feel. I know how they feel. It's like, I don't want to understand. But no, exactly.
They'll get some 20-year-old to explain it to them in 30 minutes. And then they'll make a decision just based off of that. Or I remember there was a John Oliver clip where he explained it, in sort of a snarky way. I'm sure there was some guys on the Hill who were like, all right, well, that's what Bitcoin must be. Let me go with that. And these are the people who are trying to regulate it. So America's regulate first laws are kind of, suppressing a lot of innovation. Yes. Very backwards thinking, because if you go to other countries where they foster Bitcoin and blockchain technology, they're growing rapidly. I know places like Kenya, the digital payment system is surpassed America. I mean, almost everybody I know in Kenya has some sort of digital wallet, and crypto adoption is right behind it. So America, a lot of people have the money, but that money goes to fund politicians who don't really have Bitcoin and blockchain technology's best interest at heart.
Plus, there's a brain drain, because a lot of people who are very, into crypto, they're leaving the United States because they can't operate here in the same way. And that's really, like you say, shooting ourselves in the foot. And not only do they, denigrate the people who say these things, in my son's case, they put them in jail. I mean, Ross is an innovator. He was a pioneer. He had this idea. And the judge even said, well, we know you started this for philosophical reasons, which Bitcoin really is a philosophical thing. It's about freedom and privacy. And we don't think that's a philosophy you left behind. And you are so dangerous, you have to be put in a cage. Now, since then, of course, it's been more accepted. But in those days, it wasn't. So my point is, there's even risk, and other people have been put in jail over Bitcoin. And I just would like to put a quick plug in for, as Deidre said, my son's sitting in a cage. He's starting his 8th year in October 1st. I believe it was all about the Bitcoin. I'm sure it was. And please go to freeross.org, and there's a petition, just a petition. Please let him out. That's the petition. First time nonviolent offender. Anyway, that's my plug. I just want to make sure it got said. But it's really keeping us back. And you're right. Everything you said was absolutely correct.
And I wanted to ask you, do you think there was more of a freedom of speech, like they infringed on that right? Because technically, that's all Bitcoin really is freedom of speech. Your money speaks for you. I believe if we can call corporations people, and we can call money speech.
Good point. And well, the judge
it-
herself said it. She goes, it's philosophical reasons that you did this. Well, since when do we get put in a cage for life for our philosophy in this
Exactly.
country? It's
Yes,
very,
and-
very dangerous. Yeah.
Yes, and it's backed by code that is literally written speech. It's numbers, letters,
Yeah,
cryptography,
that's a good point
all
too.
different
It's all
all
speech.
different forms of speech. So if we actually listen to the Constitution, all these people that bang on the Constitution, freedom of speech is the first thing. That's
is.
the First Amendment. So you
Yeah.
kind of contradict yourself when you don't let something like Bitcoin progress. And I hate to see that happen. And one of the things too, while we're here, you know, like you said before, some people are scared away from Bitcoin because the privacy aspect, even though there is zero privacy at the banking level. I mean,
Right, zero.
I mean, that's not even a question. PayPal, banks, it doesn't matter. Stripe, Cash App, doesn't matter what you use. There's zero privacy.
Yeah.
But you know, since we're here, one of the things I do want to say is that you can achieve a level of privacy in Bitcoin, like I said before. The first layer is the public address, which you know we're all pretty familiar with. Your public address is not your name because it's not tied to your information. That's the first layer. That can be found based on IP addresses, based on spending, different wallets. So the next level is having your own paper wallets or digital wallets on your own server. And I want people to understand what I mean by that, because some of the people watching are beginners, some people are experienced, but this, I think, can help all of us if you move forward in a way where, yes, you can buy from exchanges. However, if you buy from that exchange, move it off of an exchange to a secure paper wallet, and you can store that like you would gold or anything else into a safe. And one of the things you have to do before you can do that whole process is get a VPN. They're pretty cheap. You can actually get a VPN through Bole with Bitcoin. Also, you want to make sure that you use secure browsing like DuckDuckGo. That's one way to stay as private as possible. You also want to make sure you have two-factor authentication on every website you ever use. You want to use that. And I'm sure, like I said, people watching may know these things, but for you beginning users, yes, you have to be vigilant now in order to keep privacy in Bitcoin. If you look at it like an investment, I just want to buy it, sell it later, that's fine. But for those of you who see it as freedom of speech, like we said before, those are just a few of the steps that you can take to keep Bitcoin as private as possible. And for the more technical people, you know, that can be explained in things like in Andres Antonopoulos' book, Mastering Bitcoin, and online. You just have to make sure you search it. And some of those solutions, I do want to throw a quick plug, will be in my second book, Bitcoin in Black America, the second edition. So those solutions will be in there as well, because privacy, this is one of the biggest conversations in the Bitcoin industry, in my opinion. So yeah, just want to throw that out there to make sure people watch and learn a little something along the way, you know, as much as possible.
Yeah. No, that's good. So yeah. So, you know, the main concern, I guess, overarching is the philosophical, well, the speech, but it's like that is expressing your philosophy of freedom and privacy, and that's at the core of the whole thing. And then there's these ways, and I think most people, many people who are involved, that's what they want, and independence from the system that's some say is enslaving us. But you know, independence, and then there's people around the world, like Venezuela. I think it's very actively people are very actively trying to help them with cryptocurrency. I don't know if you know. I mean, people. I know some people who are working on it. Yeah, and but they're turning to cryptocurrency as a potential help there, and how it can be helped all around the world, because so many, you know, underdeveloped countries, people can't get to banks. They can't get to money. They can't, and so it would help so many people. It's like a potentially incredible thing that can, you know, so widespread, you know, and yeah. So I think that's a really important point, is like, and that's freedom, you know, that's freedom. Like you said, it's like money, and being able to be in charge of your money is freedom. And if you can't keep a hold on your money and have freedom to use it the way you want, how are you possibly free? You know?
Absolutely. And I think the root of it for most people is a monetary system that's free, which I think Bitcoin and crypto achieves. And then, you know, in the Black community, one of the things we see is that from that system, you have freedom in other areas. And one of the things mentioned, there was a story about a guy or a family, sorry, who got their house assessment with Black pictures on the walls. And then they took all the pictures down, got the house reassessed, and then it was 160,000 more assessment on the house because they thought the white guy owned it and it was his house.
Oh my God.
So that was just a recent story that happened. And one of the things is that's been happening for years in the Black community, where wealth has been constantly taken out due to a system that was built on racist principles and then trickled down to economic, socioeconomic bubbles. Because yes, you know, there are poor, white, Black, Latino, all people, but it started out racist, and then now all they're doing is following the same template, and now it comes to these egregious acts where they take wealth out of the Black community. So we start with the base, Bitcoin, as far as freedom, being able to move around. We talk about the real estate market. That's something that could come out where we're starting to see is sort of in a DeFi market where you can get lending, just theoretically, because you know, practically, I don't think this works right now, but theoretically, what we could see is a market where the crypto holdings you have could be used as collateral for a house. And there is no barrier to entry that includes racial discrimination, your zip code, where you live. What could happen is do you have the money? Cool, collateral. Here's the cash.
That's what it should be.
And not only should that be the process, it should be very simple. I think that will be the process as more people are educated about how Bitcoin and cryptocurrency can work. Because once you know that, imagine a real estate conference where you explain that process as something that could happen in theory. And then they're like, well, do we have any solutions? It's like, well, we're very close, but because cryptocurrency's already started down that path, decentralized finance, Bitcoin as well. Yeah. And that to me is where we start solving problems with freedom. You see that with real estate, some of the bigger markets. And then as far as privacy, the transactions at a certain point, you know, you will have to show your face to live there, but that is a part of the freedom that we talk about. I can't wait to see that feature, simply because the reason we're having this summit is because we want to see a world that's better for us, more free, that's not hell-bent on our skin tone.
Absolutely. Well, it's better for one group of people. It's better for other groups of people. We're people, right? And we're all dealing with a lot of hardship right now. And actually the COVID thing might actually work with that real estate thing, because there's so many, the real estate market's like in chaos, right, over this whole thing. And so that might really be an opportunity to do that. That's really amazing. And you said, well, it's just a theory. Well, this whole thing started out as just a theory.
Exactly. You know, that's what I want people to remember. It starts out that way, but
it's always an idea.
It's always an idea. Just keep working at it. If it's possible, which is possible, and just keep working at it. Yeah, absolutely. And speaking of
the
COVID,
government recognizes go ahead.
Oh, I was gonna say, have you spoken to Ross during COVID? I want to ask him, how has that been?
Yeah, well, it's real quick about the idea thing is that a lot of people say the reason he's in jail is because of his idea. The government takes ideas very seriously, and that's why this is an idea that could be a worldwide revolution. So this whole thing. Anyway, well, it's been hard because the prisons, they are a petri dish for disease because everybody's crammed in, and Ross has gotten sick in the prisons before, flu and stuff. So they have clamped down since March. It's been 6 months, and it's been mainly 22 hours a day, and literally 8x10 metal box where he's fed through a slot in the door. That's pretty much it, except he gets out 2 hours to shower and make calls, limited calls. And now it's 1 hour a week to go outside, which he's so happy about. But during the riots, the whole Bureau of Prisons shut down for 24 hours a day. So that means not getting out of the box it was 3 weeks, I think. So it's been rough, but Ross is strong. He's positive. He wrote an essay recently about privacy and using artificial intelligence, how we can maintain privacy and still not hide people who are hurting people, who hide under the dark web and stuff like that. And he's come up with this whole way to keep privacy and still reveal that, but he can't develop it because he's in prison. I mean, this is the kind of thing Ross would be so all over what you're talking about, Isaiah. He would love this and would have great ideas. I look forward to when you can meet him and talk about it all. And he's hanging in there. Thank you for asking. It's not easy, but he's strong and he's doing it. He's staying positive and constructive. So.
Oh yeah, great to hear. And
yeah,
and like you just said, the suppression of ideas based on the actions of government officials is ridiculous, and that's why, like I said before, staying vigilant and doing what you can in order to keep as much of your privacy as possible is very, very valuable. And I want to go back to something you said before, where you were saying being able to be sovereign or to live in, under your own guise. It's funny. I think some people don't want to divide from the government. Unfortunately, you know what I mean? Like, in countries like Venezuela, it's like, oh yeah, let's get away from it. But in the US, I tend to think a lot of people are spoiled to the point where they don't want to, get away from what the government says. They actually want to stay in this little, what they feel is a safety nest of ideas. But if at any point that fails, that's the thing with Bitcoin. Bitcoin has been dead 1,000 times, but it's always come back. It only takes one time for our currency or our economy to really fail. That's the only time I think it'll take for people to realize that. And we're watching it right in front of our eyes.
Yeah,
during this COVID era, we're literally watching, 50 million people go unemployed. The stock market is getting pumped to high heaven because, in my opinion, it's the exit pump. Just printing money and giving stock
printing money, yeah.
And nobody else is seeing that money. And I think we're just starting to see the effects of that. I think somebody just stated today we had 10% of people were evicted. 10% of tenants, that you know how many people that is, and that's going to cascade as something else. So, yes, I tend to think that in America we're kind of spoiled to the point where like Bitcoin's cool, but why would I need it other than just trading it or whatever? And the freedom that we talk about comes from the fact that we can live anywhere in the world and transact in Bitcoin at some point, which is the point. And Americans have to realize that.
Yeah, well, it's true. I mean, people are very complacent because they have lived such an easy life comparatively to Venezuela, for example. And I think you're right. I've often wondered, is it innate in the human spirit to want to be free, or maybe there are two kinds of people? I've asked a lot of people that, and different people have different opinions. I'd like to think it's innate, but I don't know. And it's true that it gets comfortable. You want to be safe. Now the thing is, they are like printing so much money and all of that. The thing about, correct me if I'm wrong, Isaiah, but there's a limited number of Bitcoin. It can't be inflated like a fiat. So it's going to keep its value, even with halvings and all that, right? It's still right. So it's different than fiat currency, right?
Totally different. Yep, and it's deflationary. The network effect of more people, the demand increasing while the supply stays steady and it's constantly harder to buy. Yes, that is very, very simple with math. Price increases from there, and the price brings people in, and a lot of times people get excited. But when you know the real root reason of why Bitcoin was created, why people use it, that's what keeps people around. And some of the things we've seen as a result of that is this booming industry where like we keep referring back to where people want this freedom. But I'm interested to hear your thoughts. Do you think that freedom can be achieved if we keep using social media that's centralized? Because getting the word out on Twitter, on Facebook, they shut down, because we've seen on YouTube. YouTube, they've shadow banned a lot of people. We've had our stuff shadow banned on Facebook. I know on YouTube, we've had videos taken down. Yep. Our channel wasn't taken down, but the Gentleman of Crypto, yes, we've had shows taken down, certain things. And one of the things that I said before was education. That was one of the biggest things. So if you can't educate people on these platforms, do you think decentralized social media is something that can help with privacy as well?
Sure. I mean, I have friends who also, I didn't realize it happened to you and King and guys over there, but also other friends who've just been, they were making a lot of money every month and working hard, and then all of a sudden shadow banned. This is censorship, I mean, of course. And it is, who's deciding this? Some guys and, I don't know, exactly. Now it's a matter of adding, and I'm guilty of this. I still use the usual channels because I'm so busy and trying to learn a whole learning curve. So it is, but yes, definitely be better to be on decentralized platforms, right? but it's a matter of getting big. I guess some have tried to get up there. I doubt that they're not taking off like, Twitter and Facebook and all that. I don't know. And then I think it's been floated about, well, they're a monopoly and we need to do some kind of legislation. I'm always hesitant about legislation.
Yeah,
and
no legislative away.
Yeah. It always seems to mess up somehow. But I don't know. I mean, are they any different from the, industrial barons, back in the 30s who small businesses couldn't get ahead because these people controlled everything? I don't know. I think that bottom line, you're right. How can we have education, freedom of thought, interaction of ideas, and progress? And if this is going on, you can't.
How can you do it? Especially like you said, suppression. I've had my book suppressed by Amazon. Most people don't realize the Kindle version was suppressed for weeks, and shipping was suppressed for months. So yes, literally they sent the email suppressed for these reasons, and it was for no real reasons. But yes, that suppression does happen, and I think that decentralized social media is one example, but of course the blockchain industry as a whole opens up the world of being able to get things out in a decentralized manner. I would love to see a future where they were bigger, but I would never say never, simply because MySpace was the biggest thing smoking 15 years ago. 15 years from now, people could, and this is personally what we do, I always keep some sort of decentralized solution to whatever I'm using. So even with YouTube, we have a decentralized video platform just in case we need to move there.
What do you use? D2?
Minds.com. And we have signed on with DTube as well. So D2, Minds.com. Exactly. And with decentralized social media, not as prominent, going forward. But before, I had Steam for years.
It could grow. Me too. Steam.
The day it came out, and that's the thing. So I always kept sort of a backup because I don't trust. One of the things Bitcoin teaches you is don't trust any centralized service, because if they can be influenced by government officials, they can be taken down just like anything else. So always, anybody watching, keep sort of a decentralized backup or something, a smaller platform that may not have the attention yet, where it can be taken down. Because you want to, be able to get the word out there and educate, so that we can get this freedom that we're speaking of in this day and time. Since we can't see each other face to face as much anymore.
Yeah, you're inspiring me to put this on the top of my to-do list, because I keep putting it away, aside. But I actually found out that I was also Ross's channel that I was also shadow banned. I didn't know it. They said, "Oh, you're demonetized." And I said, "Well, I'm not making any money anyway. Who cares?" And a friend said, "Well, that means they're shadow banning you." So I'm just trying to free my son from prison.
Yeah,
why are you doing this to me?
Yeah,
I'm not a threat to anyone. But same thing. I mean, who decides these things? Well, it's arbitrary, and obviously they have an agenda. They definitely have an agenda.
Yeah, and as we call it on our show, the tap on the shoulder. That's sort of when you get some money, your company starts doing well, and then you get that tap on the shoulder. Sort of like I believe it was Putin did an interview recently. He was saying how every politician has great ideas when they start, and then all of a sudden they don't do anything they said for a reason. He was like, the guys in the black suits and the blue ties show up with the briefcases.
Wow, that's a good image. That's so true.
He says they sit down and say, "Okay, this is how things really work," and that's what I think a lot of governments indirectly do with these companies. And they've done it across the board in Bitcoin. They say, "Oh, great, you made a lot of money. Cool. Now you owe us this. And if that doesn't happen, then your business is over." And I think that's where you get people to comply. And that's why I shout out to people like the Kraken CEO, Jesse Williams. I believe.
Oh yeah, Kraken.
He didn't comply when they kept sending them letters to send them data. He was like, "No, you have nothing to do with us. You won't even regulate it to the point where we can get clear regulation on what we need, and now we owe you money." No, you can keep that. So I like the fact that
that's good to hear.
Push back.
Yeah,
people are starting to push back, and I think as these companies grow and swell, say we get $1 trillion exchange at some point, you really think they're going to comply with the government agencies? It's like no, kind of like Apple. They're like, "You want a backdoor? No, you don't get it," and then they're just gonna have to listen. So hopefully that day comes, and we just have to keep pushing.
Yeah, no, absolutely.
This has been a great fireside chat. I just want to kind of recap before we're out of time, because you guys really got rolling, and I hope you follow up with one another, beyond this, and keep the discussion going, because I think that this is designed so that we can kind of eavesdrop on two great minds, working on a same problem from different vantage points, so that the rest of us can learn from you. So I think some of the points that were touched upon is that Ross is indeed working on some writings that, right now he can't get out on privacy, and because he's on lockdown for about 22 hours a day. We also know that Isaiah is coming out with a second book for Black people in cryptocurrency, and there will be aspects in terms of privacy. Governments such as Venezuela, and I think Sinclair would be remiss if we didn't also mention Zimbabwe as well. Many different countries around the world have no access to any viable fiat, or if the fiat that they have access to is not really aiding the people. It's a very big issue. I think one of the conundrums is that, how do we ensure safety? But this is also a pushback against racism as well. This idea of being anonymous, it's not just, we're not just tackling social economic issues versus, poor whites in Appalachia versus, whites in New England who may be at better advantage or something like that. But it's also, well, what are the Native American, what are the Black, what are the, et cetera, different people, what are the outward phenotype problems that kind of magnify this type of discrimination that is continuing in our country. And, the aspect of social media, the fact that there is a quiet repression that we know about, that most people don't know about, that if you speak about cryptocurrency, that you have your videos removed, or you have your sites repressed. I think these are long-going issues. And then ultimately, we really have to look to privacy. So any parting words before we're finished? Because you have about 2 minutes.
Well, I'll just real quick say that all of this, being involved in all of this, has brought it to the forefront of my mind that we're at a crossroads in history. I really believe that. I think that we're at a tipping point. So we can still, and I'm always heartened talking to people like Isaiah, who know so much and who are so, coming up with so many ideas. But it's like we can either go towards innovation, freedom, privacy, the individual ideas, and allowing them to flourish, or we can go towards government control, suppression of ideas, and not have as good a culture, not have as good a country or a world. I mean, in my opinion, right? So we're at this tipping point. It's a very important time in history. And it's time for people to really look at it and decide what they want and what they're willing to do to have it. And crypto's part of that.
Absolutely. And I just want to say that 2020 is the year. If every year prior to it, you've been saying, I'm about to, I'm going to, this is the year. You've been sitting at home, you've been quarantined, you didn't have anything else. This is the year. If you haven't noticed, like you said, it's the tipping point. And Bitcoin, cryptocurrency, blockchain technology, all of those aspects converging at a time right when we're seeming like we're unstable as a country, as the entire world, is no coincidence. This is what Bitcoin was built for. And 2020 has proven that. And I want people to understand that going forward, everybody can use it, but in the Black community, we should really be vigilant, because we understand that this system that we're currently in was not built for us. So we need to push forward with another. So just want to make sure everybody stays vigilant, like I always say, and free Ross. Shout out to him.
Thank you. Definitely free Ross. And thank you to Lynn as well as Isaiah and joining us in this Black Blockchain Summit fireside chat. So much data, so much.
This was a great conversation with Lynn Albright and Isaiah Jackson on blockchain and essentials to life and liberty. And we got to hear about how privacy, Bitcoin technology are useful tools for increasing liberty. And we also got to hear from Lynn Albright, the mother of Ross Albright, about how the Ross Albright's case went on, and the issues that sort of surrounded that around Bitcoin and liberty. So anyone out there who wants to support the campaign can follow the hashtag FreeROS or visit freeros.org. So we now go to our final session for the summit. It's sad that the summit is coming to a close, but we will stop with a very great session with the Black Blockchain Summit co-host, Mr. Sinclair Skinner, as well as Cameron Winklevoss, who is a co-founder and president of Gemini. And those of you who recall the movie The Social Network, Cameron and his brother Tyler were featured greatly in that movie. So these guys have great experience in terms of technology, and also, of course, now Bitcoin technology as they run their Bitcoin exchange. So stay tuned. This is a really great session that is coming up, and it's a fireside chat titled Bitcoin Essentials and Global Disruption with Mr. Sinclair Skinner and Cameron Winklevoss.
Things going on. This has been super amazing. And, you know, just having you here at the Black Blockchain Summit has definitely been such an amazing thing. Gemini has been a sponsor, I think, even from the beginning, and your commitment to startups and getting us involved. I kind of wanted to preface it with a two selection. Frantz Fanon said, each generation must out of relative obscurity discover its mission, fulfill it, or betray it. And then the one when I think of you and think of your contributions and your steadiness in the space, I think about this selection from Theodore Roosevelt, The Man in the Arena. And it goes like this. It's not the critic who counts. It's not the man who points out how the strong man stumbles or where the doer of deeds could have done them better. The credit belongs to the man who's actually in the arena, whose face is marred by dust and sweat and blood, who strives valiantly, who errs, who comes short again and again, because there is no effort without error and shortcomings, but who does actually strive to do the deeds, who knows great enthusiasms, the great devotions, who spends himself in a worthy cause, who at the best knows in the end the triumph of high achievement, and who at the worst, if he fails, at least fails while doing greatly, so that his place shall never be with those cold and timid souls who neither know victory nor defeat. I'm trying to put that on you, brother. Welcome, Cameron Winklevoss. Woo! All right, bro.
Thanks so much for having me, Sinclair, and I'm deeply humbled by that intro. Thank you very much. Very glad to be here.
Yeah, I think, again, this has been a space that is still new. I think sometimes we all forget that. And I think would be really helpful is, taking your journey and kind of like matching that to the journey of this industry, this space that we have a passion for. How did you get started? I know there's always that, beginning Genesis story, but again, that would be super helpful. Just kind of how did you get here?
Totally. Happy to share that story. So like you said, it's still very early, but myself and my brother Tyler, we've been in Bitcoin since 2012, and we found it in an unusual way. We were on vacation in Ibiza, and some guy recognized us from the movie The Social Network and started chatting. And he's like, have you ever thought about virtual currency or Bitcoin? At the time, we hadn't. And so we started talking and then reconnected through Twitter on stateside, and basically started reading up on it and then meeting with some Bitcoiners, early people who are in the space, and were just blown away by what was being done. And basically, like, this is the first form of money built for the internet, first of its kind, and really started this whole revolution. So we've been in it for about 8 years. We started buying our early Bitcoin through brokers and on an exchange called Mt. Gox, which famously imploded. Thankfully, we weren't injured in that process, but we saw, we grew up in the Wild West days of this revolution and sort of saw firsthand all the risks that we took to do that. And so a couple of years in, we decided, if we're going to bring this mainstream, we've got to build safe, trusted on-ramps into this. Otherwise, it's never going to go mainstream and fulfill all of the really cool promise that we think it can. So we looked at investing in different teams and eventually decided in 2014, we're just going to do this ourselves and build Gemini, which we've been running for the past 5 or 6 years. So that's kind of how it started, out of like a need or a frustration with the risk that we took to get in and trying to make it safer for other people to join the revolution.
I think you guys actually show the level of acumen and understanding people more so than many. Even calling it Gemini, we started our startup in 2015. I think I told you, as much as you've done so much in the States, my first presentation in Zimbabwe, I literally got your speech at Money 2020. Yeah. And actually, it was on SlideGo or something, and I had the slides, and I took it, because you gave probably one, and again, there's Money 20, now everybody knows Money 20, but even then, Bitcoin being in space, you gave such a real human being approach to it without it sounding like it was on Mars. And I literally, the first presentation at the their computer science, National Computer Science Group, I was the first person to do the presentation, and I promise you, it was definitely Cameron Winklevoss.
Nice.
That was actually, because it was, there was, even at that time when you were looking for ways to explain it beyond some of these video cartoons, there really was, it was so obfuscated behind so many, hash rate conversations, that what you did was very helpful. So I still get accolades from bringing this amazing speech, and literally I got that from you. But even naming it Gemini, we originally called our company BitMari. Mari means money in Shona, which is local Zimbabwe. But the fact that you named your company Gemini, I mean, again, just dealing with regulators, and it wasn't until after the fact we renamed our company to Bill Mari, B-I-L-L Mari, still Bill Money, but the dealing with the issues, even when we named it ICOs. We're asking for trouble by naming something that rhymes with IPO with ICO, right, the SEC. What do you see? I mean, even looking at naming the things that we did as an industry, that what were some of the things you caught on early lessons that I now looking back were good decisions, and how we can learn from some of that?
Mm-hmm. So I think one of the most important things is education in our space. Most people don't understand what we're trying to do and what we're building, or they think it's sort of mysterious or dangerous. And so I'd say a large part of our efforts are sort of, educating people on, what is this thing called Bitcoin? Why, what does it mean? And, before the Money 2020 presentation that we did, we actually did one in 2013 at Bitcoin 2013, that conference. And we basically, made the case for Bitcoin being digital gold, analogizing it to something that people have understood and valued for thousands of years. And so I think the more that we can draw parallels to the real world, or the old world, if you will, I think it helps people kind of grok and understand what we're doing and why this is important. So when you tell someone, hey, Bitcoin's like gold and you can send it like an email anywhere around the world, light bulbs usually go off. When you tell them, hey, this is a fixed supply, there's only 21 million. That's it. There's no more. They're like, I get it, because all the fiat money and all those things, you can print as much as you want. There's no counterbalance, and we've seen that in the U.S. We printed trillions of dollars just overnight, and we have a $27 trillion debt. So when people sort of see that and experience that, when you talk about the fixed supply of Bitcoin, I think it really resonates. And gold, by the way, is not fixed, it's scarce. We don't actually know what the supply of gold is, but what we do know is it increases with demand. And so there's 3,000 tons of gold being mined per year right now, and that will increase if the price continues to go up and technology improves. So I think, in short, analogizing and drawing, comparisons is a helpful way, and staying away from terminology that, and acronyms like ICO that people don't necessarily understand. One of our biggest challenges initially was both getting a license. We worked for about 18 months to become a New York Trust company. That was like our first license.
That was huge.
Big process. But really exciting that New York was like, wait a second, we want to foster this innovation. And I think there's something like 26 to 30 companies in New York building crypto related products because of that foresight. And so I think the more that jurisdictions and governments sort of understand, whoa, this is the future, let's build a framework so that companies can come in, build, offer services and get banking relationships. That's really important, because uncertainty is not helpful when you're trying to kind of build the future. Now, there's a new thing called decentralized finance, DeFi, which truly is permissionless, and we can get into that more. And that's a new frontier that's even more exciting, because you literally can do all these cool things like borrow and lend and move money around without permission.
I think that's a big deal. I think in the early days, even getting a banking relationship, you would see, I still remember they had that group that came together. They were supposed to investigate how we could use crypto. And the first thing that is small, startups, we were trying to get this banking relationships, period. Like if you had coin or bit in your name and you went to a bank to get, to make payroll.
Already guilty, right?
You're dead. They're not going, nope.
Yeah.
So, I mean.
Guilty as charged.
Guilty as charged. But I do think, again, going back to your point, as jurisdictions dealt with companies that had reputations that wanted to get things done a certain way, I think there's a balancing act. But I think the fact that you guys decided to be some of those that actually went to pursue that, those of us who in the startup space that may not have had as much means, we directly benefited from the legitimizing of folks coming in and making sure that this could be done. So again, these are the things I don't think we say enough of as we do get Wild West life. But that, again, credibility has been super amazing. I think even humbly, and piggybacking on that, you again, I think it takes all of us to make this better.
Building off that point, we started buying Bitcoin, but we waited about 6 months before we really went public and disclosed that to the world, because the narrative at the time was so bad, and we were a little bit afraid that people were going to say, wait a second, you're buying into this money laundering, illicit activity, terrorist financing type currency. And we were really afraid that people would not understand it. So when we did go public, though, we felt strongly wait a second, this is not being used for bad activity. We really need to get out there and really flip the narrative on this, because the media was just loving all this Silk Road and all these, headlines that generated a lot of traffic, but also a lot of sort of misinformation on the space. And ever since, we've kind of been really pushing the promise of Bitcoin and crypto. So yeah.
Yeah, and I think, and this is some of the things you may not know, again, I remember we were negotiating with the Zimbabwe Reserve Bank to do remittances, and you would hear Silk Road stories, but we would also hear stories like the stuff that you guys were doing and other good actors. And again, it would allow us to send positive articles. The people who were hating on the inside were just circulating these negative articles about, again, the Silk Road, Mount Gox, and all these things. And we would counter hey, these folks wouldn't be putting their money on something bad like that. So again, I think indirectly, and this again, the collaboration in the space, how we all have a role to play, even, from using someone's slides to actually having levels of success in certain ways, help those who are in the space that, you may not even know, but actually paving a way, as it were. I think that's been super, super important. I think one of the things that you also, you guys have done that's been helpful, and my co-host John Caranger brought that up, as well as Deidre, with the fact of making sure the regular person knew that this wasn't a scam. going to a trusted place and actually being able. I even got hacked for a little around 50 Bitcoin through a SIM swap. And look, we have our own wallet product where, again, we do not take possession of people's keys. We have no custodial, so we have our own wallet product. But I was using, and it wasn't Gemini, but I was using someone else just to move quickly. Like to move quickly, I moved, and then it was a SIM swap. The person literally stole my phone number and got access, and then started to, and I want to say this is 2000. Well, anyway, my point is, I think some of the things about coming to this space, again, there's more people coming, having trusted places to go to do transactions, from what you've seen out there. And again, I think when you start talking about decentralizing, people talk about the Binance, and they played a role. For the people who are just getting in and the exchange that you set up with Gemini, what would be some of the, I think, things you would recommend? And again, this is, and in a way, it sounds like we're talking about Gemini, but we're talking about Gemini for a reason. We need our viewers to know who's reputable, who's been committed to this space, who's been supporting the coming together of our people around this issue, and Gemini has been in that position. We want them to know how they can leverage your project as a tool. And what would you say as a person who's a newbie in the space could do so?
Yeah, so I think the first thing I would say is there are safe, regulated places to engage with this technology. It's not a Wild West. There are, unregulated venues, but we're building a regulated place, and we want to make it super easy and simple and not scary. Just like you'd expect from any other sort of financial services company if you're opening up a bank account or whatever. I'd say that, like, in general, there's sort of three challenges to getting into the space. First, you need an internet connection, and most people have that, and that is sort of, changing quickly if you don't. And then the second is like an identity problem. We effectively need to know our customer. That's part of the rules and regulations that we fall under. And then the third is funding. So we're always trying to build like better ways to fund your account and make it that easier. So currently we're open in Nigeria, South Africa, and Egypt. But it's a little challenging to get dollars onto the platform. So to basically get into this new system. And shortly we'll be improving that with debit cards. And we'll continue to look for ways to allow people to sort of send value into the exchange to then buy crypto and get into the crypto world. The identity problem's a little more challenging, and it's probably not something we alone can solve for, but there's probably clever ways where we can understand who you are based on, your mobile account and things like that. But those are generally the three things. And I guess the fourth bucket is if a jurisdiction sort of hostile to crypto, it does make it a little bit more challenging. So those are like that's how we think about getting people into the system, into a place like Gemini.
Yeah, I think so, and definitely the KYC, anti-money laundering, and we've been, even as a company, dealing with these different attestations and coming up with ways to use identity and how to maintain it. And once you identify someone, every time they come back, you got to make sure. And we've dealt with, in Zimbabwe, you're dealing with OFAC, and you're dealing with so many, so much that you're consistent and you're held accountable. So again, I think so many people don't understand how many worlds that being in our space of crypto that we pushed on to improve that experience. Just by saying we want to be, to give you a way to transact, we've literally pushed other industries to improve and they enter the 2020 properly, as opposed to anyway.
I mean, the system of crypto is the fairest and most equitable system on the planet, and that's, I think, why we're all drawn to it and that promise. The problem is getting into the system is not super easy, and it benefits people who are already in the existing system. If you already have a bank account, you have identity solved, then you can move value into the new system. And that's going to be the challenge. That's going to be our biggest challenge, over the next decade or so, is like getting people into this new system who may not be in the old system. And that's really the promise, and the larger mission is to sort of, you can do good and do well and do good with crypto, and few technologies offer that ability. And I think, if you look at the early internet and what it's done to information, now the internet has arguably lost its way in some ways, and there's toxic elements to it, but the net positive of that technology is enormous. And I think crypto really has that ability to bring hundreds of millions, if not billions of people who are unbanked or underbanked into this new world of open, decentralized finance that's permissionless, where you can become your own bank. You don't have to knock on someone's door and say, hey, will you open an account for me, and ask them for permission. The challenge will be to get all of those folks into this system and solving for those three problems that I just discussed. And we're on our way, but that is going to be a big part if this is going to be, because the goal is not to rebuild the old system. The goal is to solve these problems that the old system can't solve and won't solve. Wells Fargo is not going to build branches in many parts of the world. If they could, they try, and they're just not going to get there. But we can solve so much of this through software, and we're doing that. And so that when someone says, look, I don't love the fact that the local currency that I'm holding is losing value and inflating. Okay, I'm just going to start storing my value in Bitcoin because it's got a fixed supply. Or I can't get a loan because the bank won't give me one. They don't trust that I say who I am. Well, then I'll just go over to decentralized finance. I'll buy some Ether and I'll go and, stake it for DAI, which is a decentralized stable coin. And I'll borrow DAI off of that Ether, and I've got my loan. And I didn't ask anybody for permission. And so when we talk about becoming your own bank, that's sort of the vision that's starting to take form.
Okay, I think you're even, that was another way of getting back to that. Before we go to decentralized the finance, let's talk about your journey to a stable coin. Again, I'm not going to say I'm a Bitcoin maximalist, but I'm a Bitcoin maximalist. I don't get into a lot of, we support as a community. I never want myself to be the ceiling. It might be the floor of understanding, but Bitcoin to me is the most successful application of blockchain technology. And just to say that's just the truth, to bear witness.
Right.
But so often people don't want to, and I think one of the reasons, and we say Satoshi is black at the Black Blockchain Summit, but what's so amazing is that Satoshi left us with something without putting his stamp all over it and trying to be in every movie. What did Suge Knight say about, he's not going to be in all over your rap songs? Like, we literally have someone who actually helped create, or a group of people who created something that we literally all can benefit from, and they're not out here peddling it or promoting it. It's up to us and the algorithm and the math behind it to actually promote it. Now that we go from that space and we start talking about stablecoins, and I get this when I talk to folks who want to connect the real world to the digital world, and we start talking about oracles and ways that we verify information. In the digital space, I can see everything. But if you're pegging, how they had talked about Venezuela, the petro, they got this many oil. Well, look, if you don't trust them with their oil in the first place, you telling me that for every token they got, there's a barrel of oil. I'm not believing that either. So I'm like, okay. So my point, your journey to the stable coin and then taking that now to where you see with the next level, how did you get there, and what are your thoughts about the stable coin? I know now you have it.
Yeah, so I think that decentralization is a spectrum, and Bitcoin, as you rightly put it, is the oldest and most successful crypto. I mean, is OG crypto. It set the blueprint for decentralization and everything that's come after it, and is really this emergent money. There's nobody's forcing people to buy Bitcoin. They're buying it because they believe in that idea and the properties that it represents, and that it's a store of value or an emerging store of value for that future. And I think that stable coins offer a different, like more of a medium of exchange. And so we built the Gemini dollar to peg to the US dollar, because we figured, look, people still like to use dollars, and they will for a long time, even though it's got its issues and the US is got certain problems that are on the horizon. But if we can create like a dollar that gets, you know, easy to send around, you know, it's not Bitcoin, it's not trying to compete with Bitcoin. It's just another way. And I think that, you know, if the vision down the road for like long term where we think crypto will be, there's going to be intermediate steps along the way. And so, you know, if you think of I got onto the internet back when AOL was the thing, right? And I'd go around and, you know, you play in chat rooms and have fun. And then the internet kind of moved beyond AOL, and it didn't sort of keep up with
you got mail.
Yeah, it didn't keep up with that evolution. And so I think the way people are getting into crypto and interacting today will be different than what it looks like 5 years from now. And some people being able to send a US dollar around the world very quickly, 24/7, 365, virtually, you know, free, that creates a lot of value for some people. And some people, you know, they don't want a centralized stablecoin, so they'll go for DAI, which is completely in the Ethereum ecosystem. But I think that maybe just circling back to the concept of maximalism, I think one of the challenges as an industry that we have as a whole is that there has been historically some disagreement that's gotten pretty heated. And we really need to, it's so important to realize and always remind ourselves that we're all on the same team. And we're all pulling together, to use a rowing metaphor, literally towards this greater, you know, this just cause, this vision for a better future, this dream that doesn't exist today. But it's not a given that we get there. And so if we sort of don't, you know, work together and make sure we're collaborating around the globe and making sure that we get there, we may not. And I think that, you know, when we met, because we have an interest in crypto, we immediately had a bond. It's like, oh my God, we're working on the same problem. We share the same vision for that future. And all of a sudden, it's like you have this connection and we're on the same team. And we may be like attacking the problem from slightly different areas and different angles or whatever, but we want the same thing. And I think that we can't lose sight of that. And part of that for me might come from my athletic background, because as a rower, even though I wanted to beat my competition and always win the race, I had a sort of deep connection because I knew that the other teams were putting the same hours that I was putting in, maybe even a little bit more. I don't know. We were all, you know, doing the hard work. And at the end of the day, if you're beating somebody that you don't respect, then what does it mean, right? You always respect your competition. You always have humility. You go out knowing that winning is not a given, and that, you know, you are ultimately, you know, all kind of on that same journey. And that is so important, I think, with crypto, because it's really this uniting technology. It's not a technology of separating people. It's taking away power from kind of these centralized authorities that have exerted monopolistic control for, you know, hundreds of years. Money is such an important thing. And if you control money, you can do so much with it. And it really should be in the hands of the people, right? But it's not a given, and we have to kind of work together to get to that future. And we just can't lose sight. Now, look, when I bought a lot of Bitcoin, there was a time where I was like, I really want, you know, Bitcoin to win, and you get wedded to this belief and idea system. But then you're like, well, wait a second, like that's silly. There's going to be a lot of tremendous projects and a lot of winners in this space. Let's make sure we have as many winners as possible, because like one winner isn't that exciting and that fun. Like we can all win, so let's just go do it.
Wow, you know, that was damn near mic drop. Like, look, I literally wanted to do the 5 hour. That was so humbly, Cameron, I mean, I think from a very high level, and without even saying amen or throwing any religious things, I think culturally what you spoke to was like heavy, man. And I think you're right. I think again, Bitcoin was my entree. Again, it wasn't Litecoin. It wasn't just back then it was altcoins. We called it something else. We've been big into Lightning, trying to come up with increasing speeds as well as transaction costs. We did something from Nigeria to Zimbabwe with the remittances. I think you're right, though. I think to talk to each other in ways where we're, uplifting, like just what you just did. I mean, again, we need to have more conversations like that to encourage folks, even if they're working, as we all work on our different projects, just like you said. And the fact you even brought up how we're connected through this, I think, again, this technology being something that is a blockchain of networks and consensus. When we even think about, we're in such an election season, and even talking about what consensus means, and how we can now change the way that we can agree with each other and it not be a, some loss. So I think, again, I think that's heavy. I don't want to take it. I want to get some of your last stuff. So if you could talk about what
and just to if we end up solving and making payments better in the US, then I don't think we've really fulfilled our promise. We really need to get to other parts of the world where the payment systems may not be efficient, or there may not be a lot of alternatives, and people are stuck with, let's say, a peso or something that is devaluing, and their entire wealth is sort of going up in smoke, and that is really why we're here and why we're trying to do this. We spent a lot of time focusing on the US to sort of build up the platform and the trust and the brand and all that stuff. But now we need to export that into other parts of the world. And it's going to be a joint effort, right? And I think compassion and empathy is really the key word, like understanding what problem are you facing in your area and how can we come and help that? Because right now the world is balkanized, and you see that with payment systems, you see it all, up and down the stack, and breaking through those, creating borderless money and kind of linking it all together, I think is really why we're here.
Yeah, and I think it's something, and this is, again, when we're in these conversations, and again, so much of what we're doing is part of a greater Pan-African, when I say that, people of African descent. I think, Cameron, what's interesting in what you just said is how we can collaborate to undo things. Like oftentimes, again, I'm wearing an I Love Black People t-shirt. When we put the words race in it, and get kind of spooky and get uncomfortable. But and this may not be as evident, bro, but just humbly, some of these systems were created deliberately. Like so often they're talking about, oh, how did this happen? Now listen, somebody actually was benefiting from this balkanized crazy system on purpose. And they wanted to limit other people's access so that they could keep you as a controlled market. I mean, be it even in the United States, and we look at some of the institutions where if we literally wanted everybody to be able to contribute, the system would have been set up where everybody can contribute. But instead, there's ways that you can make it so that I'm operating at a disadvantage. And we may not be able to change what was done before we arrived. And you arrived after me. I'm 51 years old. I know you're a little less than 50, a little less than 40 too, youngster. But I
got one more year to go.
Yeah, humbly. But we could do something about this moment. And I just want to say this, and I'm not saying it's lost on you because your words have already and your deeds speak to this. When we're dealing with systems, like even when we're in Zimbabwe, dealing with like one of the biggest things people talk about, hyperinflation. One of the biggest things in Zimbabwe, they've been under 20 years of sanctions from the United States government. Not someone else's government, like our government, for whatever the reasons they will say, but these have created an economic instability. That's crazy. And we can talk about Venezuela, we can talk about things. What I'm saying to you, I don't think there's always political solutions to solve things. I think technology is oftentimes a better tool. It's not absolute. It's neither good or
and
bad.
citizens lose, and they're often abstracted away from the problem, or don't, they're just sort of hapless victims. And it's like, oh, 20 years goes by, and so I think you make great points. And if you look at like the US, for example, when the Fed wants to print money and distribute it, where do they give it to? They give it to banks.
The banks.
The people who are closest to that distribution point get the money first. And then that is a benefit that accrues. It doesn't go to the individual or whatever. And there is a centralization. Centralization is such a problematic thing in many of these areas. But what's so cool about crypto and money is that we don't necessarily have to spend time saying, hey, let's go fix this system. We're just going to build a new one. And I think there's certain areas probably where you can't just completely reimagine or start anew. But at least with respect to money, which is super powerful, we probably don't have to spend a lot of time fixing what's broken. It's like, hey, here's carte blanche. You can build greenfield. Let's go build the system that we want. And what's amazing about crypto is it's like the first money where it really started with the individual. It's a bottom-up revolution. It's not starting at the top, and then it's like, hey, we're now going to like trickle this down and distribute it. Anybody can get into it, and that's so powerful. And I think sometimes people we talk about when's Wall Street going to come, but we're not waiting around, and they're probably going to be later to the party. And this is like the first technology where the individual kind of can get it first. So I agree that we can rebuild these new systems, but there's a lot of intent, with historical systems, or maybe the technology wasn't even there. So it's sort of like, well, this is the best we can do, and it just creates this entrenched way of doing things that you can't build out, pull yourself out.
But I think what you said, I mean, and this is the example we use when we were talking about, one of the most difficult racial times was catching a cab back in the day, even New York.
Yeah.
You would put your hand out, look, and I've been in Times Square, cold as hell, and they wouldn't stop for me. And when they came out with Uber, bro, now again, Uber did not come out. This wasn't Jesse Jackson. This wasn't Al Sharp. This was Uber. Uber, that technology, that rideshare technology made that type of racism obsolete. I don't know if people still don't pick folks up. I don't know. I got an Uber, I got Lyft. Look, they come in. I know what they look like. I know what the car number. I mean, I got all the information to be able to create solutions with technology where we don't have to protest or get caught up in someone's political agenda. And like you just said, literally make something that's magnitudes better. It literally is faster. It's literally cheaper.
Right.
Again, to leverage as many brains. Again, and I'm going to use it again. If we had waited for some activists to come up with a way, it would have been another 100 years, and I still have my hand out waiting for the cat.
Right.
But this rideshare technology, and I think the point you're making even more powerfully is that it's not just for the United States. The fact that it is something that has a global, it can't be, and that the sovereignty of the individual, like what you just said, the individual, like again, we're dealing with collectives, but I'm an individual and I have my own ways, and I definitely want to have a level of sovereignty over whatever that is I decided to be. So again, I don't want to. This has been awesome, Cameron. Thank you for
and that's like a really great example where technology sort of just started to help the problem that you experienced, and you get to interact with more drivers, and they're picking you up, and all of a sudden it's like solved, or it's moving in the direction. Bitcoin has no bias, and it's not going to tell you, oh, this isn't right for you, or it has no opinion on that stuff. And I think that's kind of what I love about the technology. And there's a lot of people who when we first got in 2013 in the Bitcoin, summit that we did in the Bay Area, we talked about the Gandhi quote, sort of first they ignore you, then they laugh, then they try to fight you, then you win. And we're all, you and I are crazy, right? And you know, initially we were ignored, and then all of the skeptics and people laughing or whatever. And so I think that you know, what I love about, like, when we found Bitcoin, we didn't have 20 years of capital markets or investment banking or finance experience. So we were open. We didn't have this bias, or we weren't wedded to this old system. Like, this is how it's done. And therefore, you know, we've got to, this is never going to work. We were literally open to it. And the technology is open to us. And I think it's so powerful along those lines. And I love what you said about that.
Well, look, I wanted to hit that last 500K piece that you
Yeah,
did,
let's do it.
Yeah, please. So tell us more about where you see the future, man. That'd be super helpful.
Sure. So I think it's important, I should mention that when we bought our first Bitcoin, it was under $10. And the market cap for the entire space, and it was all Bitcoin world, was about $100 million market cap. In 10 short years, Bitcoin has gone up to a $200 billion market cap, which is a tremendous kind of growth. But it's still really small when you look at the value of above ground gold right now, which is something like $8 or $9 trillion. So we believe that if Bitcoin is to be an emergent store of value and really take a mantle of a global store of value, that the price appreciation could be something like 40 to 40 times from where it is, if it's going to take some piece, if not all of gold, in terms of its value. And that was that's how we think about the valuation framework. So a lot of people look at Bitcoin and they say, oh, $10,000, $11,000 Bitcoin, that sounds expensive. Well, part of one thing to note is that you can buy fractions of a Bitcoin. You don't have to buy a full Bitcoin. And I think a lot of people don't actually know that. You can buy $50 of Bitcoin or fraction. So there's another education thing that we constantly need to be out there sort of, reiterating. But if you look at what is going on with the US economy and the amount of debt, the piles of debt, there's a lot of money printing going on, and the inflation is a real risk. And so how do you protect that? Now, Zimbabwe is the classic example, right, of you've got the $1 trillion bill, but the US is positioned where the amount of debt, eventually you can't kick that can down the road. And I think that, so how do you protect yourself? You need an asset that can store value and keep your purchasing power. We think Bitcoin is the answer there. Gold historically has been the way people have tried to preserve value. But we think Bitcoin is ultimately better at being gold than gold. And because of all of the properties, its ability to be sent around like an email, money through the internet, because we think that it can get to more places in the world. There's people who will not be able to get to gold because it's just physical, right? It's hard, but who will get a internet connection and be able to get into this new system that are going to be able to store value in Bitcoin. So, we think that will play out over the next decade. The stage is sort of set. And Bitcoin's sort of like the first starting point. I think a lot of people are like, how do I get into crypto? There's so many, or what do I do? And I think it always sort of starts with Bitcoin. That's how you get your feet wet. And then you kind of go from there. And Ethereum is trying to, is really good for these financial permissionless transactions. If you want to get into decentralized finance, which people call DeFi, that's sort of the next step, phase 2 of kind of exploration. But we published that piece about a couple weeks ago. The price of Bitcoin's around $10,000 to $12,000 today. When we gave a presentation at the Value Investors Conference, and I think it was 2014, we pretty much said the same talking points around Bitcoin, and the price of Bitcoin was $132 or something. So we've been sort of saying the same thing over the past decade, and we'll continue to say it for the next decade. And the story so far is playing out. Bitcoin is grown a lot, but we think it's still very, very early.
I think and I think just to even add thing to your point, I think what you guys have done in the States even helps with legitimacy in other countries in the world. And I think, again, for smaller startups, as we deal with some different problems, I think, again, I brought up how you use Gemini, even the concept we did with I Love Black People, we realized that when we talked about the tech first, like people would get thrown off. But if we can build a community that transcends these imaginary borders that really don't make any, I mean, again, the borders in Africa were not made by Africans, so it's problematic borders there. So when you start talking about, look, these borders aren't real anyway, these are fictions, we can create our own fictions if you want to. We can actually be outside of these things. And then as we connect these folks together, almost like a green book, where one side we got businesses that are trusted and we've got this community, we can use Lightning, do transactions. But the thing that I see that you guys in helping some of the smaller startups in the space, have you guys looked at doing a tour of the continent and sitting down with key business people? You know, I'm not trying to put in. The fact that you're saying you're doing stuff in Nigeria, you're doing stuff in Egypt and South Africa. I think with the scale you've made, Nigeria, over 200 million people, 1 out of every 5 Black people in the world are actually Nigerians. Put the numbers together. So it's definitely, now, small startups, Nigeria is hard. Zimbabwe, 14 million people. It's easier to get your hands around that, make mistakes as a startup. I would really say, without you guys doing anything directly, just by having, once the borders open up, or even something that can be done virtually, where business people and folks who are decision makers sitting down with like rational business people who met the requirements in the United States at so many levels and who have a great record of execution, even pulling together people to have conversations about the utility of the technology we're in. And I'm not saying, of course, I could, we're business people, we're technologists, so there's an interest for Gemini. But what you oftentimes may not see is when you open doors, bro, if there's a window that gets cracked for me, there's another thing that John gets into, like literally, and again, ain't nobody trying to make you, bust your head against anybody. But at the end of the day, the rooms that you could get into that may not allow me to in for whatever reason, and those places that you're able to get into, I think really could help all of us in the space because of even the body of work that you've done already, and even the way you talk about this conversation. It's always been, I mean, again, from the day I used your thing, it literally has the humanness to it. And it would help so many of us, there's folks in Cameroon doing projects, in Botswana, having folks from the States that have a success in dealing with the regulatory regimes there, coming, talking about, and again, it could be from Gemini. It doesn't have to be, I do believe in altruism, but I'm saying it could literally be a business decision. But because of that, there's going to be local folks who've already been in the space, who've been looking like they cuckoo birds, but here you come, with something that's, more established. It will definitely help all of us, from Madagascar to Togo to Zimbabwe and Zambia. I just wanted to say that out loud. Thank you.
Yeah, no, thank you for saying that. So I'd say the first couple years of Gemini was sort of really focused on the US and like, let's get this right. And I'd say over the past couple years, we spent some time in Asia because there's a lot of activity going on there. But I do think that Africa is really important, and spending time there and understanding and doing just what you said, I think it makes a lot of sense. And so we're definitely going to be looking to do that over the next year or so. What's so cool about this whole revolution is it's decentralized and it's distributed. So historically, technology generally emanates from like the Bay Area, San Francisco, and everybody feels like, oh, I've got to be there if I'm going to be part of this and build something. And that is really becoming less and less true at a pretty fast clip. And so like Gemini, we built it in New York because New York wanted to sort of start regulating this thing. But the ethos is really all over the world. And we are currently, we're building a small office in London. I mean, it's just getting started. It'll be a very, important part of our business. We're also in Singapore, and we are constantly looking for other areas. And so I think, it's likely to there's no sort of, we have to be in the Bay Area or wherever. It's a distributed technology. So I think there's a great opportunity for building offices in places of the world that traditionally you may not build a technology company, but now we can. And so I think it's a great idea.
And this is a part that sometimes gets disconnected because of, even the work that I've done. We've done stuff in the States, we did stuff in Africa. When you're even talking to either a VC or even talking to people in space, when talking about Africa, it's like I wouldn't say bar, someplace, but when you're talking about the States, but there's a lack of access in both places. So when people are even now talking about reparations or even Black Lives Matter, I'm not trying to get you to the political part of it, but the things that you have already done give us another way to take control. So much of waiting for, and again, not I want everybody to go out and vote, but waiting for an election is not how either one of us have lived. Like if we were literally living from every 4 years, we'd be nuts.
Yeah.
We don't wait for nobody. We get out and do it. And I'm just saying, even to your message to folks in the States, when we're, no one's coming to save us. I'm not right. But they're not. If we ever get clear on that, what can I do? And when you go back to the point you made, I think very succinctly, that this is an individual thing, like one person can get into this economy, get into this technology. I would only say the things that you've seen in Africa and even some of these developing countries, even if you look at our America, as balkanized as it, I'm wearing this shirt, as balkanized as it can be, the liberation that we can find through technology is not spooky, it's real. And you've built actually something that's sustainable, that is credible, and say, look, and again, I'm not asking, whatever someone's disposition is on reparation, I'm for reparation, to be very clear. That's for all my, power to. But my point is, you don't have to be in this one system. If Black folks had gotten to Bitcoin back in 2010, look, we would be buying up most of America.
I know. Yeah.
So I'm only saying this, even just as and I know you guys did like a tour in DC and done some great things to reach out to folks. I would even say that your conversation, just the way it is, like what you've done even in this discussion, to talk to everyone that was listening about how this can be helpful to you.
Right.
In the States, like, well, somebody's talking about, issues of justice. And you say, okay, cool. I'm not in, that's not my thing. But look, this is something I've been working on. And I'm just saying, talking to those communities, again, I'm not pitching you to do a HBCU tour where we have you talking to Spelman, Morehouse, and how, but literally what you're saying can take somebody's mind, because I'm an engineer. So my thing was engineering. My dad was in the Air Force. I always loved airplanes. But my point is, your conversation, I think, for the brother and sister on the continent of Africa is very helpful, but it's also helpful to brothers and sisters here in our own country. And I just want, if there's ever to be invited, and again, we got people from like Deidre, there's so many people where we can make sure that there are actionable things that can be told to people, that they don't have to wait for something to change. There's actually things that you could do to get sovereignty, to take control over your environment when you feel so that things aren't in control. And I think something as fundamental of a monetary or money system is key to that. And you've said it without being preachy, I get preachy. So my point is, you've said it very succinctly, and I think it's very helpful. I just want you to know that those are the relations, again, without even bringing up race one time, you talked about something that could help all of us. And I'm just trying to, just be very clear with you that's really what is, to me, at the core of so many of us. We just want to be able to participate and have sovereignty and control and not be victims. We want to be empowered. And you've succinctly demonstrated the work that you've done in that way. And I think, again, that's how people measure sometimes success. Show me what you've done. Look, this is what we've done. I'm clear. It was crazy. People thought it couldn't be done. The Gandhi quote, awesome. And now this is what you can do. You could do this. And it might be different. And I think the point you made about the maximalists, look, you know, we can meet together in the commons right here and based on this interesting technology. And you go off and do what you want. We can reconvene or not. Humbly, bro, I think thank you so much, Cameron. And again,
So that's what excited me about talking with you a lot is really getting the conversation into other parts of the world, in Africa, and also like parts of the US where people aren't banked or underbanked or whatever. And I think there's a lot of outreach to be done both stateside, and then also sort of in Africa and other parts of the world that could really, really benefit from this technology. And you're so right. If we got a lot of people into Bitcoin, 5-10 years ago, like what would that look like, And a lot of the people that got in were engineers, right, in the developed world, because they understood it first and they had the access level. And unfortunately, the people that really can benefit don't have the access, and we need to really solve that. And through the Black Lives Matter, all that movement and everything that's sort of transpired over the past 6 months, we've actually built a diversity, equity, inclusion. We're building a strategy as a company, and we have now a DEI leader, someone that we actually had internally who was sort of working on these different things off the side of her desk, part-time. We're like, wait a second, we need to do this full-time. This has to be part of the Gemini mission. And so we're building a strategy, both in our own communities, like where we have offices in Portland, Chicago, and New York, and also externally. And how are we going to reach, the people that we're trying to reach? And how are we going to get more Black engineers and people of color into our, the Gemini company and the spaceship? And so we're actively working on those things. And I think you're totally right about that. We really just, getting out there and building that strategy is super important. And we're not going to solve Kenya. Kenya, for example, has M-Pesa, right? They've done a lot of work on payments and things like that. So what can we learn there? There's engineers in Kenya, and we're not going to solve that from New York City. So we're going to have to get on the ground or figure that out. And there's other parts of Africa or whatever. So I'm a big fan of trying to find local entry points where we can put boots on the ground and start creating the linkages and learn and just build that future.
Yeah, Karen, I think I'd rather have that. I think, I think you said this already in the presentation. I think we all have something to add to the conversation. But I'm going to actually even come back to this. From your vantage point in New York, and I tell this to people, even when we talk about Africa, or listen, and this is, and I think I would be remiss by the fact that this is, you being a person with your office in New York, this is 9/11, anniversary for all those who lost their lives from that disaster. We want to pay our respects, and for all the victims that have been, traumatized by terrorism and by these actions. What we're doing is in our way as engineers, as entrepreneurs, to create a better life where people don't see that as an answer or have to be victimized. I would say, in even more succinctly, I tell people, us as Americans, oftentimes we have more say-so to what happens to folks in Afghanistan than the folks actually in Afghanistan. And I just want to be clear also that when you help make policies that allow crypto to be in New York, that has a direct impact on African governments and other governments all over the world, because they oftentimes look this way to set their policies. And when we look at things like Kenya, M-Pesa is amazing in the sense that telcos were allowed to have cash reserves. Now in America, you know, JP Morgan, these banks ain't gonna let Verizon, you know, look, we're not gonna let y'all hold. I would also sometimes hear people say, oh, it's because the United States is so advanced. I said, no. In Kenya, the banks didn't control the politicians as well. So anyone with a better solution could actually rise to the top. In America, you can have a great solution. You're gonna have to deal with folks who actually write the laws, which are lobbyists. So when I say this, even if you never touch Africa, I want you to go to Africa as often as possible, right? Even if you don't, I want us all even as Americans to know that we can impact so much of the world by the work we do here to make a fairer place, even if not in the context explicitly of race, but just making a technology that's successful, that don't get people in trouble, that people can understand you're doing something for that entrepreneur in Uganda right now, so that when he goes to his government, they can say, hey, this is something that's already working, or this is something that is credible. So I just the only reason I say that, because sometimes we make this thing about being on safari. No, wherever we are, again, before Black Lives Matter, what you showed me, this is a person in the space, and just like being 100, these are the real interactions that actually are going to lead to substantive, sustainable changes. And it's not necessarily going,
Sorry, you still there?
Yeah, Zoom. I'm sorry if I went too far.
No, I got a call in my phone, but I think we're good. But yeah, that's a great point, and I think this is a multi-pronged approach, and I think that's true with any issue that we want to change or push forward. You can protest, you know, to your point about the Uber thing. We can protest. That is one prong. The other prong is finding like a technology solution that pushes us forward, the conversation forward. The other is engaging with regulators and lawmakers. And then another prong, you know, is getting on the ground and figuring it out and coming up with solutions that are permissionless. And I think that, you know, all of those things are important. We need to do all of it. We need to protest systems that we think are problematic, racist, you know, all of that. And then we also need to just build solutions where we can just move beyond quickly and fastly without permission. And I want to get a lot of people in Africa into Bitcoin, so we don't have to worry. You know, just like, let's go do it, right? And we will continue to engage with regulators to the extent that we can get them to understand the value of, hey, this is an amazing technology. It's going to really benefit your citizens. Let's go do it the right way. So I think everything you're saying is super on point. We just have to do all of it. And do all of it well. And that's why, you know, we're building a strategy. There's not going to be one silver bullet or solution. But I think if we have a strategy and kind of hold ourselves accountable, we will get there. And it's great to hear that stuff that we're doing in New York is reverberating around the world into places in Africa. And that's really great, but that's not all we want to do, right? And that we can do, you know, that's one part of that picture. I think we also need to get on the ground and understand that. And we're starting, you know, our theme over the past year is really going global. And we started, you know, we'll be entering the UK and Europe and Singapore in a big way. And then I think, you know, as I mentioned, we got Nigeria, South Africa, and Egypt. But hey, there's a lot more countries in Africa that we need to understand how to get into. And then we got to make the payment piece better as a start. And I think Kenya is an amazing opportunity with M-Pesa. It's way beyond America in many ways. Which is fantastic, right? We can learn from Kenya. You know, Kenya's doing things that we're doing better. And so that is super important. And then there's America, right? We've got millions and millions of underbanked people in America, and we've got to solve that problem. We can't have people in our backyard, impoverished, not in the system, unbanked, or living paycheck to paycheck and solving problems externally without also looking internally. I mean, there's so many people who are in that spot, and it's staggering. So hopefully we can play our part in that. And as I said, like part of our strategy, we've got an office in Chicago. We want to do things in the local community and try and see what we can do, whether it's, finding more engineers, or creating, opportunities, or investing in local businesses and things to kind of play our part.
No, look, thank you for playing your part that you've done. I think another thing that we're going to do, we've done some hackathons, and one of our issues with our hackathon is how we connect blockchain technology to some of this youth gun violence. And when you just said Chicago for the second time, again, this is America, and this many people being harmed by gun violence. And
Tyler and I had this. We met this man named Arshay Cooper, who was part of the first Black rowing team in America in the west side of Chicago. And we actually bumped into him in New York a couple years back, and he's like, "Hey, I was on this rowing team, and we immediately had this bond through sport, through rowing." It's like, "Oh, I know what you did. Like, this is so cool." And he wrote a memoir that became, that is now a Netflix documentary. It's called The Most Beautiful Thing. And they just did they're starting the release right now. And it's interviews members of this team, and what they grew up with and had to deal with on the west side of Chicago. Most people don't realize that there's a all black rowing team on the west side. And it's an amazing story. And when I was rowing, I was worried about going a little bit faster and all these things. They were worried about surviving. When they're in the boat, they're worried about not drowning. When they get out of the boat, they're worried about not getting shot. And it's really understanding their story. But I think that the connection through sport, the connection that you and I have to crypto, I think that's super important. But these guys, to survive on the west side, you've got to, in many cases, join a gang. They don't make bad decisions; they make hard decisions, and they're victims of their circumstance. And so, it's really eye-opening when you kind of see that and understand, like, yeah, wow, like even in the west side of Chicago, we've got to help solve these problems.
I think that connection definitely could follow with your Chicago people, because we're looking at the youth gun violence and using tech. Like, I think that, I know we're wrapping up, but even the connection, you keep talking about the human connection, which can transcend anything. We can connect through, like you said, through vocation, athletics, what have you, academia. I think, again, this has been amazing, Cameron. Thank you. And
yeah,
1,000 times, brother. Hallelujah. God bless you, you and your team, your brother, your family, man. 39, bro, man. You got a lot of time left, bro. You got a lot of time left. I want what you got. What do you got planned? Give me the next 10 years, real quick. We're gonna. And look, I know Ayana's. Give me the next 10, bro. I want the next 10.
Ayana's like, oh,
is that a piece of shirt? What's the next 10?
like,
50. I'm 51. By the time you 51, Cameron, what you got?
I mean, I'd say Bitcoin's at 500,000. That would be the big one. It feels like the next 10 is really, I think, going to be for crypto. It's going to be a really exciting, probably the most exciting, maybe one of the most exciting phases, because so much has happened over the past 10 years to sort of set the stage. You're building, I'm building, we're all kind of getting ready for that breakout moment, I think. And so I'm super excited about the next decade. you know, but it's hard to believe, wow, I'm going to be 40 in in less than a year. Time flies when you're having fun.
God bless him. Thank you so much, Camera, again.
Thanks so much.
Yeah, no, Black
really
Summit, appreciate it.
All right, all right. That was a really great session with Mr. Sinclair Skinner and Cameron Winklevoss, who is the president and co-founder of Gemini. That brings us to the end of the 2020 Black Blockchain Summit. But before we go, we have a couple of announcements that we are going to make. And I would like to invite the co-host of the Black Blockchain Summit, together with myself, Mr. Sinclair Skinner, good brother and mentor to me and to many people within the Black Blockchain community. Karibu sana, Bwana Skinner.
All right, Abaragani. Can you hear me?
I can hear you pretty good. Pretty good,
Right,
yeah.
I hear you amazingly. Okay. I'm just trying to use some of my best Kwanzaa Swahili, but thank you so much. And John, thank you for putting this conference on your shoulders, on your back, when we were discussing on if we were going to continue with the show. The fact that you had so much confidence in our ability to pull this off, it's your work. And Sister Ayana, shout out, you know, she's behind the scenes pulling the puppet strings, just amazing work. And we're just so grateful that you know, Ala Kanani, Deidre, everyone coming together to make this such a success. And you know, again, we doing it for the culture. I think this is like the quintessential doing it for the culture. This is what, like 2020, if we hadn't put this together, this wouldn't have happened. And just to actually to play a small role to make sure that we could be a part of this has just been amazing. So thank you. And watching, you know, look, and I didn't know how many of these you were involved in, like being and speaking in the different ones. I mean, definitely creating the cultural tone, creating the technical tone, and having that, you know, this authentically body of work that is us has just been, it's just such a humbling thing. So awesome, bro. Thank you. And thank you everyone who participated. All the sponsors, we appreciate Gemini, Upholds, Perkins Coie, shout out, triple shout out, Perkins Coie, Bittrex. We know the check's in the mail. I mean, it's one of those things where, you know, all the folks coming together make this possible. Our families, my wife, this is just definitely grateful for this opportunity and amazing speakers. I mean, again, Reggie Middleton. I mean, we got so many, Tavonia, like there's so many people in our space. Andreas, shout out to his team for grabbing that Lamar, you know, making sure that we able to have a real our titans of the industry, talking to other titans. It's just a great, you know, mix. The Pan-African piece, you know, Sister Whitney, we got the Caribbean, the indigenous, the folks who don't know their last names. I mean, everybody coming together to make this thing happen is, you know, Satoshi is black, baby. Woo!
Satoshi is black. Satoshi is black. Thank you to Dana at the video production. I think this year's summit was quite different in that it was the Corona edition where we had the virtual summit. And so for the first time doing this, I think we did an amazing job, and we want to say special thanks to the team that made it happen in the background. So Sinclair Skinner, looking good. Whereabouts are you?
Oh yeah, I'm in the Dominican Republic, with staying at a little villa quarantine with my wife. My wife's from the Dominican Republic. Are we gonna give a shout out to the pitch competition, or how you want to do it?
Yeah, let's go ahead. So we have a very interesting pitch competition coming up, and it's going to be a virtual hackathon, building on blockchain technology to solve one persistent and huge problem, which is basically gun violence, particularly amongst Black on Black communities in the United States. Of course, the technology is scalable and can be extended to wherever it's needed around the world. But Sinclair, please elaborate more on why you think this is a key issue that we should be focusing on.
Yeah, as we all know, just with the time, not only we've been dealing with a pandemic as relates to the coronavirus, for 500 years we've been dealing with a pandemic called racism, and that racism in many ways is really manifested in almost like a genocide. You see Black bodies dying, and it's almost become kind of like a violence porn. And if it's happening in Africa or if it's happening in a so-called urban center in the United States, we've almost become desensitized by these horrific numbers. And it's not just George Floyd being murdered by the police. It's kind of interesting. He was accused of passing a counterfeit $20 bill. Now, us being in the blockchain space, we know having Bitcoin, the ability to authenticate transactions, it doesn't require antiquated people looking and seeing if this is real or not. We know there's technology that actually prevents that. And we also know how when things like trust are somehow destroyed and people accuse us of things in a racially charged environment, it could actually lead to our death. So literally paper fiat coupled with racism and genocide led to the death of George Floyd. What we also seen in a real way is that the police, the ATF, FBI, the DEA has not been able to prevent illegal gun crime in America. And we think that there are tools that we can use as citizens to help us understand and be able to address this issue of illegal gun violence. The technology that we have is almost like the Minority Report. I was looking at some information about how big data, AI, how now they can even predict if a woman is pregnant before she even knows that she's pregnant by her behavior, by being able to aggregate so much data now to say that this is a prediction, not just data to say what you've done in the past, but ways that we can predict what happens in the future. And I'm sure the pattern of a person who's obtained an illegal firearm about to murder someone's got to be a unique pattern, and that there's got to be a way that we can tie in a very decentralized way so many people who are concerned about this issue in a way that we can actually prevent these illegal gun murders. And it's about time that we use technology. And I know when we came together to put the Black Blockchain Summit together, we always talked about how so many of these conferences talk about technology, but don't connect them to true applications in our communities. And I think that, it's very clear, no one's going to come save us. So we need to save ourselves. And just as much as there are politicians and in the electoral seasons, and there's people who are business people, and there's people in the religious community, I think there are people in our tech community, especially blockchain, that we can leverage our brains and our concerns for our community, so that by the time next year comes around, that we would have at least been able to introduce a prototype solution to this particular problem of illegal gun violence, and be able to say that because of convenings of meetings like ours, that we're able to leverage the brains globally to help solve problems of our people locally. And like you said, as it relates to gun violence, illegal gun violence, these are issues that unfortunately plague too many of our communities, and that we, even though the majority of our people have never shot anybody, that the fact that we're still being terrorized in the most modern so-called societies like a Chicago in the United States, that we still can see so many members of our communities being plagued and victimized by illegal gun violence is unacceptable. And as we sit wherever we may be, tonight there are people who are going to be victimized by this same said illegal gun violence. We have a role to play. And I think just as much as so many of the speakers and so many of the people who participated in this conference are doing work in so many fields, is that we as a people have the key. You know, every generation out of relative obscurity must fulfill its destiny or betray it. That's Frantz Fanon. And I do believe that God has created everything we needed. Every person in our generation is here already to actually do what is necessary. We have to be the ones to put the plan into action. And we have the skills, we have the wherewithal and resources amongst each other to actually solve this. And definitely putting the gauntlet or putting the charge that, you know, through this pitch competition, through us leveraging the brains of so many people of our community, that by this time next year, we will actually have a prototype that will be being used to help make sure that we no longer have to worry about our friends and family and the members of our diaspora being terrorized by illegal gun violence. This can be stopped, and it will be stopped with people like us who have the skills and the expertise, and now the resolve and the conviction to do something about it. So thanks, Brother Wanina. Just the fact that, again, we can all come together and focus and zero in on one particular problem, and then we'll come up with another thing that we solve. So every time we convene, our people will not only know it because of our broadcasts or the tickets they bought, we actually convene because of the results that take place after we leave a meeting today. So it's definitely more important than the reflection of this, the power of our meeting and convening is not in just the time we spend together, but the actions that take place once we leave. And I think we've already shown that level of credibility in our Genesis, I'm not trying to say Genesis block, but our first meeting, where we've seen now so many relationships created that would not have manifested but for our convening of this Black Blockchain Summit. So again, I think it's very important that we seize these moments and realize the power that we have. We are the victory. We are the ones we've been waiting on. There's no one else that needs to come save us, because we definitely have the ability to save ourselves and this entire world. I mean, I think we talk about the Black Blockchain Summit, but what we do here is already setting the tone that when you have a convening of a meeting like this, we didn't charge anything. And what we were able to provide to so many people is priceless. And the fact that we were able to actually provide such a priceless and definitely amazing contribution to our industry, to our community, through us coming together and made sure that which we did, which was priceless and amazing, was free. Again, you know, with the help and support of those who actually participated, our sponsors, and from the hard work you've done, Ayana, Deidre, Alakanani, it's been a global effort. But again, when we look at other conferences and other folks who are convening, you know, are they going to convene in a way that makes what we're doing approachable to anyone and everyone who's interested? That's the challenge that we put out to every conference. And we're looking at you. Like every conference that comes out here during this pandemic, if you charging hundreds of dollars for folks to participate, shame on you. The Black Blockchain Summit said it. We could do something better than that, because this is what our community needs. And that community, it transcends beyond the global Black community, but that's every community needs to have access. And we've done that with all this hard work. And we want to make sure that we hold that high standard to everyone in this community, that they do the same, and if not, even try to do better. I don't know if they can outdo us, but they definitely should try.
All right. So that was great. So for details of the virtual hackathon, just look out for announcements on our official social media channels. And we're going to leverage blockchain and other technologies like data science to really figure out a solution and build an open source tool that the Black blockchain community can use and scale up within the next year. So I think without further ado, we can wrap this up. And Sinclair, this has been fun, and I would like to wish everyone a blessed week ahead. And from us at the Black Blockchain
Hey,
Summit.
you got to, the send off got to be in Swahili. You got to
Yes.
do the send off.
Yes.
I want our ancestors to hear all of this. We ain't gonna leave on English, bro. We're gonna leave
All right.
on us.
Yes, yes. So I was going to Swahili mode. So kwaherini sana. Tumefurahi sana kuwa na hii mkutano wa Black Blockchain Summit na asante na amandla.
Amandla. All right.
The time without the snow in December, the years grew. Youngers locking themselves inside and it's due to severe flu. I check in with my ex and she putting together clues. While taking 2 steps feels like walking the avenue. I was chatting with my mother and the same thing is going down. She struggling to breathe, man, this thing is taking our town. We charging up a chair where plans are rolling there. Prayers of God's grace in the place where urgent care. The waiting room's packed and short staff trying to keep track. Everybody's coughing in the air, I'm trying to keep back. 5 hours waiting in the x-ray later. Me and my mama stayed up, she breathing through ventilators. But she pulled through, then my sister came through. That mom would die, my sister got sick too. January 25th, everybody's hella sick. And they say that patient zeros in the underwatches. Nah, nobody next to me. I get my true facts from the CDC. Scientists all coming like ESP. I'm trying to see the other side of COVID-19. Come on, quarantine and work a JOB. Then why we getting charged fees like it's the same old thing? Now I wish I saw it coming like ESP. I'm trying to see the other side of COVID-19. Now everybody's in the house trying to figure out how the world came but the rent the same amount. Companies say they can make the first small amount, and if we make it, we got bills piled up to figure out. Forced to go to work and risk your life for a little money. Why the richest are hiking prices for the 2020? They see glimpses of where the black man lives and tweet out Black Lives Matter, but do nothing about employment. We putting on masks, give me 6 feet fast. Got a stimulus check that pay for rent in the half. In the nation's capital where that much won't last. In a country where the only love language is cash. And by the time that the economy stuck, all of a sudden, without a vaccine, it's time to open things up. So instead of valuing lives of workers and making changes, folks will die because people in power. Quarantine, nobody next to me. I get my true facts from the CDC. Scientists all coming like ESP. The other side of COVID-19. Come on, quarantine and work a JOB. Then why we getting charged fees like it's the same old thing? Now when I saw it coming like ESP. Other side of COVID-19. We the people control our destiny, but can't receive unless we drop the selfish things. Greed has all control of our soul, self-preserving and cold. People talking about sacrificing the old, and we want to claim societal progress. The unjust populace dying from excess instead of less. Countries dying from famine, us mismanagement. And more abandonment. What happened to your heart? Are you protecting yourself by doing only for self? Thinking your heart will hurt less. Aren't you tired of the stress? Inside how lonely it all gets. The lack of love outside of an accomplishment. COVID-19, but you can see the fine ink on the wall and it's underlined the entire thing. Humans need a new mentality without fences and longer tables to help everyone in dire need.